And we believe that sooner or later, RBI should resume OMO or forex swap transactions to normalize the liquidity into the system. But across businesses, across distribution, the common language is the liquidity is tight and working capital cycle has got elongated across the board. The second one is that probably the government capex has slowed down materially. Though we expected that in November, December post-monsoon, it should pick up, but we have seen only in some in some sectors, government capex picking up. But broadly speaking, I think government capex is down. And our sense is this year, compared to the budgeted number, we'll be down by about 10 to 12%. And hence, we should undershoot on fiscal. From 4.9, we should end up at 4.7. That's our expectation. Once government comes back, I think government capex comes back, I think we should see normalcy coming back. The third thing is a lot of froth is out of the system. The index masks the damage. Though the index is down about 12 to 14%, depending on which indices you're talking about. But when we look at the entire universe of 4,600 stocks, about 75% of the universe is down by more than 25% plus. So clearly there has been a lot of froth which has been taken out of the system and growth has slowed down and so has been earnings. Our belief is that after the third quarter results, the FY26 estimates, which in our view is still on the higher side, should get reduced to between 10 to 12% or 11 to 13%, somewhere in that ballpark. And once that reduction happens, we believe that constructiveness should be there on the market side. However, I would like to caution that money making, the way we have seen in the last 3-4 years, the easy money is behind us. We should now work on bottom-up ideas and make sure that stock-specific movements will happen. Also, various sectors, 3-4 sectors which are there, which probably is a contra call. One, I think cement, clearly. It's back to 2003-4 in terms of contribution to profitability. The second is metals. Nobody is talking about it. But if both the economies, the largest ones, China and US, goes on fiscal expansion, I think liquidity will be abundant in the global system, and that should bode well for commodities. And third is specialty chemicals. After 7 quarters of decline in specialty chemical on an aggregate basis, this will be the first quarter where we see marginal profit increase on an aggregate basis. That's our assumption. And probably for the next 4 quarters, specialty chemical is one segment which should show strong earnings growth, partly because of a lower base and partly because of destocking in agri coming to an end. So that's where we are. But I think the easy money is behind us. Markets should consolidate for next 12 to 18 months, and bottom-up ideas will make you money.
Well, just want to say that the consolidation is well and truly on even today, and this is a morning that we need to take note of. India is a rank underperformer across Asia. Asian markets are cheering. They're up anywhere between 0.5% to 2.5%. But look at us, the Nifty is struggling to hold on to this little shade of green. And the Bank Nifty gain that you're seeing, about 0.5%, that's largely driven by Kotak Mahindra Bank and State Bank of India. SBI is keeping its head above water because otherwise there's a lot of profit taking underway in BFSI. I just want to highlight that because that's the key trend of this Monday morning, profit taking in BFSI. Shriram Finance is still down about 5%. SBI Life is now down 2.5%. IndusInd Bank, HDFC Life, look at HDFC Bank, look at ICICI Bank. Basically across the board profit taking on BFSI, barring 1 or 2 names. Pankaj, hi, morning. So I want to actually, dive a little deeper in this pocket because I think this is the next piece of the puzzle which the market is trying to wrap its head around. Now, you've got Kotak Mahindra Bank on one side. Wherever, governance and management qualities of high order, look at what they've done. They've expanded margins. Their slippages have fallen. And the market's saluting that. On the other hand, you have an RBL bank and you have other lenders where the asset quality pain is beginning to show up. How will you navigate BFSI? And on insurance as well, the market doesn't seem to be very convinced. We had a couple of good days of rally after the HDFC Life numbers. But look at this, it's already profit taking this morning. So clearly, there is nervousness in pockets like insurance. How will you pick and choose in BFSI?
Good morning, Sophie. So if you look at BFSI, 2 things are very important to note. One, I think last cycle in BFSI was all about corporate loans. We believe this cycle will be all about retail. and we were doing some number crunching. In FY20, the total EMI burden of India on the consumer side, which includes housing loans, consumer loans, credit card loans, vehicle loans, microfinance loans, was to the tune of 19.5 lakh crores. That's the total EMI burden. In the 4-year period, that has moved to about 40 lakh crores, almost doubled. So households have leveraged, and as a percentage of GDP, our belief is the leverage is now at 43%, which used to be 32-33% few years back. And the incomes have not gone to the same extent. And I think that's creating pressure on the retail asset quality side. And whichever companies have grown in this space at a very fast pace, especially on the unsecured side, will have to face the brunt. So we need to be extremely careful on the BFSI side that what is the loan book? Is it more unsecured? Then we need to be a little careful on that. And I think that's something which is a reality. That EMI burden has increased almost 2x in the last 5 years, compared not to the income levels moving to the same pace. And the second is that most of the assumptions, if you look on the BFSI space for banking and BFC, the loan growth is anywhere between 14 to 15%, assumptions by the street. The credit growth has come down to 11%. That means that some more earnings downgrade will happen in this sector before the sector sees the bottoming out. On valuations, it looks to be decent, but on earnings assumptions, I think it's still on the higher side. If the credit growth remains at 11-12%, post the third and the fourth quarter numbers, we may have on an aggregate basis reduce the earnings estimate for next year for BFSI, banking and NBFC especially. On the other hand, if you look at the insurance space, especially the life insurance guys, they seem to be very well poised. If we assume that the yield curve will steepen going forward, they are the best proxies in this environment. So from our perspective, we need to be a little choosy on the BFSI space. Few names on NBFC and banks, which are better on the secured loan book. Few names on the life and general, I think should make a good portfolio on the BFSI side, at least for the next 12 to 18 months before we take a relook on our call.
All right, got that. Pankaj, a little shorter chat today because of all the earnings and lots of the management interviews that are lined up. So we'll keep it brief. But thank you very much. This is helpful. And we look forward to a longer, more deeper chat next time we catch up. Thank you very much. Have a great day. Well, with that, let's shift back to the big global headline. Donald Trump is all set to be sworn in as the 47th president of the United States tonight. So what could his tenure mean for tariffs? To try and answer this very difficult question, we've got Prashant, who's moved to the wall with some interesting anecdotes and data. Prashant, over to you.
Well, thanks very much for that. What we're going to do is just look at 4 scenarios because tariffs are coming. It's just a matter of whether he's going to go big on day one or whether he's going to do it in a gradual way. So there are 4 scenarios, but this is essentially what he said so far during his campaigning, etc. About tariffs. On China, tariffs could be between 10 and 60%. Canada and Mexico recently said 25% tariffs, and other countries could be between 10 and 20%. So this is essentially the tariff threat which he's made during campaigning and, of course, after he won the election as well. Now, what are the 4 scenarios that we are looking at, right? The first is a repeat of 2017. 2016, he won the election. 2017, 20th January, he took over. What happened back then? Markets were disappointed relative to what the threat was. So US negotiated but did not act very aggressively as far as tariffs are concerned. If you look at effective tariff rates in the US, import tariff, they rose by some 18% during the course of Trump 1.0 during his first term. So it was a gradual move, and the effective tariff increase was about 18% or so. What happened to currencies? Because essentially that's one significant channel through which it affects us. 18 to 19, the renminbi depreciated by 14% versus the dollar, and the DXY was up 11% or so. But initially, when he took over, the dollar actually sold off in response. I mean, that's what we've been talking about, whether it's possible that, you see the buying the rumor, sell the news kind of activity, at least in the very near term. And then, of course, gradually things move ahead. The second scenario is gradual implementation of tariffs. This is Perhaps, according to many, this has got a higher probability in that sense. So it gives US more leverage in negotiations than sort of putting the full size of tariffs on day one. It gives US optionality to increase or decrease the rate of tariffs. I mean, you put something out and then say, well, I'm willing to negotiate with you. It gives you more leverage. That's the logic. Now, what will markets do in a scenario like this? We have some idea. There is, because there was a news story recently on the 13th of January that Trump team was studying monthly tariff increases of between 2 and 5%. The dollar sold off very quickly on this. So if this were what actually happens, which is monthly increases of between, whatever, small increases, but monthly increases, so a gradual tariff increase, it would disappoint the market. And at least in the near term, the reaction function would be, as we saw recently after the news story, the dollar sells off. Number 3 is targeted industry tariffs. And this is perhaps the more complicated of the lot. So you're not looking at countrywide tariffs, but you're looking at specific industries, products, etc. So it could be tariffs on Canadian auto, sort of companies, lumber, etc. Chinese tariff on Chinese machinery, electronics, etc. And it would be complicated to kind of analyze and scrutinize the impact from these specific tariffs in that sense. Again, we've got a sense of what this would mean for markets. We had a Washington Post story which kind of exactly mentioned this. It said that, tariffs would mainly target critical imports and they would not be widespread. They would not be overall tariffs on everything. What happened? The dollar sold off very quickly and aggressively as well. So again, this is a scenario. If it plays out, it's unlikely. But if this plays out, you see dollar downside. Number 4 is the last of the 4 scenarios. And this is perhaps the most disruptive. Everything on day one. Go big on day one, as many have been pointing out. So this would see significant adverse market impact across asset classes. And when we say day one, we mean today, right? It takes over today. And perhaps if this were to pan out, we'll see stuff happening in the next 48 hours or so. It would reduce the negotiating ability of the US because, you're saying, well, I'm going to do this and it's going to be retaliation, etc. The dollar in this scenario could skyrocket even from here because, again, markets are not assigning too much probability, although he said he'll do it, but markets are not believing that he will, at least not all of the tariffs on day one. And of course, there would be significant inflation concerns, etc. So higher yields and higher dollar on the back of the of scenario 4, which is big tariffs on day one. So, just a snapshot view. We'll have to wait over the next 48 hours, not too long, right? The next 2 or 3 days, and we'll know which way the scale of the tariffs and the pace of the tariffs is it going to take. Back to you.
All right. Thanks a lot, Prashant, for that. We'll have to see what Mr. Trump has in mind and how he goes about the execution plan as well. Let's turn our attention to the auto space as electric vehicles take center stage at the Bharat Mobility Global Expo 2025. Our colleague Parikshit Luthra caught up with the MD at Tata Motors, Mr. Sailesh Chandra, and he also is the president of SIAM. He began by asking him about the key trends in the EV space and also budget expectations for the entire auto sector here in India. Let's hear out what he had to tell us.
I believe that with the excitement that you have seen around electric mobility, just go back 4 years, 2020 maybe, when you would have come for the Auto Expo, how many electric vehicles were you seeing? And today, literally every manufacturer is coming with one electric vehicle or the other, whether it is two-wheeler segment or a three-wheeler segment or cars or commercial vehicle. You are seeing the theme is full electric. If there is so much of combined interest that you are seeing from all, not only the OEMs, but also all the ecosystem players, you are seeing a lot of ecosystem display also. This is bound to grow multifold, and last 4-5 years, if you see, the highest growth, the CAGR has been upwards of 150%. So this growth is going to continue because of the combined interest of all the ecosystem players as well as the OEM, and continued support of the government in terms of lower GST rate, multiple schemes, whether you talk about the PM E-Drive scheme or whether you talk about the PLI schemes, not only for auto but also for battery cell manufacturing. So I think all the enablements required to grow at that pace is very much there, which is for the first time I'm seeing, because while government was doing its bit, but the response of ecosystem players had to be what it is today.
Right. Would you say that 2025, seeing what's happening at the Auto Expo or the Bharat Mobility Expo, 2025 will be the inflection point for EVs? Some years ago, we were seeing EVs in a 250-kilometer range. Now, at the Bharat Mobility Expo, no car, literally no car maker is offering anything less than 450 kilometers of range. Do you feel that 2025 will be the year for an inflection point in terms of pricing, the right range and high quality products, and this is the message coming from the expo?
Yeah, I think, the whole environment has kind of come to a level where a lot of things are converging together. One, policy support is at its peak, I would say, with all what I talked about. The interest of OEMs are also pretty much there to see. You have the regulations also favoring electric vehicles, promoting electric vehicles and moving away faster from the ICE world. And I think fourth biggest enablement, which has made all this possible, what you said, 500 kilometer plus cars, more investment into tech that goes inside the car, is because of significant reduction in the prices of the cells. Nearly 60% reduction in the last 4 years has happened, which has unleashed the ability of OEMs to give higher range, and along with higher range, give more features, because whatever money or cost you could give inside the car was all directed towards the battery pack. So I think all these trends are converging together, and therefore I clearly see this as an inflection point. There are definitely certain residual barriers which are still left. Charging infra has to grow much faster and has to be at a level which can support the growth that we are trying to envisage. But that is also an effort which is clearly coming in the PME drive, with the support for 2,000 crore of support that is being given to the public charging infra.
When we speak about electric vehicles, we now at the Bharat Expo, we're seeing strong SUVs in the range of anywhere between 18 lakhs to 25 lakh rupees. Do you feel that if this Bharat Mobility Expo was an inflection point, perhaps by the next Expo we're going to see prices come down significantly?
You are talking about the electric vehicles?
Electric vehicles.
I would say that now the prices of electric vehicles have pretty much stabilized. There was a point where electric vehicles were 2 times the price of an equivalent ICE vehicle. Today you are seeing most of the vehicles, now at least are coming closer to the price of an automatic ICE car. So, and battery prices have also fallen down to a level below which it can be some incremental, reduction that you can see, but it has come to a level where it is more stable.
What do you think is the kind of support that we now need? The budget is around the corner. There is one conversation you always have on levies and taxation, but at a broader level, what is the support that the industry needs right now?
I would not limit it to a narrow ask of what the budget should be, but this is all these technologies would mean that you have to create all those skills and capabilities within the country. And when you say skills and capability, it is infra as well as the people skills, right? And this is something which will be a joint effort of government, academia as well as industry, which should collaborate and work rigorously towards building these skills, because these are going to throw new job opportunities, more different kind of employment, and we have to get the workforce ready to do that. And SAM has done a very deep research on this and also given the recommendations to the government. And therefore, with this kind of a big picture in mind, everything should align to that. All policies, budgets and all should align to that for a longer term vision that we have in this space.
But do you think taxation needs a relook?
We have always said through SIAM that we are looking for a reduced duty rates for all categories of vehicle, because possibly these taxations are very high when you compare with any other country. That ask has been there, that ask continues.
All right, so those are some of the thoughts that are coming in from the Auto Expo in Delhi. By the way, the colors changed to red on the screen. It's not looking very, very good, considering that global cues have been supportive. Equities around the world are doing well. The dollar's pulled back. None of that is helping the bull cause here in India. Now we're down 26 points in the Nifty. The mid-cap index has also slipped. It's not like it's just a large cap, selling kind of a morning and there's action in the mid-caps. No, all-round weakness is what we've got. Just a couple of names. Like I've been saying, it's largely BFSI names, which is where the profit taking is. And the latest blow is in the form of, the life insurers. Both HDFC Life and SBI Life, they're losing further ground. Let's see what else. Actually, some of the tech names have moved down. That's what's caused this latest one. Look at TCS, look at Infosys, none of them are contributing to the upside. And that explains the weakness. The Lone Rangers on top, however, Kotak Mahindra Bank, it's really being rewarded for its superlative performance in the third quarter. Almost 10% up now on Kotak Mahindra Banks. That's a big, big winner out there. And even Wipro, 7% higher on Wipro. But let's stick with the auto space. Our main focus is on completing all varieties of products and maturing the technology. This is the word coming in from Shenu Agarwal, Managing Director of Ashok Leyland. He was speaking on the sidelines of the Bharat Mobility Expo 2025, and he also spoke about the company's FY26 targets. Take a look.
The sentiment is improving now, right? Since mid-November, we are seeing that government capex is on the push now, right? So a lot of that is flowing into actual projects. A lot of new projects have been awarded. And we are really hoping that although Q2 and Q3 was a little bit sluggish, but we are hoping that Q4 should be at least flattish, if not some growth. So if that happens, we really think that will set up a very good base for next year. See, the market is still going to be very small, right? Because there are infrastructure, ecosystem level issues that are yet to be sorted out. Whether it is charging or swapping or anything else, that still needs to be sorted out. So we are not looking at market share. It's not a market share game as yet. What we are focusing on is completing the whole variety of products. We are looking at maturing the technology. So when the market is ready, Ashok Leyland should be at the forefront. See, our capex normally is between 500 to 800 crores, and we would, I think, stay within that number. But more and more capex is now shifting towards cleaner fuels and electric vehicles.
Okay, well, that's a fair bit of auto coming your way. By the way, I think, did we mention Kalyan? Kalyan is up 8%. If you can just quickly pull that name up, and then we'll take slip into a quick break. I mean, basically, it's fallen one way, right? 40% price damage in 10 days, ending last Friday. And today it's seeing a decent, strong bounce back at about 540. It's the second largest volume traded name right now on the market. So high interest name. We'll take a break here. We are back with the management of Canfin Homes on the other side. They reported third quarter numbers.
Well, let's talk about Canfin Homes now. Quarter 3 was a weak one, both on the dispersals as well as AUM growth was tepid. However, the outlook could remain fairly positive from here on if what we saw in terms of one-offs in the past quarter are resolved. To understand more, we are joined by Mr. Suresh Iyer, the Managing Director and CEO at Canfin Homes. Hi, Mr. Iyer, good morning and thanks a lot for joining in. Well, quarter 3 was impacted by a couple of factors. So, in both your geographies, I want to ask you, Bengaluru as well as Hyderabad. Has the situation in Bengaluru been resolved and the situation improved in Hyderabad?
Actually in Bangalore, we almost got hit by about 400 crores. We could have done better had the e-Khata issue not been there. Things have started to slightly look up because till in the last about 20 days or something, about 80,000 e-Khatas have been released. But still, it's just a trickle considering the amount of applications that have already come in. So what we require is quick resolution of this program, and then we will definitely be able to look up. But things have started improving a little bit. Telangana is still a little slow. We would expect some more change and some more positivity and in the sentiment in the market in Hyderabad. But if Karnataka also grows, we should have a good quarter in Q4 because that itself is contributing almost 30% of our incremental business and of our AUM as well.
Okay, all right. Mr. Iyer, let's get to a couple of numbers then.
Sure.
Year to date, your dispersals are roughly around 6,100 crores, very, very roughly. Now, earlier, I think you were talking about a number of around 10,000 crores.
Correct.
So what is the realistic number you can end this year with? Can you do around 2,500, 2,700 crores in Q4, which means for the year, you'll be in that vicinity of around 8,500, 9,000 crores. Tell us, what is your revised dispersal targets? Please go ahead, sir.
Looking to the present situation, if we should be able to do a Q4 of last year numbers, which is around 2,400. But if Karnataka improves and we are seeing some improvement, then we could better that also. And yes, we are targeting around 2,700. If Karnataka improves, we should be somewhere in that range. So that's what we are looking at. But otherwise, also even without with the present situation that Karnataka is in, we should be touching or a little tag better than the Q4 of last year.
So then for the year, you'll be in the vicinity of around 8,500 to around 9,000 crores. 8,500 could be the lower end and towards 9,000 could be the upper end. Is that correct?
That is correct. Closer to 9,000 will be in the higher side. That is correct.
All right. And is it too soon to ask you about how FY26 is likely to shape up? What are the targets you have in mind?
See, next year we definitely would continue to have our target of 12,000 crore because, in Q2 we had started seeing good numbers. Our north is doing well. Rajasthan, Gujarat is already doing well. It continues to do well. Tamil Nadu continues to do well. We had some slowdown in Andhra in the first quarter, but in Q2 after the change of government, that has also started improving. So I think barring Karnataka and Telangana, I think all other markets are doing well. So I would continue to have the same target for next year of 12,000 crores. 12,000
crores. And what would that mean in terms of AUM growth?
That would be around 15% AUM growth next year.
And this year, what will you end with?
This year, if around 2,300, we should be around closer to around roughly about 10% growth in AUM.
10% AUM growth. On the margin aspect, I wanted to ask you, NIMs, I think they came on slightly under pressure, but spreads improved.
Correct.
What is the cost of funds as of now in comparison to what it was at? Are you seeing some easing on that front?
See, Q3 we had some benefit in cost of funds for two things. One, we had a couple of reduction in our bank term loans. We were able to move some of our term loans from MCLR linked to repo linked. All our loans now on the bank borrowing side are linked to repo. So that's a positive. Second thing is we also raised about 1,600 crores from our NHB. So that was also came at a lower than bank cost. So both these things have benefited us or helped us in the Q3 results, Q3 cost of borrowing. Q4 normally the rate of interest does go up a little bit. There is a little bit of liquidity pressure, so it could be a little high. But the impact overall on the year would be much less because it will be spread out over the quarter. So we may not have a very large impact in terms of absolute numbers. So we are not very worried about the NIMs. And the spreads, we continue to hold our target of 2.5% plus in terms of interest spread, and 3.5% plus in terms of NIM.
Okay, all right. And final question, what's the outlook on developer loans, sir?
No, we are not doing developer loans, but we do have APF tie-ups. We started that in June. And so far, we've had some good traction. Now, slowly, we are getting better results. By the end of the year, we should be around 60 to 75, APF projects we should have tied up with for loans. But we are not doing developer loans.
All right, Mr. Iyer, we appreciate you joining in. So that number in terms of dispersals has got revised to around 8.5 to around 9,000 crores for this year. Next year, you're still gunning for around 12,000 crores. And in terms of AUM growth, 10% this year and close to around 15% for the next year itself. The stock actually is still holding in the green. It appears the sheet has factored in most of the negatives at this price.
Well, NBFCs are going to be in HFCs, and within the NBFC space, perhaps will be an interesting pocket that we'll have to watch out for if interest rates start to come off. I mean, it's a broad macro kind of a theme, and HFCs are the safer, actually the safest of the non-banking companies, just in terms of lending and how much, level of NPAs, etc. So it's just about how efficiently they run. Canfin Homes in focus there. I think we have the manager of ICICI Lombard now joining us. By the way, the news flash at the bottom of the screen was about telecom, and we'll have Ashmit join us in just a bit. Indus Tower is back up about 4.5% as we speak right now, and of course others like Idea, etc. has been up 10%. It's not really, the circuit's not open. Well, I'll come back to all of that. Lombard in focus to discuss the third quarter performance. Mr. Gopal Balachandran is Chief Financial Officer of the company, and he's with us now to take some questions. Sir, good morning. Great to have you with us here as always. Prashant this side. So your FY24 net earned premium stood at about 17,000 crores. 9 months 25 number in terms of net earned premium is 14,575 crores. Do you think you can add about 5,000 crores in Q4 to cross 20,000 crores for the full year 25?
So good morning, Prashant, to you and all your viewers. So I think if you look at from an ICICI Lombard standpoint, I think this I kind of talked about even in the some of your earlier calls. I think what we're looking for is, I think on the growth front in terms of premiums, is to continue to see if we can have an alpha over the industry growth. I think we have broadly talked about a range of 100 to 200 basis points. I think that is where we stand. I think specific in the context of net earned premium, I think that has a lot of moving parts because different businesses have different risk retention thought processes. So, but I think where we are kind of placed for is to try and continue to see an alpha over the industry growth of 100 to 200 basis points. And that's what you would have seen even on a 9-month basis. The industry grew on premiums at roughly at about 7.8%. Our growth was roughly at about 10.3%. So that's where we are. Different segments, I think each of them presents an opportunity to continue to leverage on that.
Mr. Balachandran, but I know you don't want to put specific numbers, but in the ballpark, this seems doable. 20,000 crores for the full year in the ballpark.
Yeah, so I think see what we have largely spoken to the market is in the context of the industry, because as I said, there will be a lot of moving parts in terms of how things play out. So in that context is where I think I would kind of say that what we would largely monitor as a metric is to look at alpha over industry growth. And more importantly, I think what we also keep looking for is how we can continue to deliver sustained return to stakeholders.
Okay. Mr. Balachandran, so the operational performance is very good. The underwriting losses, they've reduced considerably. I think the drop is about 46%. Operating profits have been surging. Just walk us through what led to this. One, I think in the fire segment, you've taken a premium hike. I'm not sure by how much have average premiums gone up in health, but just run us through the trends and what the expectation is for the coming couple of months as well.
Subi, good morning to you. And let me again just put this in context. I think again, if you look at this year's 9-month numbers has got an element of, I would say, a regulatory change. For example, effective 1st of October, the regulator has introduced a new way of recognizing premiums for long-term policies, as in to say that in the past, if an insurance company would have collected a premium on a long-term policy, the entire premium would have got recognized upfront. And similarly, any cost of acquisition that you would have incurred would also have kind of got recognized upfront. Effective 1st October, both of them changes, as in to say that the premiums will get recognized on a 1/n prescription. That is to say that it will be amortized over the contract period. And similar will be the case in the context of cost. So hence, when you look at now specific to your point on the underwriting result, given the fact that you had the element of an amortization of acquisition cost over the policy cycle, there is obviously an improvement in underwriting that one has seen. And that's what we also put out specifically as a separate slide, also post our earnings call, to reflect what has been this impact of change consequent to the commissions getting deferred, its impact on the operating profit numbers. So that number is roughly on a profit before tax basis, roughly about 60 crores. But more than the absolute numbers would be, I think I would kind of continue to urge all of your viewers and the market at large to keep looking at more the outcome on the combined ratio, because that's largely a reflection of the insurance operations. And there pretty much we are on track in terms of the glide path that we have spoken about.
Which means that your combined ratio should drop to about 101.5%, right? By when?
So Subi, again, I think I'll put that in context. I think because even in my earlier calls, I think I had kind of indicated that from an ICICI Lombard standpoint, we would obviously want to continue to see our combined ratios better than the overall market. But if you look at the half-year numbers for the industry, which is available at a trailing quarter, first half of last year, the combined ratio for the industry was 111. This year's combined ratio is roughly about 113. Now, if this trend line continues, then obviously we can't suddenly see a significant outperformance vis-a-vis the market, while we will continue to have a delta. So hence, I think we are on track, whether it is in terms of growth, whether it is in terms of managing claims, or even in terms of operating outcome. But obviously, I think the trajectory is looking very, very positive. If the industry continues to remain sensible in terms of outcomes, there is no reason why we should not get to that combined of 101.5 or even better than that.
But you've not specified the time, sir. Is it this fiscal, or are you pushing that target to FY26?
So, which is why I think we'll have to wait for the results to kind of play out. That's the reason why I said this has to be looked at in context. And then obviously, as I said, if the market responds favorably, there is no reason why we should not get to that combined of 101.5 earlier.
Okay, so just to go back, I'll take your point. So one is the regulatory change and the manner in which, the premiums are being recognized. That's been one factor. Overall, you're saying combined ratio will keep moving down. Just that word on, in general, how you see premiums rising. Fire, there's been an increase. On health, what do you see ahead? And therefore, I come back to the point that, will operating profits keep improving going forward as well? And to what extent will that be a function of the hike in premiums?
Yeah, so again,
especially on health.
So that's a great question again. But again, markets are where they are, right? They obviously will remain competitive. And therefore, to that extent, is how we will have to see things play out. But having said that, I think your point is absolutely right. On the insurances that you have been extending to corporates, which is the commercial lines, in the last 9 months, we did see that segment exhibiting price pressures. And that's the reason, unlike the preceding 10 years where we would have normally, ICICI Lombard would have gained market share, this year our market share has remained muted in commercial lines as a category. But the good news is exactly what you referred to. I think effective January 1, the pricing discipline seems to be looking up quite positively. But the real impact of the price change on the commercial lines is something that we will see when bulk of the corporate renewals happen on April 1. But overall direction or trajectory is looking positive in the context of commercial lines. On health, to your specific point, two segments, corporate health and retail health. On corporate health, we continue to see pricing pressure, and therefore, to that extent, from an ICICI Lombard standpoint, our philosophy of carefully selecting risks stays intact, and hence, to that extent, we have actually kind of let go some of the portfolios in the context of corporate health. On retail, I think the investments that we have spoken about in distribution and the launch of new products, for example, in Q2, the new health solution Elevate, that's been received very well. Now there again, if you look at the loss ratio range that the retail health book is exhibiting is around the range that we have spoken about at about 70%. And a lot of work for us, for ICICI Lombard, is happening in the context of claims management. But equally, in case if the portfolio warrants any kind of a price change, we have not shied away from taking one.
All right. We'll leave it there, Mr. Balachandran. Thank you very much for joining us. Pleasure. Thank you. Good luck. Well, the government is considering telecom industry's demand for an AGR waiver. CNBC-TV18 has independently confirmed the news report. Ashmit is here with what he's picking up on this important news story. Ashmit, good morning.
So clearly, this is an issue that has been agitating the telecom sector. They've raised this issue on multiple occasions, and we understand that the government is considering some form of waiver mechanism to allow that much-needed relief to the industry. Mind you, the figures in question are quite large. Vodafone Idea cumulatively is looking at something north of 80,000 crore rupees. Bharti Airtel looking at something north of 42,000 crore rupees. So clearly, there's a significant burden on the industry. The government is considering whether there is room for removal of the penalty component entirely and perhaps partially the interest component as well. That will significantly take away from this burden that is confronting the telecom sector. However, a couple of aspects to bear in mind. This is an issue that the telecom sector has been agitating aggressively for several years now before the DOT, number one. Number two, there have been multiple Supreme Court rulings which have confirmed this AGR demand. 2019 is when the AGR case was lost by the telecom companies. Subsequently, in 2021, their review application was dismissed, where the Supreme Court had again set aside their concerns on recomputation and had reconfirmed that AGR demand. And subsequently, more recently, in September of 2024, their curative petition had also been rejected. So there is some legal work to do, if at all there is any progress to be made on this, number one. Number two, as far as the whole issue of relinquishing of public funds is concerned, that is another issue that the government will have to consider while considering this demand by the telecom companies. And third, of course, the entire process given the fact that it will require approvals at multiple levels. There is no finality in terms of when this can be proceeded with. But clearly, there is some willingness within the government to consider how to address this issue that has been plaguing the industry for very many years now. Back to you.
Okay. All right, Ashmit, thanks a lot for that. I guess this is going to be a legal cum political issue that will drag on. I've butted in only because we have an important management joining us. Indian Hotels posted an outstanding set of numbers in their third quarter, 29% growth in revenues and nearly 33% growth in profit. To take us through what's going so right and how the future looks, we have with us Puneet Chhatwal, Managing Director and CEO of the company. Mr. Chhatwal, good morning. Thank you very much indeed for joining us. It's not always good for a journalist to start with such bombastic, positive adjectives, but this numbers call for it. What's going right? Is it something with the company or is it something with the industry and the economy?
Good morning, Lata. It's a bit of everything going right for the sector. I can only repeat what I've been saying. Number one, the demand is stronger than supply. Number two, there is growth. Because of the growth in the GDP, the demand remains strong. And as the disposable income rises, as the need of premiumization rises, the brands that we have, the majority of them operating within their segments in premium positions, they keep driving good results, good top line, good conversion, good flow through. And more important for us is our not like-for-like growth on a capital light model. So we are benefiting through asset management initiatives on own portfolio, which drive positive operating leverage and margin expansion through not like-for-like in new businesses.
I agree. All those are visible in your investor presentation. You guided us for double-digit growth. Now, that's a given. The point is, can you give us a range? I mean, will it be as good as this 29% that you've just posted?
But 29% includes the consolidation of the flight kitchen business, right? 16% is on the hotel segment. So we expect the flight kitchen business to grow north of 15%, whether it's 18 or 20 or 22. That only time will tell, but definitely north of 15. And if the hotel segment continues to grow, whether by 12 or 14 or 15 or 16% on an ever-increasing higher base, it's something to be very pleased about. Especially Q3 is the strongest quarter. We have the highest revenue, not since today, but since several decades in Q3. If that grows at north of 15%, and we have had 16 to be precise, I think that drives a lot of profitability, and we don't expect any change to happen, any significant change, unless there is some global event outside of our control. So I think we are very well positioned in especially balancing our portfolio on capital light and capital heavy model.
Yes, you spoke to us in detail about that when we last met. The new event, of course, is Kumbh, and that has given a new high to spiritual tourism. Do you benefit from this? And is this going to be a big undiscovered vertical in the quarters to come?
I think very important is the ever-growing demand for spiritual tourism. I think whether we have Kumbh or we have Ayodhya or we have holy city of Banaras or Tirupati, you know, the number of visitors in these places is exceeding anybody's expectation. So all in all, anything which is, when you have Mahakumbh, anything which is within 100 square kilometer area is expected to benefit. And we are very pleased with our development on the spiritual tourism sector. And I always say we have only 50 plus locations. Actually, we should go to 100 plus locations and have, you know, temple circuits around entire south of India, for example, with our Ginger brand, because that is really needed in these circuits. So we're working on it with different state governments. And I do believe that spiritual demand on spiritual sector is also crisis resistant. There is no impact of any crisis on this kind of tourism unless the temples were shut the way they were during COVID.
Yeah. No, actually, what you say about South is very true. I mean, I can think of so many temples, say Tanjavur, Brihadishwara temple, Raghavendra temple, Guruvayur. There are, where people will throng, even if it is a problem, but if you give them luxury, then, that'll be lapped up. Actually,
affordable luxury in spiritual destinations.
Fair enough. Fair enough. Actually, let me go beyond affordable luxury. Even now, when we go to your Taj Mahal Palace or any of your really expensive properties, the crowd, the occupancy really hits you. It looks like 100% occupancy over there. Even in the best of the Goa hotels, Taj hotels. Do you think that Taj has become somewhat affordable to the Indian middle class or the upper middle class? You have to now start thinking in terms of a super Taj, a super luxury.
Well, we should always keep thinking. We should not stop thinking. But I've always maintained that Taj is not just a brand. Taj is not just a hotel. Taj is an emotion. And the emotional connect that Taj has with India is phenomenal. And its growing emotional connect outside of India is also very strong. So the exemplary hospitality offered by Taj, again, for generations now, is also growing very strongly across the globe. And that's why maybe Taj was recognized as world's strongest hotel brand for now so many years in the last 4 or 5 years, and India's strongest brand across all sectors. So I think to do something more special on Taj, we have the Taj Palaces. These are not normal hotels. These are living legacies, as we call them. And we have also Taj Safaris, which is Taj Plus also in terms of their ability to charge. They're able to charge 3 times more than a normal Taj property.
Okay,
so
well, then you have already thought about it.
We'll keep thinking about super luxury brand.
I'm sorry I'm rushing you because it's earnings season and there's another management lined up. So I want to ask you, what is your expectation from the budget? Is there some tourism thrust you're expecting or asking?
We have maintained infrastructure status for the sector at the central level, industry status in as many states as possible. The positioning of the sector will drive the contribution to the GDP growth as well as to the creation of jobs directly in the sector. And as the most important multiplicator of jobs, it will create a lot of jobs in other sectors. And I do believe that now in the last few years, tourism does get mentioned strongly in the budget speech, and hopefully we get a bit more than the mention on this budget.
Okay. Well, just leave me with a number, expected signings and openings in Q4 and at least a ballpark target for FY26.
Well, we'll keep opening hotels at the pace that we are, plus add another 5-6, which means 30 plus hotels in the next financial year. We'll finish this year definitely on 24 or 25 hotels open, with 122 hotels in pipeline. We expect to open at least 100 hotels over the next 3 years across all our 5 hotel brands.
Okay. So that will take you well over 300, I guess 350. And you're expecting to do, double all that by 2030. I read your Accelerate report. I mean, that's massive plans. Chatwal, we'll have a relaxed conversation on another day, but many congratulations for an excellent set of numbers. Thank you for joining us.
Thank you for having me. Thank you so much.
All right, we have to take a quick break. We'll have Manisha Gupta joining us to speak about commodities in a minute.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to US inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. Is it? This is the first India pavilion, so to speak, India Bharat, and as I pointed out, this is the first time that we have India putting its states together, technically under two roofs. And what we've seen happen.
Right, we shift from results to commodities. Manisha is here. Manisha, what's the big commodity today?
Well, it's big event really, Lata. And it seems like the year is starting today because there's so much that's happening in the markets today itself. Well, starting with the Trump inauguration, and ahead of that, we are looking at slightly subdued markets. The volumes are on the weaker side, and so is the price reaction as well. And the second thing is that you have the US markets shut today on account of Martin Luther King Jr. holiday. So that tells you that this is an added reason that there's not going to be too much volumes. So that is the reason we are looking at very, very, minor price moves in the market there. But apart from that, we also saw China come out with its data. China has seen or kept 1-year PLR and 5-year prime lending rates unchanged. Remember, the Chinese yuan is trading at a 16-week lows, and we have seen that one continue to decline. It's actually down by 3% since Trump was elected in the month of November. So markets will watch out for on what Trump does in sense of tariffs, immigrations, taxes and deregulations as well. There's a lot of conversation around that, and the markets do believe that much of this could be inflationary as well. But we haven't seen that kind of a confidence come in for gold either today. So today seems to be a difficult day where the markets are dealing with data, events and of course a holiday in the US markets there. But I do want to start with the crude oil prices because we've seen 4 weeks of constant gains into this one. Last week was a percentage point of a gain, but even with that, we are trading at around 5-month highs for the crude oil prices. Well, for this one, the global diesel prices, refining margins also have continued to run up. And the reason for that is because the US has sanctioned 100 tankers and 2 major oil companies in Russia. That really seems to be keeping the prices where they are. In the metals as a sector, we're looking at some profit taking coming in for copper. We did see prices run up quite strongly. So when you look at this year, the New York copper prices are up by 8% and LME copper is up by 5%. Today, we're trading a percentage point on the lower side, but this is ahead of the what Trump could do on the first day of his office itself. I also want to take you through aluminum because there's more gains that we've seen into this one. Last year, aluminum prices gained up by nearly 6.5%. This year, we've seen 4% of gains in the previous week itself, and aluminum is up 9% in this year. There are reports that European Union is set to sanction imports of primary alumina from Russia. There in any case have been lower supplies from key producers, and that is keeping the prices higher. China did produce a record 44 million tons of aluminum in the last year. 45 million is their cap, and an expectation that you could be looking at lower production in this year also seems to be keeping the prices supported. But as I said, the volumes are lower, the price movement not so much, and today is a US holiday as well. So most of the action really would be seen in the markets tomorrow.
Point taken, Manisha. A lot of action can be expected tomorrow depending on what the president-designate says in the swearing in. A raft of announcements cannot be ruled out since they've been preparing for so long. Break on that note, and after that we continue with our earnings analysis. The management of Bank of Maharashtra will join us to discuss their third quarter earnings.
Several years is that states have come out here in Davos. So it's of course been the central government, but also increasingly the number of states being represented here in Davos has gone up quite significantly. It used to be Chandrababu Naidu. He was the original Davos man from a state's point of view. But now we've seen Maharashtra, Telangana, in fact, even UP now here in Davos as well. Of course, the chief minister is not going to be here, but we do have ministers from the UP government who will be here. So this is the first India house, so to speak, and this is going to be home to UP, Telangana and Kerala. So Telangana, Kerala and UP are going to be part of the India House together. And it's also going to be interesting because this is the federal story. This is the beauty of India's federal story. And it's also its strength. So showcasing its diversity and its unity here in Davos will be something to watch out for. With the next India Pavilion, India, which is going to be home to Andhra Pradesh. Remember, Chandrababu Naidu is going to be here. It is home to Tamil Nadu and Maharashtra. So 3 states, so total 6 states here in Davos, 3 in the house that we just saw, which was Telangana, UP and Kerala. And here we have Maharashtra, Tamil Nadu and Promenade and Andhra Pradesh. Devendra Fadnavis, the Chief Minister of Maharashtra, will also be here in Davos, as will Revant Reddy, the Chief Minister of Telangana. So 3 Chief Ministers will be here in Davos. Let me show you what we are saying to the world here. And of course, all of this has been set up by Invest India. So let's take a look at the themes that India is going to be showcasing. We're going to go right inside. The themes that India is showcasing: the Indian semiconductor market is set to triple by 2032. So semiconductors will be part of the story that India is pitching, from silicon to success. And again, we've got Semicon, the mission that the government has announced. We've already started to see investments coming in there. So semiconductors, electric mobility, EVs to account for over 40% of India's automotive market. EVs will be the other big theme that will be discussed here as part of the India story. So this is India, the roadmap to a $32 trillion GDP by 2047. India's economic overview, so some data and numbers and statistics here being highlighted here at the India Pavilion.
Welcome back. Bank of Maharashtra has posted excellent results yet again. Profit is up 36%, even as gross NPAs have actually fallen. For most banks, it's actually inched up. It's fallen to 1.8% from 1.84. The bank has current and savings deposits, you know, what we call low-cost deposits. That forms 50% of their total deposits. And I think that is better than many of the private sector banks, ICICIs and the HDFCs don't manage that much. Cost to income, that is the amount of money the bank spends to get 100 rupees. That's just 38 rupees for Bank of Maharashtra. For almost everyone else, it is above 40. So again, lowest in the industry. To take us through their numbers and give us some guidance on the future quarters, I have with Mr. Nidhu Saxena, Managing Director and CEO of Bank of Maharashtra, joining us in the studio. Mr. Saxena, first of all, thank you very much for joining us in our studio, and many congratulations for the results.
Thank you, and thank you for inviting me.
Okay, so let me get through the first number. You know, your cost of funds has actually risen, both cost of funds and cost of deposits, and yet your margins are very good. How do you manage that?
So, Lata, if you look at, yes, you rightly said, my cost of funds have gone up to 4.75. But my NIM, year-on-year basis, I have improved 3 bips. Yeah. It has gone up to 3.98. And if you see this quarter and the previous quarter, we were 3.98. Previous 2 quarters to that were 3.97. So we've been maintaining, and there are certain contributory factors to this. One among is we have actually, in the last 12 months, we have increased our MCLR by 30 bips. So my yield on advances has gone up from 9.01 to 9.27. So that is one. We have also very consciously not taken the course of raising bulk deposits at high costs. Okay. And we have been exploring...
Worked hard to get current account.
So either the low cost or focusing on alternative sources of finance. So refinance is one among them. We have gone for wherever eligible at a very good rates. Around 5,800 crores were raised in refinance from SIDBI alone.
Okay.
So those things are helping me maintain the NIM.
Okay, but nevertheless, the cost of deposits is an issue. Can you maintain it at 4.75 cost of deposits or 4.25, I think, cost of funds? Because your CD ratio is already gone above 80. So do you think now 3.98 is tough? You may have, give us a margin guidance.
So if you look at this particular financial year, I have absolutely no challenge to maintain this. Although my guidance has been 3.75 to 3.9, I have been maintaining well above my guidance for the last 4 quarters. Also for March, I don't have any issue. Yes, the rate cut, whenever that is happening, is likely to happen maybe coming in the next FY. So when the rate cut happens, I have around 37% of my loan book linked to repo. That will see an immediate reprice. But if you see again, 30 bips that I have raised in my MCLR linked loans, not all of them have got repriced. So this will come with the lag at the reset date. Okay. So that will, to a certain extent, take care of NIM getting this thing. But I will continue to maintain guidance of 3.75 to 3.9 for this year. For the next year, we will see, wait and watch, and then maybe come with a guidance number also.
Okay, fair enough. Let me come to the fact that your retail loans are 60%. What is your experience with unsecured? Is there a chance, SMA, aggregate SMA2 has gone up a bit. Is there any problem with unsecured loans?
So if you see...
Or will you continue with this 1.8 GNPA?
Again here, no challenge. I don't see any immediate concerns or worry points for us. If you see on year-on-year basis, we have improved our SMA also, the stress book also. It has come down from 6.61, now it is 4.87. And talking about personal unsecured loans, it's a very small piece of my total loan book. The number is around 3,300 crores out of 2,30,000 crores. So it is 1.47%. Here also we are doing unsecured personal loans where we have salary tie-ups. So salaries are getting credited and my personal loans are getting service. I have absolutely no issues, concerns on stress building up here or anything. There are hardly any delinquencies as such, below 50 basis points.
Okay, now a question which I don't normally ask any other banker. Can you take us through how much buffer provisions you have? Because even this year, your NPA is hardly anything. I think your NPA provision was 1 crore. But your overall provision is 801 crore or something like that. What's your total buffer? And therefore, even if they are NPAs, say in FY26, you will continue to post this kind of profit?
See, yes, I think PCR, if you look at my PCR, it is a very high, 98.3. And my aging provision requirements have actually gone down. But we are very, I should say, taking care of, these are the good times. We keep in mind nudges coming from the regulator that you need to, protect yourself for any down cycles in the times to come. So we are also looking at new draft guidelines are there for ECL, for the infrastructure segment. So we are already making some provisions over and above what the prescribed REC norms are, even on my standard advances. That is one contributing factor. And we are also creating buffer provisions for all these expected guidelines from the regulator.
So should we say that if ECL were to, get started off in April 25, what will be the impact on your balance sheet? You will not have a profit hit?
I will not have. I'll tell you the numbers are there. We have been tracking this also. If you look at the ECL provisions, my requirement are going to come around 2,500 crores. So if 2,500 crores, RBI is going to give us a dispensation of 5 years. So on a quarter basis, 125 to 150 crores is what we expect to be making additional provisions for ECL. I'm already, for the last 3 quarters, I've been building up that 150. I have absolutely no challenge in carving out that 125.
Okay, no, that's a very confident message for the investors. But speaking of which, your profit is what, 2,800 crores for the first quarter? I mean, for the first half. I mean, I think you're in target for 5,500 for the full year.
Absolutely. If you see, my last year was 4,055 for the year as a whole. I've already done 4,027 in the 9 months. So the last quarter definitely will be much more than 1,400. So we had a target of 5,000 crores. We will cross 5,500 very easily. Very easily.
Can you give us a range then, rather than me give you a number? And moreover, next year, even if I take 25% profit growth, I mean, this year, this quarter, you're doing 36% profit growth.
Yeah.
So even if I take 25%, you should be somewhere near 7,000 crores.
So I will not just say that number, but yes, we are very adequately placed. We had 5,000 number when we began the year, but the way things have gone in the first 3 quarters, I think we will be surprising ourselves, the market also, with posting good results and good profitability also.
That's very good to hear. That's extremely good to hear. That's Bank of Maharashtra. Up only 1% today, but that's because a lot of the good news is already in the price. Unfortunately, out of time, we will invite Mr. Saxena again for a longer chat. We'll wrap up on Bazaar. Chartbusters coming.
Good morning. How are you? Good morning. How are you? Are you enjoying your time in Davos?
Yes, we are going to work.
And what are you looking forward to the most?
Meet everyone and for the betterment of the economic.
For the betterment of the economy.
Of the world.
So what?
You come from India?
Yes, from India. Where are you from?
Punjab, India.
Punjab, India. आप कहाँ से? पंजाब में कहाँ से?
पंजाब से मैं वैसे तो हरियाणा से हूँ, अम्बाला से.
अच्छा, तो आप यहाँ पे कैसे आए?
वैसे घूमते फिरते आ गए.
घूमते फिरते आ गए. बड़ी लंबी घूमते फिरते आ गए आप. तो कब आए आप यहाँ पे?
में रहता हूँ.
आप ज्यूरिख में रहते हैं. अच्छा.
20 years living here.
और तो आप ये डावोस में वर्ल्ड इकोनॉमिक फोरम के लिए पहली बार आ रहे हैं कि?
नहीं, हम तीसरी बार आ रहे हैं.
तीसरी बार ही आ रहे हैं.
हमारे एक रेस्टोरेंट है खान्स तारा के नाम से.
जी.
तारा रेस्टोरेंट इंडियन.
हाँ.
तो उसकी कैटरिंग करते हैं हम.
अच्छा.
Kotak Mahindra Bank surges almost 10% today after reporting a better than expected set in the third quarter. The bank's net interest margin grows to nearly 4.93% versus 4.9% quarter on quarter. Slippages come in lower than analyst estimates. It's a beat on all parameters.
Wipro rallies after the company's Q3 constant currency revenue growth beats estimates, coming in at around 0.1%. The management tells CNBC-TV18 that they see discretionary spends coming back, but slowly.
Vodafone Idea shares locked in a 10% upper circuit after hopes of some relief coming in at the AGR dues matter. Sources tell CNBC-TV18 that the government is considering waiver of penalty interest component after telcos had reached out to government seeking relief with regards to the AGR dues. The stock now crosses past that 10% mark, up around 11.5%.
Sugar stocks like Sri Renuka Sugar and Balrampur Chini, they trade high after the government sources tell CNBC-TV18 that India is likely to allow export of 10 lakh metric tons of sugar after factoring in all estimates of sugar production and currently available sugar stocks. Rallis India shares decline after the company reported a challenging third quarter driven by subdued exports, pricing pressures, and the revenues for the company declined by 13%. Margins as well fell by 200 basis points to around 8%. Hello and welcome to Chartbusters. I'm Nigel and with me is Mangalam, and the start to the week has been in the green. So you have all the top indices, as you can see to the top of the screen, that are currently trading in the green. It seems in the near term we're still in a bit of a range, but I think the big trigger will be Trump taking office overnight. So that's going to be the key factor we'll track. Hey, Mangalam.
Good morning, Nigel. You know, on Friday we had the banks and the IT stocks drag the Nifty. We had Reliance support the Nifty, and today we have the banks doing a lot better, over 1% higher, led by Kotak Mahindra Bank, and some of the financials actually picking pace as we speak as well. Case in point, something like a Bajaj Finance, which too has moved to the high point of trade. SBI is doing extremely well. NTPC from the front line, and the PSU space itself has picked some pace. So we'll keep an eye out on how the markets perform, because after Trump takes over tonight, thereafter we will, start getting a build up to the budget as well, the expectations, etc. We'll keep an eye out on the way the market moves forward too. The mid-cap index, though, slightly undecided, mildly in the green right now, with a few more stocks advancing than the number of stocks which are declining. So the crisscross lines come up for you. As we speak, we have at the bottom of your screen numbers coming in from Paytm. On the bottom line, the company's made a loss of 208 crores. This compares to the loss of about 220 crores. So not much amelioration in the losses, but one would say that there hasn't been much decline as well. Keep an eye out on some more details that come by from Paytm. On the bottom line, the company continues to be loss-making. This quarter, it's been about 208 crores, comparing with about 220 crores. As we get more details, let's also welcome Shivangi Sada of Motilal Oswal Financial Services for a quick technical check on the market. A big up move is what we're seeing on the Nifty Bank, Shivangi. Before we talk about the markets, also congratulations on the personal front.
Nigel, thank you for having me on the show as well. And thank you for the best wishes. Of course, we've seen that the markets have, made a good upswing, and we are seeing some sort of recovery. But then again, it's got stuck in a very narrow range, and there is some sort of rejection at the higher zones, lack of follow-up buying, and a lot of global concerns, which is making the markets a little wary. Now, India VIX is now concerning, and it is comforting the bears at this moment. So any small bounce is not being able to sustain at these levels. So we are expecting some swings in this range-bound manner. Of course, banking stocks are, kind of contributing to the Nifty index. But we are seeing some call writers still very rigid at 23,500. So this will be the next resistance and very difficult level to, surpass as of now. So 23,500 is the upper, level that we're looking at, with a support of 23,000 levels. So going to be a little volatile. We'll have to fasten our seatbelts for that. Now, talking about Bank Nifty, we've seen, some of the heavyweight banking stocks are now contributing. Some of the smaller names have also done very well last week, which are contemplating to this index. We are looking at 50,000 as the next marks for Bank Nifty, but of course there is a short covering move required for this fresh leg of rally to start. But of course the broader market is a little bit of a pressure. So there will be some sort of capped upside over here, but 50,000 is what we're looking at, with a support of 48,500 levels. Now, of course, there will be volatile swings, so one is required to do a hedge strategy in this kind of a market.
Okay, got that. Hi, Shivangi. Congratulations from my end as well. And fill us in with a couple of your picks.
Thank you so much, Nigel. So for the stock ideas, I am looking at NTPC, which is the first pick on my radar. Excellent base formation over here at the level of 300 levels, and buying can be seen with volumes. Stock has negated the lower top, lower bottom on the weekly basis, and we are seeing a good doji formation, on the higher base chart, which indicates that there is very good pullback from the lower levels. Buying interest is emerging, right about the right levels and right time for this stock and this sector as a whole. So a lot of tailwind from there as well. So the stock is headed towards 350 levels with a support of 325 zones. So recommending a buy here. Now the second pick on my radar is HAL, which has seen around about 2.5 to 3% shorts covered on the Friday session. And today we are seeing fresh longs being added over here. So short covering move along with a long build-up follow-up is a very classic, example and a situation where this is a very good risk reward over here. Now, weekly basis, we've seen that there has been a long consolidation and the stock has moved from its lower band, getting ready for a good up move. So I am recommending a buy here. Now, we are, sort of looking at the next targets of 4,300 with a support of 4,050.
All right, we take that point. Thank you so much for joining in and giving us all those details. Just a quick look at Paytm before we move further. The stock has taken a bit of a nosedive, currently down about almost 2.5%. The street perhaps not happy with the fact that there has been the loss which continues on a quarterly basis. And mind you, this is also the first time the company reports its numbers after being, the stock being entered into the F&O space. So we'll watch out for that as well. Came into the F&O only in the December series, and from there on, the first quarterly results that the company has reported, down about 2%. Let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Neha Dave joins in with the stock.
Today's stock idea is State Bank of India. SBI has reported healthy performance in the current fiscal so far. The largest bank's credit growth has been very strong despite muted growth in the deposits. Management has guided loan growth of around 14 to 15% in the current fiscal, which will be higher than the banking system credit growth. While retail lending has slowed down, corporate credit has emerged as the fastest growing segment for the bank. Despite slower growth in the deposits, there is headroom to grow the credit portfolio at a healthy pace, and that is because SBI is relatively better placed in terms of credit to deposit ratio, which stood at around 68% on its domestic book as of September and which was significantly lower than the banking system CD ratio. While SBI's margin is relatively lower as compared to private peers, fall in operating expenses will support profit. Cost to income ratio will moderate as wage expenses have normalized. Moreover, the bank's asset quality remains best in over a decade, and credit cost is at a minimal level. A high provision coverage ratio also provides a lot of comfort. In terms of valuation, the stock is trading at around 1-time core book value estimated for FY26, which is very attractive given that return on asset is above 1% and return on equity is about 20%. While earnings growth may normalize, stock upside will be driven by expansion in the valuation multiple, that is valuation re-rating.
All right, with that, what we'll do is take a short break, come back on the other side. We'll put the spotlight on some big stock movers of the day. There is Kotak, there is Wipro. There are a bunch of them. We'll get to all of them after this break.
आज आप डावोस में क्या है मेन्यू पे क्या है Well, that's lovely.
ये हमारे शेफ हैं जी दोनों।
नमस्ते जी, बहुत आपको शुभकामनाएं। आप कुकिंग करने वाले और काफी लोगों को खाना खिलाने वाले, तो
हम लोग
शुरू हो गए तो
आपको काफी फॉलो करता था मैं। लास्ट ईयर का गीता गोपीनाथ का इंटरव्यू पढ़ा।
थैंक यू जी, थैंक यू सो मच। इट्स वेरी नाइस टू हियर दैट यू वाचिंग CNBC TV18।
कभी इंटरेस्टिंग होता है आपका 2-3 काफी
नहीं, बहुत अच्छा लगा आप लोगों से मिलके, एंड वी विश यू ऑल द वेरी बेस्ट। बिल्कुल जी, इंडिया वालों को अब नमस्ते, सत श्री अकाल।
हमें कुछ सक्सेस हो जाए।
जरूर होगी, आपको बहुत सक्सेस मिले और बहुत शुभकामनाएं।
मैं ऑलरेडी किया कि promenade is captured by the
Indians. Yes. हम पहुंच ही गए। आप बिल्कुल भारत के सामने, और आप लोग को भी डावोस के लिए बहुत शुभकामनाएं, एंड थैंक यू। बिल्कुल खाएंगे जी, बिल्कुल खाएंगे। थैंक यू इंडिया की तरफ से, थैंक यू सो मच।
This is the first look at the new electric Vitara, which has been launched by Maruti Suzuki. It is a completely ground-up electric vehicle. What this means is that it has been developed from scratch and it's not been adapted from its ICE cousin. Now, what we know about this car is it comes in two battery packs, 49 kilowatt-hour battery pack and a 61 kilowatt-hour battery pack. The top variant can actually give you a range of 500 kilometers in a single charge. So that is comparable with the Mahindra SUVs, electric SUVs, which have been launched. That will also give a 500 kilometers plus range. Now, there are 10 color options for a customer to choose from. There are changes on the exterior. It's got a more muscular look than the current e-Vitara lineup. It's got a long wheelbase of about 2,700.
Welcome back. Just before we went into break, the flash at the bottom of your screen, which is regards to Globus Spirits, the price for rice for supply to ethanol distilleries has been reduced from 28 rupees per kg to 22.5 rupees per kg. An important input for ethanol makers, grain-based ethanol makers, and which is an input for alcohol as well. So as a result of which the street believes that the cost of inputs would reduce from them, maybe flow through in terms of margin improvement or perhaps into the customers as well for better volumes. Either way, it's a positive, and as a result of which the stock is holding on with gains of about 14%. Remember, opened with a big gain already and continued to hold in about mid-teens, and now we have some clarification, so maybe some explanation why the stock was doing well since morning itself. But the one that is exceedingly doing well today is Kotak Mahindra Bank, up nearly 10% on better than expected third quarter results. Abhishek joins us to tell us more. Abhishek, it is all guns blazing.
Well, all-round performance being better than analysts' expectation is what has spooked investors' interest in Kotak Mahindra Bank stock price today. So what's worked for them in Q3 FY25 is that the net interest margin has actually improved on a sequential basis, while analysts were pegging net interest margin to decline by 5 to 6 basis points quarter on quarter. The gross NPA ratio has come in at 1.5%, and that's thanks to slippages being lower than the previous quarter, while analysts were anticipating slippages to be higher by 200 to 300 crore on a sequential basis. So gross NPA at 1.5% versus Motilal Oswal estimate of 1.56%. Talking about business momentum, is much better than analysts estimate. Deposit growth is close to 16% YOY, while Motilal Oswal anticipated the deposit growth at 15% YOY. Advances growth, that has come in at 15.1% YOY, while again Motilal Oswal was anticipating a growth of 14% YOY. So with reference to the PNL, they have beaten our poll both on NII as well as, the PAT front. Now, we have brokerages who have written on the stock. Citi has written on Kotak Mahindra Bank. They have a buy recommendation, target price of 2,070 per share. They have a 90 days positive catalyst watch, which is remaining open for Kotak Mahindra Bank. Now, ICICI Securities has upgraded it to buy from hold. They have also raised the target price to 2,050 from 1,850 that it was earlier. Anand Rathi has also written on Kotak Mahindra Bank. They have upgraded the stock to buy from hold, and target price has been increased to 2,010 from 1,950 that they had on the stock earlier. Back to you.
Yeah, all right. Thanks a lot for that, Abhishek. Well, just keep an eye out on the Paytm stock. The stock initially took a knock-off closure on 2%. But it seems the street is buying into that dip. Remember, things will be a little bit more volatile, as Mangalam said, because it's now part of the F&O list as well. In the last few trading sessions, I was noticing that the open interest out there had swelled up as the stock recovered from around 800 to around 900 rupees. So we'll try to get further details with regard to this, set of numbers. But at first, it appeared there was another income that bumped up the profitability on the bottom line. But now the street is looking at it in more minute details. And in fact, they don't feel that these numbers are so bad, I think so, because you have the gross mercantile value that's up closer around 13%, and there is growth on a couple of other aspects as well. So we'll get a better analysis in just a bit. For the time being, let's focus on Wipro. Rima joins in to tell us what brokerages are making of those set of numbers. Rima?
Thanks so much for that. So Wipro's seen a very big up move, and now it's the best performing large cap IT stock in the last 1 year with a return of close to about 26%. A quick recap of the numbers. Q3 was a beat on revenues and on margins. The company's top-line growth came in at 0.1%, ahead of the company's own guidance and consensus expectations. EBIT margins at 17.5% improved despite the wage hike impact, and this is the highest that we've seen in the last 3 years. And now the margins are at the company's aspirational band of 17 to 17.5%. And the third positive was the company has upped the capital allocation policy. So earlier they had committed to pay 40 to 50% or 45 to 50% of the net income over a 3-year period. Now that number stands revised higher to 70%. But some analysts believe that the Q4 guidance, that's for the March quarter, is unexciting at -1 to +1%. But here UBS comes in to say that for the past 2 quarters, Wipro has delivered at the upper end of the guidance and the commentary has gotten more positive. Against this backdrop, the current Q4 revenue guidance looks rather conservative. They expect the company to deliver close to the upper end of the guided band. They've upgraded the stock to a buy from a neutral. Target price is a little higher, 335. The current valuation does not entirely price in the recovery in the consulting segment, and this could drive a re-rating. Macquarie says that Wipro is an easier firm to turn around compared to Tech Mahindra. Citi has a sell call on Wipro, but they've removed the negative watch list, the catalyst watch list on the stock. Nomura maintains a buy call.
All right, we take that point. Thanks a lot for that, Rima. That's about Wipro. Paytm now extending some of the gains where the company says that the payment processing business will continue to remain in the guided range. Payment services revenue is actually up about almost 8% quarter on quarter, and financial services saw a big move by about 34% as well. So as and when we're getting some more and more details, the street seems to be liking that, and as a result of which we're seeing an up move build up on the stock as well. But in the backdrop of the Bharat Mobility Expo, our colleague Parikshit caught up with the MD of Ashok Leyland, Shenu Agarwal, who introduced the company's latest launch, an electric port terminal tractor that is still in the pipeline. What we do is we take a short break, come back, and we focus on a lot more in the market.
On the inside, well, there is a lot of excitement of what this will offer. It's got a fully digital cockpit. You've got ADAS level 2. You've got over 60 telematic features. You've got a rotary knob to choose normal, eco or sports mode for that matter. You've got a twin deck floating console in the car. You've got ventilated seats. You've got a 360-degree camera. The passengers in the second row get leatherette bucket seats is what we are told. Now the charging time for this car with a fast charger would be about 40 to 50 minutes. With a slow charger that you would find at your home or in other places such as in your office would take about 5 to 6 hours for that matter. When does this car really hit the market? Well, it'll be exported first. The production begins in March or April. Perhaps by June, you will get it in India. And in terms of pricing, well, that's something that people are really excited about, but disappointing that Maruti did not come out with the pricing. But we're told that considering that the EV SUV price point in India is now around 15 to 20 to 25 lakhs, the company, Maruti Suzuki, will price the e-Vitara also very aggressively. With Veer journalist Akhilesh Singh from the Auto Expo, this is Parikshit Luthra. We're at the Hero MotoCorp Pavilion. The company has launched 4 new products, 2 new scooters, 2 new motorcycles in the range of 86,000 rupees to 1,80,000 rupees. But one of the products that is really catching a lot of eyeballs is the Surge, the Hero MotoCorp Surge vehicle. It looks like a 3-wheeler, but is it? Satinder, why don't you show us what this vehicle can actually do? Have you ever seen a scooter detaching itself? Satinder is detaching itself from us. Yes, now you have a 2-wheeler. So if you want to use it as a passenger vehicle to ferry around commuters from one point to another, you can do that. Also, if you want to leave the 3-wheeler at home in the evening, use this as a scooter for your shopping or family time, you can do that as well. And this is not just in the commuter segment. You also have a cargo variant of this. Here you have the Hero Surge in a cargo variant. Here you can keep boxes, any e-commerce delivery items, fruits, vegetables, and you can use this for last mile mobility and delivery. even this one gets a scooter which you can detach and use independently. So a very interesting concept, a literally two-in-one vehicle, so to say. It's called a class-changing vehicle, developed by Hero MotoCorp over the last few years. The company may launch this formally in the middle of 2025. While it is an interesting concept, it remains to be seen how the customer and how the e-commerce market actually accepts it. With Bureau Journalist.
Welcome back. Let's turn our attention to the auto space. And in the backdrop of the Bharat Mobility Expo, Parikshit caught up with the MD of Ashok Leyland, Mr. Shenu Agarwal, who introduced the company's latest launch, an electric port terminal tractor that is still in the pipeline. Let's listen in what he had to say.
We are launching this Saathi diesel. We have been saying that for last 2 years we have been saying that we will come into the entry-level LCV segment, and this is our first offering. Now, when we looked at this market very closely, we realized that the products that are available are actually, they have a lot of compromises. And I think these products were conceived about 20 years ago, and India and the Indian customers were very different then. You know, now the customers are very aspirational and they really don't like to make compromises. So we picked that idea and we said, okay, can we design a completely no compromise product, you know, but at a good price, because price is important for entry level. So we came up with that idea and now we have created Saathi.
Can you show us around?
Yeah.
What this vehicle has to offer, sir? Please come.
See, when it comes to when it comes to power and torque, we are giving.
You can even come to the driver's seat here.
Yes. We have given double the power and torque on this. When it comes to loading area, we have given 25% more loading area. When it comes to, again, cabin space, we have given 20% more cabin space. So basically the idea was, whether it is power, torque, comfort, loading area, payload, you know, all the characteristics of product, can we give a very different offering, a very upgraded offering.
What's the price competition? How is it priced compared to others?
A price we have been able to keep very competitive. Of course, this is the initial price, but the price would be 6.5 lakhs for this variant.
Okay, and how many volumes are you expecting? What kind of market share in this segment?
See, we launched Dost and Bada Dost about 10-11 years ago, right? And we have already achieved 20% market share in that 2 to 3.5 ton segment, and we are number 2 player now. So that gives us confidence that if we get into other segments of LCV, we can replicate that success. So this is a large enough market. The market is about 200,000 units per year. So even if we get 20% over next few years, that would be considerable volume for us.
Okay, 20% in the LCV market. Is that what you're talking about? Okay. Now, show us this vehicle. This is looks like a battery vehicle, battery energy vehicle.
It is. This one is an EV actually, and this is a very.
Why did you get onto it, sir? All right, Shenu Agarwal showing us a very interesting vehicle here at the Ashok Leyland stall. So, yes, sir, tell us about it.
So this is a very unique product. As you can see, the cabin is very different. You will not see this kind of a product in India. Right, so when we were looking at EV adoption in the country, we found that in the port terminal segment, you know, this is going to be really very popular. Okay. And the reason is that in port terminal, the tractors or the trucks, they operate in a very confined area.
Right.
Yeah. They operate in a very confined area, and therefore this whole issue of charging infrastructure is not very valid there. Okay. Yeah. So if we create a real port terminal tractor, which is electric, for this application, we think that it will create a lot of adoption of EV. So that is the whole concept behind this. But
so it's a port terminal tractor, and this is an electric vehicle.
It is an electric vehicle. It's a port terminal electric vehicle. It's first of its kind in India, and we think that, you know, when we look deeper into this market, we realize that it's not only not just creating an electric tractor, but we have to create a tractor which is very well suited for the market.
Okay, is it?
If you look at this cabin.
Yeah, let's have a look.
Yeah.
Akhilesh, if you can show us this.
Yes, if you look at this cabin, you can see that from the seat. You can get a very 360-degree view of the whole thing, right? Because if you are moving in very congested areas, you need to look all around, right? And therefore, this size of a cabin with windows all around, you know, then you can really move it very well.
Okay, so this is yet to. And what's the battery capacity? What's the battery?
So battery can be changed, you know, according to the needs, but it can go like between 80 and 300 kilometers, whatever is required for specific ports.
And cost?
So very customizable for any anything. We have not launched it, so we don't have a cost right now, but we would be launching it in the next 6 to 9 months. Okay. And then, but yeah, we will price it very competitively. The problem is not the price. The thing is that we want to actually have TCO parity with diesel with this truck, right? So if we achieve that TCO parity, then it can be a huge success.
All right, meanwhile, just keep an eye out on a couple of stocks which are reversing gains or losses. So at the top of the list is Shriram Finance. Opened a lot lower in today's trading session. Now is up around 5% from the lows. Still sitting with a cut of about 2%, but from the lows of the morning, it's up 5%. The other one we're looking at is IndusInd Bank as well, which too has recovered all its losses from the morning. Remember, over the weekend, we got the news of the CFO resignation. From there, the stocks moved marginally into the green. Now just around the flat line. And then we have a couple of stocks which were gaining and are now selling off a little bit from the top. Case in point, something like a Vodafone Idea. When we started the show, was up around 11.5%. Now has given up just about 4 or 5% from the highs. We'll keep an eye out on this one, up sitting with a gain of 8.5%. The other one is Kalyan Jewellers. Saw a bit of a bounce after a 40% rout last week. And from the highs, that stock too has seen a cut of almost 2%. So we'll keep an eye out on a bunch of these stocks which are on our radar. With that, we're out of time on this edition of Trading Hour from on Chartbusters from Nigel and me. Stay tuned because the team of Trading Hour comes up after this short break.
In New Delhi, from the Bharat Expo, this is Parikshit Luthra.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely, yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, when you stand and people, when they look up to you, they also need to understand that, yes, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right. Yeah. When you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you've been very successful, what else you need in life? But I think to get till there itself was a tough task. But I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but maintaining that level is a different thing altogether, and it takes even more time and hard work, and it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. I mean, wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but
Good morning. Welcome to Trading Hour. It's a Monday morning. Things are looking up. The markets have managed to recover from the day's low and now comfortably above 23,250. It's a gain of about 72 points on the Nifty. The Sensex higher by close to about 300 points. Broader markets to some extent lagging. The small cap index is pretty much flat, though we've got a positive advance decline ratio. Well, it's all thanks to the banks, right? And Kotak Mahindra Bank in particular. The Nifty Bank has raced to a 1% gain.
Absolutely right. Good morning, Rima. There was a brief intraday dip, which actually saw quite a few of the large caps, quite a bit of a steep fall. But fortunately, there's been a bit of a rebound from there. So like you mentioned, all of the indices now trading with gains, and especially the Nifty Bank, like Rima mentioned, up over 1%, largely led by Kotak Mahindra Bank. Some of the large cap banks like HDFC Bank doing quite well, but Axis Bank continues to remain under a bit of pressure. Now, one particular stock in focus where results came out just some time ago, and that is Paytm. It's been very volatile just immediately after the results were declared. There's a bottom line loss, but we'll get to Abhishek a little later on to discuss the internals of the Paytm results. Lastly, keep an eye out for Ather Industries as well. Remember, during market hours on Friday, the company came out with its results, post which the company uploaded the presentation, and Kotak Institutional Equities has upgraded that particular stock. So Ather today is doing quite well, up 5%. Canfin, another stock that's doing quite well, post a strong Q3.
And lots of interesting mid-caps are coming out with numbers. Paytm is one, and the numbers are out and they look better. But you also have Dixon Technologies, Zomato. So these are two widely tracked. They've been big outperformers, and the street will closely watch for numbers coming out of them. And the new listing of the day, Lakshmi Dental, has had a very strong start. It's holding up with a gain of close to about 27%. But the big event that we're watching is Trump's inauguration. The stage is set. The world is watching. He will be sworn in as the 47th President of the United States tonight, ushering in his second term in office. What will his tenure mean for tariffs? To decode this, Prashant is standing by at the wall.
Well, it all starts today, but if markets are to be believed, the market started trading President Trump from the time that he actually got elected. But he will take oath today. There is a speech to our time at about 10:30 p.m. And of course, he'll only be able to issue those executive orders and dictate policy once he actually is in the White House. So let's just quickly put out 4 scenarios in terms of how the scale of the tariffs and the scope of tariffs, and of course the pace at which it will be implemented, can proceed. First up, this is what he has threatened, promised, whatever you want to call it, during campaigning and after that as well. So 10 to 60% tariffs on Chinese imports. He's recently set, not so recently, but 25% tariffs on imports from Canada and Mexico. And of course, he said between 10 and 20% tariffs on other countries. So this is, what is on the table. We don't know at what rate these tariffs will be imposed. We'll have to wait and watch. But we can kind of look at what pace will some of this stuff be implemented and how this can be implemented. So number one is a repeat of 2017. Now, in 2017, markets were disappointed at the pace at which these tariffs actually came through. Again, going into that election victory and when he took over in January 2017, expectations were high because during campaigning he had promised a lot of things. But look at this, the effective tariff rate only gradually went up by 18% during Trump 1.0. And over this period, which is between mainly, this happened over the course of 2018 to 19, the Chinese currency fell about 14% against the dollar. The dollar index was actually up around 11% or so in this period. So this is the first scenario. Repeat of 2017, negotiates very hard, but does not actually act aggressively, right? Of course, the situation compared to Trump 1 and Trump 2 is very different because, he's got a much more powerful mandate. He's got the experience of the first term. And of course, his base now wants it. The core base wants a lot of what he's promised. Number 2 is gradual implementation of tariffs. So the US gets more leverage in negotiations versus putting up everything, the full size of the tariffs on day one. And there is optionality as well, back and forth, about whether, you give us this and we'll be able to consider this, etc., etc. More leverage if you actually take this route. we have some indication of how markets will take if this is the sort of route which is implemented, which is gradual increases. So, you know, there basically was a story on the 13th of January which suggested that, you know, the Trump team was considering implementing tariff hikes of between 2 and 5% every month in a gradual way. Guess what happened? The dollar actually very quickly sold off, and for a while it was a hard sell-off. But of course, I mean, you had President Trump himself coming and rubbishing that story. But you know the reaction function, if this is a gradual implementation, most likely the dollar actually sells off, and maybe sells off hard. Number 3 is targeted tariffs. So not across the board tariffs on this country or that country, but I mean on things like Canadian auto, lumber, Chinese machinery, electronics, etc. So, you know, industry-specific, product-specific tariffs. And it'll be kind of course, hard to isolate the impact. And, you know, generally it'll be complicated if this is the route which is followed. By the way, this is not the expectation per se. Here also, I mean, there is a tell. We know how markets have reacted on a story. Maybe the story was a trial balloon or whatever, but there was a story in the Washington Post on the 6th of January claiming exactly this, that, you know, tariffs would mainly target critical imports. Guess what happened? The dollar sold off very quickly for a brief while. So again, this is not likely, but if this were to be the route, I mean, you know, you're looking at dollar downside. Number 4 is perhaps the most consequential of the lot, that he does everything on, he goes big on day one, right? Big tariffs, everything he's promised immediately in the first 24, 48 hours or so. This would see significant adverse market impact across asset classes. And of course, I mean, when you put tariffs out there without any negotiation, you know, there is nothing to negotiate, and you'll see retaliatory action from countries like China, etc. In this scenario, the dollar could skyrocket on tariffs, and of course, the fact that inflation also becomes a big concern. This, of course, is the most disruptive of the lot. I mean, you know, one can look at all 4 scenarios and put outcomes to it. To my mind, the first one and the last one, which is a repeat of 2017, and everything on day one looks less likely. It perhaps would be a mix of number 2 and number 3 in some shape or form. We don't have to wait very long to find out what actually happens. I think in the next 48 to 72 hours, things should be pretty clear. Back to you.
Thank you very much for that. In fact, staying with the topic, Shireen, who's in Davos right now, spoke to Borge Brent, the president and CEO at the World Economic Forum. He believes the incoming US President Trump will focus more on the 2 I's, inflation and immigration, both of which he used as a poll plank. Listen in.
My first question, you've pulled off quite the coup. Donald Trump will address the World Economic Forum, not in person, but virtually, literally 2 days after he takes office. How did you pull this off?
So, you know that President-elect Trump has been to Davos twice in
2018
person.
and 2020.
Yeah, he's the only sitting U.S. president that has been to Davos twice. He really likes it here. You know, he's a businessman. He likes to also meet the global business people to hear their input and have a discussion. And for me, it's great that he, 2 days after the inauguration, is live on video link with us here in Davos with 3,000 participants. And he's not only giving a speech, but he is also then having an interaction with some key CEOs. That's what he likes.
Well, so the interaction is going to be much anticipated along with what he has to say. But what's the expectation? What are you picking up in terms of what people would like to hear from President Trump? What would be the key questions that they would like him to address, you know, beyond tariffs and so on and so forth?
So for him in the U.S., I think he won the elections on the 2 I's, fighting inflation and on immigration. So I think we will see very soon some steps on the immigration side. But on the inflation, it's more of a mixed thing. So he will need to also then share what is his economic policy to keep the growth going, but also making sure that inflation is not coming back.
On inflation, since you said that that is likely to be one of the big focus areas, the concern is that with the tariffs, whether it's 10, 20 or as high as 60%, which has been the threat, that could have an inflationary impact. What is the expectation that you're going with in terms of just how severe the tariffs are likely to be and the implications and the impact on that on world trade as well as U.S. inflation?
So on inflation, of course, tariffs can play a role. But we also know from Trump 1.0, his first period, now we're Trump 2.0, that he used also tariffs to negotiate. And he already had a call with President Xi Jinping of China yesterday, and they spoke and also discussed many issues and topics. So I think on the tariffs, we will also see what it really ends with. I think he's going to use it as a negotiating position, especially where he feels that the U.S. has a big trade deficit. And of course, the biggest trade deficit he has with China. He also has a trade deficit with Europe, but that is a little bit depending on how you look at it. If you also add services, and you add digital trade, it's pretty much the same. And I think digital trade and services also plays a big role in the trade with India.
Let's now shift into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.
It's not just end of the world, you know, when you lose a match. You get to learn a lot more and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Yeah, recently I think, not recently but Tokyo I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course it was very, very hard, but I had mixed feelings, mixed emotions where, you know, I was feeling bad, where if I have to think I lost an opportunity, you know, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning, and obviously I just gave my 200% and I got that bronze back. So
right, just come back harder. Just come back investing.
Welcome back to Trading Hour. Well, there's some important news on United Breweries that's flashing at the bottom of your screen. Mangalam joins in to give us details and the implications of this particular development.
Well, you know, what had happened earlier was United Breweries had decided to stop supply to the Telangana government for beer because of them not having increased the prices of beer over the last few years. And also at the same time, you know, there were pending dues from the government itself. Now, a couple of weeks from now, we've understood that the companies have been in talks with the government, the Beer Association also, and the Telangana government will now be making payments in a time-bound manner. The talks have moved towards resolution, and they will now go ahead and resume supply of beer to Telangana Beverages itself. Remember, Telangana is one of the biggest beer markets in the country, and analysts had estimated a volume impact of almost 15 to 17% annually as a result of them discontinuing that. But now it seems like, as the authorities, along with the association and the companies, have been in talk, there is a resolution in sight. There hasn't been any formal announcement on price hikes, but I guess this would have been one of the discussion points as well, that you start resuming the supply of beer, and thereafter we'll take care of the price hikes as well. The government has assured they will be making payments in a time-bound manner, along with hearing their concerns on the price, etc. as well. So the fact that there has been a resumption in supply is positive for their volumes. And after the announcement of them having cancelled the supply came by, the stock saw a sharp cut on that day itself. So some of those cuts are now being reversed, and the stock higher by almost 5%. The bigger trigger, however, will be increase in price for beer in Telangana, because right now, while it is a volume positive, remember, it is still an EBITDA negative. So once the price hikes come by, that would be an even better positive. But the fact that things are working in the right direction has the street excited. The stock up nearly 5%.
Thank you very much for that. I remember when the news broke, Mangalam, you had indicated that this perhaps could be a positive. It'll be a positive trigger for the Telangana government to come out and pay its old dues, and therefore, effect a price hike too. And that seems to have played out. But let's move on and talk about commodities. Manisha is now joining in. Manisha.
Well, thank you for that. Well, in a market which is quite subdued, because one, you have the Trump inauguration happening today, and the second is you have U.S. shut because of holiday in sense of Martin Luther King Jr. So both ways, the markets are not really trading much in Asia, and that's perhaps how Europe would be. But ahead of this, we have seen the gold and silver prices, the precious metals kind of gain up. The dollar index has seen a bit of a decline. The markets are looking at on Trump, on what he would say impact on the first day of his office itself. There have been a lot of conversations and tweets to that impact. Well, there are expectations that you could be looking at plans on immigration, tariffs, taxes, deregulations of various sectors, and that could perhaps lead to inflation, which works or augurs well for the precious metal prices, and that's exactly what we have seen. In the previous year itself, we've seen an all-time high for gold and silver for the Indian markets. The international markets have run up quite strongly as well, with 25 to 28% of gains coming in for both these precious metals. This year as well has started on a positive note. Currently also ahead of the Trump taking over, we are looking at gold prices trading up at $2,700 an ounce. We also have silver prices, which have put back 4 weeks of gains and have started this week on a stronger note as well. Both U.S. inflation is bolstering markets to keep long positions into this one, while we haven't seen fund allocations come in for many of these commodities, but the precious metals clearly seeing a lot of smart money flowing into these.
Thank you very much for that. It's time now for Growth Code, an initiative by Growth and CNBC-TV18 designed to provide you with valuable trading insights. This week, Nigel sat down with pro trader Rajesh Baheti, Managing Director at Crossseas Capital Services, to understand if algos are the right product for retail investors. Listen in.
Do you believe, Rajesh, algo trading is an appropriate investment tool for retail investors?
What it cannot do is probably not identify good companies, fundamentally sound companies. For that, you need the good old-fashioned analytics. What it does is, based on the price movement relationships that you can backtest over a period of time, you can with some kind of a certainty, predict what is likely to happen in the future. And what algorithmic trading also does is, it takes the emotion out of the trade so that your stop losses are adhered to, and these trades take place automatically, including the booking of profit and stop losses. So it's more of an exercise that you do when you're trading. Trading is always on some kind of a leverage, and you need that discipline. And what algorithmic trading does is it forces that discipline in your trading behavior.
Well, what about the potential advantages and drawbacks of algo trading for retail investors in comparison to traditional methods of investing?
I think the starting point should be to actually define who the real retail is. Is it a guy with a low net worth? Is it individuals? Is it any other kind of an entity with a certain capability? So before we get into algorithmic trading for retail, I think it would be very, very important to understand what segment of retail are we trying to talk about. And I think it would be wise for SEBI to first define what they consider as retail and what kind of regulations with respect to algorithmic trading that they want for this segment of retail.
Well, time now for a short break. Up next, we'll be joined by the management of DCM Sriram on the other side to discuss their Q3 earnings.
Belief is very, very important. Just believe in yourself.
We'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, how many hours ever it is. I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play, is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times, but whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, we need support, or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that there are a lot of youngsters who are doing really well, but not able to prove themselves. I think leagues now, if you see, there've been Coco, and then there've been tennis and pickleball. A lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues, a lot of people get a recognition in terms of they get to see a lot of athletes who take them.
Welcome back. DCM Sriram has reported a good set of Q3 numbers. The revenues have gone up by 12% on a year-on-year basis, EBITDA up 11%, and profit too has seen a growth of nearly 9%. We're now joined by Amit Agarwal, Group CFO at DCM Sriram. Thank you very much for joining in. So for the first 9 months, your revenue growth stands at close to about 8%. What are you likely to end the year with in terms of a growth rate, and what would be the key drivers for Q4?
Yeah, so I think we should end the year with a similar kind of growth rate on top line. Now, as far as Q4 is concerned, I would say, one, it will be better than what we had in the same period last year. And the other thing is, I think chemicals business is the one which will lead to this turnaround in the performance for Q4. Given the fact that chemicals in this year, we have had 3 capex projects which have been commissioned in the first half of the year. So that is leading to better volumes, and also the prices have been better. I think as a result of this, overall our performance for Q4 should be better than the same period last year.
Mr. Agarwal, would you be able to quantify that in some sense, especially, chemicals business largely driven by caustic soda price fluctuations? Like you mentioned, it's been very volatile. Q4, how has it panned out so far, and how do you see it panning out for FY26 as well, given the fact that you also have a lot of capex lined up in that particular segment?
Yeah. So in terms of the prices for the Q4, the prices they've stabilized and they've corrected slightly as we see. But prices do remain volatile in this period. So I feel that prices would be better than the same period last year, and although may not be in line with what we had in Q3, but the volumes will be better. So therefore, the earnings will be better. Now, as far as FY26 is concerned, again, because these projects came in line in H1, so volumes will definitely be better, and which should lead to growth of top line as well as bottom line. As far as the product prices are concerned, I would say, in our kind of business, it's difficult to give that number. But I do feel that for most of the products that we are in, we've seen the lows in FY24. And FY25, as we see, is already turning out to be better. So we hope to carry on the same trend in FY26.
So you're saying FY25 growth should be similar to the 8% growth seen in the first 9 months, right? A high single-digit kind of a top. So for chemicals, which is driving the growth led by higher volumes, your capex plans and stable prices, what could the numbers look like? Because for the chemicals business, already we've seen nearly 2,000 crore of a top line. Could you end the year closer to 3,000 crore rupees? And what could the growth, and how much will you be able to build on that going into FY26?
So I don't think we will end with that kind of a top line, 3,000 crores. I think we should add another 500 odd crores as a top line in Q4. 500 to 600 crores. Yeah.
500. And for FY26, so assuming you end the year with 2,600 crore of a top line for the chemicals business, how much will you be able to build on that in FY26? And will that continue to be the driver going into next year?
See, we should see on that kind of top line, we should see anywhere between 10 to 20% kind of an increase. At least, 15 to 20%. The range is a little wider given that the prices are volatile. But volume growth should support that kind of an increase in top line.
Mr. Agarwal, from the time you've declared the results, there's actually been a material change as far as, the entire sugar space is concerned, with higher exports now being allowed. One of the points that you've mentioned as far as the call is concerned is that, given the fact that both global and India's sugar production was revised downwards, there's a bit of pressure over there. So Q4, FY26, with the revised export norms, how do you see that particular segment panning out?
So, the exports have not been notified by the government right now. Yes, there have been news in the various media, but we do expect about 1 million ton of exports coming up. See, I would say the challenge with the sugar business today is on the margins, because the cost of production has been high of the last season and even in the current season, but the selling prices have not been in line. So just to give you a number, the cost of production has been higher by about 12.5%, whereas the selling prices are more or less on the same range. So I think that is what the challenge is. The government has to push for exports, maybe higher than what they are targeting. They also have to push for or implement MSP, minimum support price, that will support the sugar prices. Sugar prices have to be above 4,000 rupees a quintal ex-works for the business to be reasonably profitable.
And so what's the outlook for fertilizer and the Fenesta business?
Fertilizer is a small business for us. As far as Fenesta is concerned, Fenesta, we are very buoyant about that business. Currently, the building material space is going through a slower growth than what we've seen in last few years. But I do feel it'll catch up. In Fenesta, we are also looking at building onto the revenue that we have by getting into newer platforms. The board, as you would have seen, has recently approved investing in hardware business as well. So I think that will help its backward integration, it will help customer experience, and it will also help us to develop a newer platform, both B2B and B2C. So I think we are quite excited about Fenesta as a business.
Thank you so much, sir, for joining us, giving us a sense of how Q3 panned out and how Q4 and FY26 is expected to pan out. Moving on, Soni Patnaik from JM Financial Services joins us for a quick technical check on the market. Thank you so much, Soni, for joining us. First up, give us a view of the markets at the current levels and also your top picks for the day. What is it that you like?
Hi, good morning, Vivek, Rima. Thank you for having me on your show. I think Nifty is more or less about to remain in a range, and the range is on the lower side, 23,100 to 23,000 seems to be a good support. On intraday basis, 23,000 able to manage. Above that, there's a possibility of another 100 to 150 points move. So anyway, towards 23,550, 23,600 is the higher end of the range, and it may remain in this 500 points range for the entire week. A lot of writing has been witnessed in these ranges in option chain that can be seen for this weekly expiry. So not a lot of movement, but perhaps this is the range one may look forward to. On the lower side, one can actually attempt to give a buy. If you talk about Bank Nifty relatively is looking stronger for the day. If it's able to manage above 49,100 in spot levels, Bank Nifty can see some sharp short covering towards 49,800, which is the next level of resistance. And immediate basis, Bank Nifty has a good support of around 48,500 on closing basis. So if it's able to take out 49,800, the next leg of the upside can be seen in markets. But as of now, these are the levels to watch out for when it comes to indices.
Thank you very much for that. Markets are picking up now. The Nifty's inched up close to about 130 points, led by a further pickup in the banking stocks. So the Nifty Banking Index is now up 750 points. At 11 o'clock, when we started the show, we were up nearly about 500 points. But Soni, what about your stock recommendations?
Okay, so the first buy pick is in City Union Bank, which is seen breaking above all its major short-term moving averages on daily charts. So one can buy City Union Bank at current price, keeping a stop loss of 170 and a target towards 178 to 180 can be seen. The second buy pick would be in CG Power. Now, CG Power, very strong, fresh, long built-up position can be seen adding today to the tune of 5% odd. So one can buy in CG Power at current price and on small declines up to 665, keeping a stop loss of 645 and a positional target towards 700, 725 can be seen.
Thank you very much for that. As we slip into a break, here is some good news for all our viewers. India's business news leader is now just a click away, introducing the CNBC-TV18's all-new app. Get instant access to breaking news, all our articles, financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store. Just scan the QR code on your screen.
And prove themselves and have that confidence that yes, even we can do it, because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leaks that like these will definitely help them to come up and think that yes, we also have something to actually look up to.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC.
Welcome back. We were just telling you how markets are inching up, pushing higher and higher. Now 23,350 on the Nifty. IndusInd Bank, Axis Bank, HDFC Bank have climbed some more. Axis Bank is trimming its losses, but HDFC Bank is a gain of 1%. IndusInd Bank back in the green. And L&T, expectation of a large order. L&T is also now up and about in trade. But let's talk about IT. In fact, all the large cap IT stocks are in the red, barring a Wipro. Wipro single-handedly is keeping the Nifty IT index afloat. Wipro stock price is up 6.5%, and now it's the best performing large cap IT stock in the last 1 year with a gain of 25%. Q3 numbers were ahead of street expectations on revenues, on margins. Margins were the highest that we've seen in the last 3 years. The company is also committed to return more to the shareholders, either via dividend or just the capital allocation policy has now improved. They're promising to pay 70% of their net income over a period of 3 years. So that's a positive. The only thing, the street was a bit worried that Q4 guidance was unexciting at -1 to 1%. We had a chat with the management earlier to find out, what went into the Q4 guidance. Are the margins sustainable? Listen in to what they had to say.
As in quarter three, I think the team has come together. There has been a significant rigor into execution, helping us with both on the top line and also on the margins. We see the discretionary spend coming back, but slowly. In terms of the specific industries, I think banking, financial services is definitely right there. And typically, if you have seen, when the discretionary spend comes back in banking and financial services, other industries catch up. I think that's what we are waiting and watching at this point in time.
We had a very strong cash flow generation for the last 2 years. Our cash is at an all-time high, and we felt this was the right time. We also laid out our strategic priorities, and we are very clear that we are now ready to increase the committed payout levels, and therefore we have done that. We've also announced an interim dividend of ₹6 per share, which is substantially more than what we have done in the past. So increased capital allocation and increased dividend quantum. As we get into Q4, we feel confident about holding these margins in a narrow band. And after that, it's a set of factors. Hopefully the revenue environment improves, and we also need to invest for the growth. So these will be the two big factors that will play out for improvements from here on.
Okay, let's move on and talk about Paytm. Numbers just out. Abhishek joins in with the details.
Well, the numbers were better than analysts' expectation, especially on revenue front, which came in at 2,016 crore. Jefferies were estimating 1,785 crores. The EBITDA losses have narrowed down. Contribution profit has also expanded by 7.3% on a sequential basis. Contribution profit margin, however, is down on a sequential basis. Their net loss is 208.5 crore, while Jefferies was estimating a net loss of close to 315 crores. With reference to the business momentum, it's been pretty strong. Gross merchandise value has increased by 12.75% sequentially. Average monthly transaction users, that has increased by 1.4% sequentially. Merchant transactions, that's grown by 2.7% quarter on quarter. And the total transactions is up 11% on a sequential basis. So value of loans disbursed, that's also pretty strong at growing at 5.5% on a quarter on quarter basis. Back to you.
Thank you so much, Abhishek, for taking us through the earnings fine print of Paytm. Well, moving on, SBI Life is in focus. The company reported its results on Friday, also held an earnings call. Yes, Johnson, with more details.
Well, Vivek, of course, Friday the numbers from SBI Life were pretty much in line to positive. The street was happy looking at the print of the numbers for the third quarter. The stock was up 2.5%. Today, again, the stock is down about 2.5%. But as far as the management commentary is concerned, that is pretty much in line with respect to the guidance that they had provided to CNBC-TV18 earlier after the second quarter in an interview. Just to recap the guidance provided by the management as far as APE or annualized premium equivalent is concerned, the management expects to close FY25 with a growth of about 14%. Individual APE, the management has reiterated that they expect to clock in a growth of about 15 to 17% when it comes to individual APE. VNB growth, according to management, could be in the range of 13 to 15% for FY25. And interestingly, margins could be maintained between 27 to 29%. A few qualitative details which have come out as far as agencies growth is concerned. The management expects that to be about 30% and bancassurance to be at about 10%. They expect momentum in the non-participating segment in the fourth quarter. And this is important because the non-participating segment has higher margins as compared to the company level margin. So that will be a positive going forward.
Thank you very much for that. Get into a break. On the other side, we'll discuss markets. Deepak Ramaraju of Shriram AMC joins in next.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back to Trading Hour. Well, market is building on to gains, largely led by Kotak Mahindra Bank in the Bank Nifty. Remember, the company reported a better than expected third quarter results. Abhishek joins us to tell us what the earnings pattern is and what is it that brokerages are saying post Q3.
Well, Kotak Mahindra Bank reported a Q3 FY25 performance, which was across various parameters much better than anticipated by analysts on street. So analysts were expecting a decline in net interest margin by about 5 to 6 basis points sequentially. But on the contrary, the net interest margin has actually expanded by 2 basis points sequentially. Slippages declined quarter on quarter versus analysts' estimate of rising slippages on a sequential basis. So that's helped the gross NPA ratio come down to 1.5% versus 1.56% in the previous quarter. Even the business momentum was better than analysts' expectations. So deposit growth was at 15.9% YOY versus Motilal Oswal estimate of about 15% YOY. While advances growth was at 15.1% year on year, while Motilal Oswal anticipated advances growth of 14% year on year. With reference to the PNL versus ARPOL, it was a beat across NII as well as PAT. Brokerages have upgraded the stock, or they remain bullish on the stock. Citi has written on Kotak Mahindra Bank. They have a buy recommendation, target price of 2,070 per share, and they say that their 90 days positive catalyst watch remains open on Kotak Mahindra Bank. ICICI Securities has upgraded the stock to buy from hold, increased the target price to 2,050 from 1,850 earlier. While Anand Rathi has also written on Kotak Mahindra Bank, they have upgraded the stock to buy from hold, increased the target price to 2,010 per share from 1,950 that they had earlier. Back to you.
Thank you very much for that. In fact, let's talk about banking and other sectors with Deepak Ramaraju, Senior Fund Manager at Shriram AMC. He's with us on the show. Deepak, is Kotak Mahindra Bank a preferred stock for you? Do you own it in your portfolio? Are you recommending it to clients? And if not, post these numbers, does it make it?
Definitely no. Thanks for having me on the show, first of all. We don't own Kotak Mahindra Bank in any of our portfolio. But I can't make any recommendations because I'm a fund manager, so I won't be able to recommend any stocks to any individual stocks to the investors.
But what's the broader view on private sector financials?
Typically, the credit growth has to pick up because the liquidity is easing now. So because of, though the liquidity is still tighter, but the RBI is taking measures to improve the liquidity. So it should pick up going ahead. And we'll have to wait and watch for the budget. So how the budget numbers will be given out. So based on that, a further call on the credit growth will be taken up. But sequentially, we are seeing the net interest income relatively stabilizing because the deposit growth is also mobilizing right now. So that's the one positive side for the private lenders to a large extent. So, and also the NPAs are also kind of quite stable. So we're not seeing any additional delinquencies coming on the private players. So that's where we are relatively positive on that.
Deepak, between PSU banks, between private banks and NBFCs and also CV financiers, where would your order of preference lie?
I would still bet my money on a little bit on the private players relatively, and NBFCs are relatively better off compared to the private banks as a whole. And PSU is going to be kind of a beaten down valuation, and definitely from a valuation perspective, gets better performance from a valuation pick. So we need to be stock specific on the PSU side. Yes, we need to see how the credit growth pans out on the PSU names as well.
What was the call, Deepak, going into the earnings for large cap IT? And what have you made of the earnings that we've got?
IT in general is yet to pick up. It's one more quarter of pain from our point of view because the discretionary spending in US has to pick up, or for that matter in Europe has to pick up. The BFSI just started showing up some kind of positive trajectory there. So that's the reason we are seeing we can expect the IT to outperform going ahead. But this current earnings is a little bit painful. It's going to be a mixed bag to a large extent. And many of the stocks are relatively delivering below expected numbers. But it should improve going ahead because the discretionary spend is going to pick up, and as well as we can expect some kind of traction coming in on the deal win side. So that's going to look positively from the IT from a perspective from the medium term to longer term.
Deepak, one sector that you have an overweight on is actually the pharma pack. In other sectors, you generally have a stock-specific view, or you're rather large underweight on metals as well as chemicals. Pharma, you like going into 2025, what will be your pecking order as far as pharma is concerned? Which are the players you like? Will it be the API names or the CDMO names?
So, pharma as a whole, we have been kind of outperforming in the last 1 year right now. So, we expect that performance to continue. A generic space are generally better off, especially the US-based generic numbers are doing better. And we continue to hold certain names there who are kind of favoring the generic side, especially the names like your Sun Pharmas or Lopez of the world. So they're the ones which are part of my portfolio, and they continue to deliver certain numbers there, and we are confident on those kind of earning trajectory from these numbers. Having said that, the specialty kind of pharmaceutical, or for that matter, the CRAM space is still yet to see kind of significant uptick coming in. So we'll have to be very cautious on the CRAM side as well on the US specific CRAMs players as of now. So.
Understood that. So pharma, we have your call. You continue to remain underweight as far as metals and mining are concerned. Why do you have that view, and what will turn around, your call on metals? What do you expect will happen? A weaker dollar, will that help? So going forward, metals, will you make a change over there?
So metals, as of now, it's dependent on China as a growth factor to a certain extent. One. Second thing is the dollar is also strong. So both the factors has to change quite significantly for the metal sector to read it. So we are also seeing a bit of dumping happening from the China to a large extent. That's the reason we are also seeing the oversupply coming from the China also. That's the reason you are seeing a bit of metal prices relatively remaining muted to a large extent. One, the dollar has to retract. So once the dollar becomes weaker, that's when the commodity prices generally shoot up in the past that we have seen as a correlation. So that generally binds with even the metal prices also. So you can expect the metal prices to go up. That is one. And also the demand has to significantly improve. Even on the domestic side also, the government spending is a bit delayed. That's the reason you're also seeing a kind of muted demand coming on the domestic side also, especially from the infrastructure. So those things has to change a bit. The government spending has to improve, and also China as a growth factor, which starts showing up some kind of growth numbers, the metal sector as a whole will start kind of re-rating positively. So till such time, we are not kind of confident on the metal space to kind of show a broader based outperformance or a bigger rally coming in, and then that space as of now.
Thank you very much, Deepak, for joining in. Look forward to more conversations. Get into a break. On the other side, we'll come back with more on the markets and today's new listing, Lakshmi Dental. Stay tuned.
Global growth, what's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to US inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. Is it? This is the first India pavilion, so to speak. India, Bharat.
Safe.
Welcome back to Trading Hour. Well, dental product maker Lakshmi Dental listed on the exchanges a few minutes ago at a 26% premium. Vinny joins in with more details about the newest kid on the block.
Absolutely. So the new listing today that has come in is from Lakshmi Dental. It's a listing that has happened at a premium of around 26%. 542 was the listing price for the company. Now this is an integrated dental product company. The company offers a lot of products like custom crowns, bridges, branded dental items, and they have a manufacturing facility where they produce all these products. In the listed space, they do not have a direct competition that comes in, but the closest peer that you could say in manufacturing of medical products would be Polymedicure. Now, overall, currently the market cap of the company is around somewhere 3,000 crores, which indicates a P of around 95 times. This is calculated on FY25 basis. The estimated would be of FY25 basis that we're calculating it on. Versus the peer, that is Polymedicure, it's still at a base lesser in terms of valuation versus peer, but yes, still considerably high in terms of valuation. 95 times is what we are watching out for. Obviously, do not forget the objective is mainly to raise this fund was to repayment of borrowings, investment in some of its subsidiaries, funding of capex, as well as general corporate purpose were some of the objectives of the company. Financials also have seen a significant improvement in the last couple of years because now when they are starting to see value coming in for the company, so in terms of margins, that has seen a sharp improvement in the last 4 years. From FY22, it was at 4% to 19% in first half of FY25, and similarly, the company has turned profitable in FY24 as well as the first half of FY25, and they expect this to continue going forward. So an interesting listing coming in today.
Thank you very much for that. Important updates coming through on your screen on United Breweries. Remember, just a while back, Mangalam joined in to tell us how the company has resumed the supply of beer to Telangana with immediate effect, because the talks between the Telangana government and the company have been constructive, and the street was awaiting details of a potential price hike and clearance of past dues. Now, this is what we picked up from our sources, that one, the Telangana government has assured the company of a price hike in the next 1 to 1.5 months, 30 to 45 days, so pretty much very quickly. And secondly, the outstanding dues will be cleared in installments in the next 12 to 13 months. So some more clarity coming in on the way forward on how to resolve the standoff between United Breweries and Telangana. But to begin with, the company has already resumed the supply of beer because they've been assured that there will be a price hike and the past dues will be cleared, and we're getting some more information on that.
Well, very important flashes on your screen. That particular piece of development was picked up by our colleague Sudarshan. Payment of dues will be cleared in 12 to 13 months is what Sudarshan is picking up from his sources. United Breweries once again trading near the day's highest point. With that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
This is the first time that we have India putting its states together, technically under two roofs. And what we've seen happen over the last several years is that states have come out here in Davos. So it's of course been the central government, but also increasingly the number of states being represented here in Davos has gone up quite significantly. It used to be Chandrababu Naidu. He was the original Davos man from a state's point of view. But now we've seen Maharashtra, Telangana, in fact, even UP now here in Davos as well. Of course, the Chief Minister is not going to be here, but we do have ministers from the UP government who will be here. So this is the first India House, so to speak, and this is going to be home to UP, Telangana and Kerala. So Telangana, Kerala and UP are going to be part of the India House together. And it's also going to be interesting because this is the federal story. This is the beauty of India's federal story. And it's also its strength, so showcasing its diversity and its unity here in Davos will be something to watch out for. With the next India Pavilion, India, which is going to be home to Andhra Pradesh. Remember, Chandrababu Naidu is going to be here. It is home to Tamil Nadu and Maharashtra. So 3 states, so total 6 states here in Davos, 3 in the house that we just saw, which was Telangana, UP and Kerala. And here we have Maharashtra, Tamil Nadu and Promenade and Andhra Pradesh. Devendra Fadnavis, the Chief Minister of Maharashtra, will also be here in Davos, as will Revant Reddy, the Chief Minister of Telangana. So 3 Chief Ministers will be here in Davos. Let me show you what we are saying to the world here. And of course, all of this has been set up by Invest India. So let's take a look at the themes that India is going to be showcasing. We're going to go right inside. The themes that India is showcasing: the Indian semiconductor market is set to triple by 2032. So semiconductors will be part of the story that India is pitching, from silicon to success. And again, We've got Semicon, the mission that the government has announced. We've already started to see investments coming in there. So semiconductors, electric mobility, EVs to account for over 40% of India's automotive market. EVs will be the other big theme that will be discussed here as part of the India story. So this is India, the roadmap to a $32 trillion GDP by 2047. India's economic overview, so some data and numbers and statistics here being highlighted here at the India Pavilion.
Stocks notched some gains led by heavyweights amid uncertainty over policy actions by Donald Trump after he takes charge as the US president. Telecom and financials see big gains while healthcare and FMCG drag.
Kotak Mahindra Bank scores on all counts in the third quarter with margins, asset quality and business growth surpassing street expectations. The brokerages upgrade the stock.
Wipro grows faster than expected in Q3 and achieves its margin aspiration of 17 to 17.5%. A revision in capital return policy to 70% or more from 45 to 50% also instills confidence. The stock climbs.
CNBC-TV18 learns that the government is considering a waiver of AGR dues from Vodafone Idea and Bharti Airtel. The government may waive the AGR penalty and interest dues. The move comes on the back of a 2024 Supreme Court ruling that upheld the government's AGR demand.
Donald Trump is all set to return to White House as the 47th US president tonight. Reports suggest a flurry of executive orders are set to be unveiled in his first few days in office.
Good afternoon, you're with us here on Halftime Report this Monday morning. A complete contrast to what the screen was last Monday. But before we get to the markets, we have an important corporate conversation lined up and we're focusing on the auto sector as electric vehicles take center stage at the Bharat Mobility Global Expo of 2025. Our colleague Parikshit Luthra caught up with Girish Wagh, who is the executive director of Tata Motors, to discuss their latest EV launches in the commercial vehicle space and the outlook for the same. Listen in.
Bharat Mobility Global Expo 2025 is a very important milestone for us. We are also launching our repositioning of the brand as Better Always. Some context of that, I think Tata Motors Commercial Vehicles is a pioneer in commercial vehicles and part of Tata Group's endeavor into nation building. The brand has been very well respected and trusted. At the same time, I think the young and aspirational India is changing, the expectations are changing, and we are also seeing some new mega trends, whether it is sustainability, digital and artificial intelligence and safety. With all these requirements being there, now it is calling for sharpening our value proposition to give more success with agility and growth mindset to the customers, and that's what is Better Always for us. All right. The manifestation of that Better Always is in 14 products that we have showcased at Bharat Mobility Global Expo. And this actually encompasses all the technologies from CNG, LNG, diesel, biodiesel, biofuel, battery electric as well as hydrogen ICE. So there's a range of vehicles in trucks and buses from 1 ton to 55 tons.
So you're trying to say Tata Motors has an answer for everything in commercial vehicles if there is demand. Let's begin with this. This is the Prima E55S. It's an electric tractor.
Yeah.
It's already in the markets?
So this is ready for commercial launch now. So we have been talking to some of our customers in sectors like steel and cement, right? So they are looking at decarbonizing their scope 3 emissions, and this tractor makes a lot of sense to help them in that direction.
Okay, so you also have a big black tipper there. That's a diesel. That's not a electric vehicle. But how is it important in terms of growing your market share?
See, I think India...
And my camera person Akhilesh will show us those pictures as well.
Yes, so see, India is growing even in deep mining to help us in infrastructure, right? And there we are coming up with a very heavy duty tipper, which this deep mining operation otherwise is done by imported vehicles today. So this is with a completely new generation 8.5 liter Cummins engine with auto shift transmission. So this will change the deep mining operation in the country. This is also ready for commercial launch.
Okay, so when are these launches expected? Both of the portable tractor, electric tractor, and also electric tractor and the tipper.
So both these we will start seeing in operation in 6 months' time.
In 6 months' time, they're getting launched. So what do we have here, sir? We're seeing a series of buses and trucks by the Tata Group. This is a 28-ton vehicle. Could you tell us more about it?
So this is a hydrogen internal combustion engine vehicle. So the government has also come up with a hydrogen mission plan, and as a part of that we are happy to be awarded the hydrogen pilot, wherein we are going to work with IOCL and going to run the hydrogen internal combustion engine trucks on 3 routes: Delhi NCR, Ahmedabad Rajkot and Mumbai Pune. So this will be done over a period of 12 to 18 months to get a lot of information about the entire value chain of hydrogen in terms of green hydrogen manufacturing, distribution, as also running the vehicles, and help to refine the approach.
Okay, so what is the cost of hydrogen as a fuel right now? If you had to fuel this truck and use this, what is the current cost in the international market, and how much would it cost in India?
See, it's upwards of $5-6, right, as of now. But we know that as the requirement goes up and the scale goes up, this cost will certainly come down.
Okay, and what about here? You've got the Ultra E12.
Yes, so this is one of the 6 electric vehicles, battery electric vehicles that we have introduced. So this is meant for hub-to-spoke electric transportation, right? So this comes with more than 250 kilometers range. One of our battery electric offering in the Auto Expo.
What's the current product delivery pipeline that you already have?
So I think in the products that we have showcased at Auto Expo, more than half of those are ready for commercial launch within next 6 months, whereas few others are concepts that we are testing, right? So I think what we see here is real capability and something which is going to come into the market and make a difference immediately.
Okay. Now, in terms of how much of your portfolio has now been electrified, how much would that be in terms of percentage?
So we are already having electrification in buses and small commercial vehicles, right? In terms of volumes, the penetration is still in single digits. But now with the launch of electrification in heavy commercial vehicles as well as intermediate light medium vehicles, and the introduction of PM E-Drive, which is on the anvil, I think we should start seeing this penetration going up.
Okay. How big could the government's tender for PM E-Drive be?
So PM E-Drive is supporting the electrification in trucks and ambulances. It won't be tender based, so it will be helping the customers reduce their acquisition cost. The tender business will be more in PM E-Bus Seva, and that's where I think we've been working with the government on 2 expectations. One is the payment security mechanism. The second one is asset light model. So there has been a good progress in these discussions. Meanwhile, we have now more than 3,000 buses running on, electric buses running on Indian roads, cumulatively covering 26 crore kilometers. So there's a lot of experience under our belt. We have also refined our operational model. So we are very well placed now. Once these 2 requirements get addressed, then participate aggressively in the new tenders.
Okay. Is there any room for more capacity setting, capex allotment for commercial vehicle push?
So as far as buses are concerned, I think we have increased our capacity in the past 18 months, so we are very well placed. As far as electrification in other segments, I think we are keeping our capacities flexible, so as soon as and when the requirement goes up, we should be in a position to produce.
All right, interesting conversation there. Let's get you Growth Code, an initiative by Growth and CNBC-TV18 designed to provide you with valuable trading strategies. This week, CNBC-TV18's Nigel D'Souza sat down with pro trader Rajesh Bhai, the managing director of Cross Seas Capital, to understand if algos are a right product for retail investors. Listen in.
Do you believe, Rajesh, algo trading is an appropriate investment tool for retail investors?
What it cannot do is probably not identify good companies, fundamentally sound companies. For that, you need the good old-fashioned analytics. What it does is, based on the price movement relationships that you can backtest over a period of time, you can kind of, with some kind of a certainty, predict what is likely to happen in the future. And what algorithmic trading also does is it takes the emotion out of the trade so that your stop losses are adhered to, and these trades take place automatically, including the booking of profit and stop losses. So it's more of an exercise that you do when you're trading. Trading is always on some kind of a leverage, and you need that discipline. And what algorithmic trading does is it forces that discipline in your trading behavior.
Well, what about the potential advantages and drawbacks of algo trading for retail investors in comparison to traditional methods of investing?
I think the starting point should be to actually define who the real retail is. Is it a guy with a low net worth? Is it individuals? Is it any other kind of an entity with a certain capability? So before we get into algorithmic trading for retail, I think it would be very, very important to understand what segment of retail are we trying to talk about. And I think it would be wise for SEBI to first define what they consider as retail and what kind of regulations with respect to algorithmic trading that they want for this segment of retail.
Good morning. How are you? Good morning. How are you? Are you enjoying your time in Davos?
Yes, we are going to work.
And what are you looking forward to the most?
Meet everyone and for the betterment of the economic.
For the betterment of the economy.
Of the world.
So what?
You come from India?
Yes, from India. Where are you from?
Punjab, India.
Punjab, India. आप कहाँ से? पंजाब में कहाँ से?
पंजाब से मैं वैसे तो हरियाणा से हूँ, अम्बाला से।
अच्छा, तो आप यहाँ पे कैसे आए?
वैसे घूमते फिरते आ गए।
घूमते फिरते आ गए? बड़ी लंबी घूमते फिरते आ गए आप। तो कब आए आप यहाँ पे?
में रहता हूँ।
आप ज्यूरिख में रहते हैं। अच्छा।
20 years living here.
और तो आप ये डावोस में वर्ल्ड इकोनॉमिक फोरम के लिए पहली बार आ रहे हैं कि?
नहीं, हम तीसरी बार आ रहे हैं।
तीसरी बार आ रहे हैं।
हमारी एक रेस्टोरेंट है खान तारा के नाम से।
जी।
तारा रेस्टोरेंट इंडियन।
हाँ।
तो उसकी कैटरिंग करते हैं हम।
अच्छा, तो क्या खिला रहे हैं आज आप डावोस में? क्या है मेन्यू पे? क्या है?
आप आए,
Well, that's lovely.
ये हमारे शेफ हैं जी दोनों।
नमस्ते जी, बहुत बहुत आपको शुभकामनाएं। आप कुकिंग करने वाले हैं और काफी लोगों को खाना खिलाने वाले हैं, तो
हम लोग
शुरू हो गए तो
आपको काफी फॉलो करता था मैं। लास्ट ईयर का गीता गोपीनाथ का इंटरव्यू पढ़ा।
थैंक यू जी, थैंक यू सो मच। इट्स वेरी नाइस टू हियर दैट यू वाचिंग CNBC TV18।
कभी इंटरेस्टिंग होता है आपका 2-3 काफी
नहीं, बहुत अच्छा लगा आप लोगों से मिलके, एंड वी विश यू ऑल द वेरी बेस्ट। बिल्कुल जी, इंडिया वालों को अब नमस्ते, सत श्री अकाल।
हमें कुछ सक्सेस हो जाए।
जरूर होगी। आपको बहुत सक्सेस मिले और बहुत शुभकामनाएं।
Welcome back. Firmly in the green is the index, 150 points higher on the Nifty, nearing levels of 23,350. Last week's high is now come into focus, which is around levels of 23,390. And it was the Nifty Bank that is leading the gains in today's session, 750 points higher on the index, and courtesy, of course, Kotak Mahindra Bank, 10% higher on the stock there. His last 4 years, single-digit returns, be it positive or negative, and today it's gained that much in one single session. But the stock that has been in focus over the last 30 minutes or so has been United Breweries, and that's because the beer maker said that it will resume supplies to the Telangana Beverages Corporation, and Mangalam has been tracking the developments there on that.
Well, if you remember, Hormaz, on January 8th itself, there was, towards the end of trade, we got a notification coming from United Breweries saying that they will stop supply to Telangana on account of pending dues and no price increases coming to beer, and as a result of which the stock saw a sharp knock. But right now the company has gone ahead and said that they have decided to resume supply of beer to Telangana with immediate effect, and the biggest reason for that is the talks with the Telangana government have been constructive. So the government of Telangana has ensured the company and the industry on pricing issues as well as outstanding payments, two of the major concerns because of which the company had stopped supply itself. So what are the implications of this move? When the move was earlier, when they decided to stop, the biggest implication was it would be near-term EBITDA positive and also volume negative. So now that reverses. One is that there will be volume jump that will come by because Telangana contributes about 15 to 17% of the company's volume. And the second thing is that it won't be an EBITDA negative, because the key to track now here will be the assurance from the government has come. When does the actual dispersal of dues happen, and when does the price increase happen itself? Because remember, the company is currently making EBITDA losses in Telangana, and the Telangana government owes the company about 700 crores. So to that, we, our colleague Sudarshan reached out to the government sources in Telangana, and the Telangana government has assured on a price hike decision very soon. How soon is that? The next 30 to 45 days. Were that to happen, that would be a big positive. Why? Because the next 30 to 45 days implies somewhere at the start of March itself, they will get that price hike, and the impact of that would benefit the entire summer season. Had this been later than that, then the summer sales would have been impacted. Secondly, on outstanding dues, they will be cleared in installments over the next 12 to 13 months. So that is a positive as well. On both these developments, we've written to the company. We are awaiting a formal comment coming in from them. But the fact is that this is a step in the right direction. The company has resumed, supply, so volume positive. And over the next 30 to 45 days, if the price hike does come by as well, that would be EBITDA positive as well. And understandably, the stock is rejoicing on that move.
The fizz returning to United Breweries after the development. The kick returning. Being teetotalers ourselves, it's very difficult to give an adjective to such. But still, 5% higher on United Breweries. We'll take a short break. But before we do that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app, where you get instant access to breaking news, in-depth articles, and financial world updates right at your fingertips. You can download the app right away from your Google or Apple stores.
Promenade is captured by the Indians.
Indians, yes. हम पहुंच ही गए, आप बिल्कुल भारत के सामने, और आप लोग को भी डावोस के लिए बहुत बहुत शुभकामनाएं, एंड थैंक यू। बिल्कुल खाएंगे जी, बिल्कुल खाएंगे। थैंक यू इंडिया की तरफ से, थैंक यू सो मच।
This is the first look at the new electric Vitara which has been launched by Maruti Suzuki. It is a completely ground-up electric vehicle. What this means is that it has been developed from scratch and it's not been adapted from its ICE cousin. Now, what we know about this car is it comes in two battery packs, 49 kilowatt-hour battery pack and a 61 kilowatt-hour battery pack. The top variant can actually give you a range of 500 kilometers in a single charge. So that is comparable with the Mahindra SUVs, electric SUVs, which have been launched. That will also give a 500 kilometers plus range. Now, there are 10 color options for a customer to choose from. There are changes on the exterior. It's got a more muscular look than the current e-Vitara lineup. It's got a long wheelbase of about 2,700 millimeters. On the inside, well, there is a lot of excitement of what this will offer. It's got a fully digital cockpit. You've got ADAS level 2. You've got over 60 telematic features. You've got a rotary knob to choose normal, eco or sports mode for that matter. You've got a twin deck floating console in the car. You've got ventilated seats. You've got a 360-degree camera. The passengers in the second row get leatherette bucket seats is what we are told. Now, the charging time for this car with a fast charger would be about 40 to 50 minutes. With a slow charger that you would find at your home or in other places such as in your office would take about 5 to 6 hours for that matter. When does this car really hit the market? Well, it'll be exported first. The production begins in March or April. Perhaps by June, you will get it in India. And in terms of pricing, well, that's something that people are really excited about, but disappointing that Maruti did not come out with the pricing. But we're told that considering that the EV SUV price point in India is...
Well, it's a good-looking screen right now as we look at the F&O setup at midday itself on halftime report. The market's moving towards the higher end of today's trading range. So the Nifty was mildly in the green and thereafter it saw a big surge holding around that 23,350 mark above that level itself. So doing extremely well. Let's see whether there is some more short covering, which is likely or not, given the sort of shorts in the system itself. The good part is it's led by the Nifty Bank, up almost 1.65%. On the Friday's trading session, it was the Nifty Bank which pressurized the Nifty along with the IT stocks. But now we have, the Nifty Bank powering the Nifty ahead, up with around 150 points. So look at some of the stocks which are contributing on the way up. We have Kotak Mahindra Bank, we have Wipro, some of the financials doing extremely well as well, Bajaj Finance, and then we have names like SBI as well, doing their bit for the frontline index. But what are the others, that you're looking at in terms of levels? You look at some of the options. On the way up, there is some sort of support which has come by as the markets moved higher. Put writers have moved higher from 23,000 to 23,200, a premium of 80 rupees, telling you now that the support has moved higher to around 23,100 itself, and also 23,200 because the 23,300 put writers are fairly active as well. So that's good news for the bulls. Supports coming higher for the market. Now, the question is, where does resistance come in and at what point does short covering come by for the markets? 23,400 call writers are still fairly active, about 500 crore shares in open interest out there for a premium of close to 100 rupees, telling you levels closer to 23,500 will be extremely crucial to cross for further short covering. And that coincides with the 100-day moving average as well, which is at around 23,500. The ferocity of the fall over the last few trading sessions has been such that the 20-day moving average itself is at close to 23,600. So an excursion towards that, once the Nifty crosses the 100-day moving average, cannot perhaps be ruled out. But for all of that, the Nifty has to cross that 23,500 mark sustainably. What are the stocks we're looking at? We just spoke about United Breweries, a lot of long positions added on that one. CG Power is the other one, which is sitting with a gain of almost 4%. A lot of long positions added on that one too.
130 points away from 23,500 is the Nifty, building on to the gains now at the highest point of the day, 160 points higher on the index. Take a short break. Up next, we connect with Rakesh Nair, who is the Executive Director at Supreme Petrochem, to discuss their third quarter numbers. Stay tuned. Back on the other side.
To 20 to 25 lakhs, the company, Maruti Suzuki, will price the e-Vitara also very aggressively. With Video journalist Akhilesh Singh from the Auto Expo, this is Parikshit Luthra. We're at the Hero Motorcorp Pavilion. The company has launched 4 new products, 2 new scooters, 2 new motorcycles in the range of 86,000 rupees to 1,80,000 rupees. But one of the products that is really catching a lot of eyeballs is the Surge, the Hero MotoCorp Surge vehicle. It looks like a three-wheeler, but is it? Satinder, why don't you show us what this vehicle can actually do? Have you ever seen a scooter detaching itself? Satinder is detaching itself from us. Yes, now you have a two-wheeler. So if you want to use it as a passenger vehicle to ferry around commuters from one point to another, you can do that. Also, if you want to leave the three-wheeler at home in the evening, use this as a scooter for your shopping or family time, you can do that as well. And this is not just in the commuter segment. You also have a cargo variant of this. Here you have the Hero Surge in a cargo variant. Here you can keep boxes, any e-commerce delivery items, fruits, vegetables, and you can use this for last mile mobility and delivery. Even this one gets a scooter which you can detach and use independently. So a very interesting concept, a literally two-in-one vehicle, so to say. It's called a class-changing vehicle developed by Hero MotoCorp over the last few years. The company may launch this formally in the middle of 2025. While it is an interesting concept, it remains to be seen how the customer and how the e-commerce market actually accepts it. With Veer journalist Akhilesh in New Delhi from the Bharat Expo, this is Parikshit Luthra.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
Back with us here on Halftime Report. Just before we get to the management of Supreme Petrochem, the Nifty is at the highest point of the day now, 160 points higher on the index, 23,360 is where it stands. And there are plenty of other movers in the broader markets as well. Credit Access Grameen is one of them after some pressure that it witnessed last week. That stock is up 10.5% in today's session. Vodafone Idea, that was at one point up in a 15% upper circuit, has cooled off from the highs, but still holding on to gains of around 9.75% there as well. So at almost 10 rupees now is Vodafone Idea, still below that FPO price of 11 rupees. Of course, Tejas Networks is up 7%. Kalyan Jewelers is up 7% though, after the battering that it took last week. The stock's still in the F&O band today.
So, yeah, it'll be very interesting to see where it goes from here, because it's seeing a lot of short covering. Whether it continues to see some short covering or not is the big question. And now with today's up move, the stock is back above that price at which the promoters bought at 535 rupees. Remember, on Friday it was battered out of shape down and closer to that 500 mark as well. So there's been a bounce from lower levels. The question is when and how. To what extent does this bounce sustain? Because if this does not sustain, that it only gives a lot more fuel to shorts to go ahead and sell the stock after a heady downtick that we've seen on the stock itself. But there are earnings that we're watching out for.
Earnings indeed, and as promised, we get to the management of Supreme Petrochem. It was a steady third quarter for them. However, margins continue to remain under pressure. Now we're joined by Rakesh Nair, who is the executive director at the company, who is joining in. Mr. Nair, good afternoon. Thank you so much for joining in. I'll start off with the margin question, right? Because historically, you've been doing margins of around 12%, but as of the first 9 months of the year, you're still in the high single-digit figure, somewhere close to 9%. What's the outlook on the margins? By when do you expect a double-digit return as of now?
Good afternoon. In the current quarter, the margins are down as compared to the previous year because the raw material prices were on the declining trend in this quarter. The styrene monomer, which is our main raw material, the prices have dropped by almost 10%. They are now kind of stabilizing with these crude prices also going up. So they are now stabilizing. And as far as our margins are concerned, very difficult to give you a guidance on that. I can only talk about the volumes. The volumes we would be doing in the current year around 8 to 9% growth overall for all the total volumes of the company. The margins totally depend upon the international price trends because the prices get certainly determined by the landed prices and then our grades and our specialities and all that. So with the global trends being what they are today, very difficult to predict the margins.
All right, you spoke about two things here. One, you said that there is some stability in prices as crude prices have begun to inch slightly higher. So if you could give us a sense that in the very near term, we're not asking for a full year outlook because the things are so variable. In the very near term, do we see margins stay at the current levels or could there be slight improvement from here? That's point number one. And you answer that, we'll come back on the volumes in just a bit.
See, as I said, margins are totally determined by the global deltas. The polystyrene essentially is a polymer which is again a commodity business. So the styrene prices are stabilizing with the crude prices inching up. So I expect, yes, the margins might improve a bit, but then it will be all dependent upon the global margins.
Got that. And the second part is on the volumes. You said that you are hoping to end this year with 8 to 9% volume growth on an annual basis versus the last year. But,
yes,
despite a 21% growth in the third quarter, the requirement for the fourth quarter to even be at flat levels versus last year is 25%. So are you assuring the street that your volumes in the fourth quarter would be over 35% for it to actually be 8 to 9% above last year?
See, the last year our volumes, what they were, we were around 320,000 tons or so. And we are expecting that we should be closing around 350,000 tons this year. That would be around 355,000 tons. So that should be around 8 to 9% for us.
No, so first 9 months, what has the cumulative volume been for you?
The first 9 months, our growth has been around 13%. We see the exports are down. As I explained in the previous quarter also, that the exports are down. We are working on our exports, but the freight rates are very, very high still. They continue to remain high. So the volumes what were coming in from the exports, they would not be the same as the previous year.
Are the freight rates still high in this quarter as well, Mr. Nair?
Yes.
What's the situation looking like on the ground, not only for freight rates, but in terms of demand in general as well, be it for domestic and for exports?
The freight rates for exports continue to remain high. As far as the demand is concerned, demand is there in Europe and other places, but then with the freight rates high, very difficult to compete there then. And as far as the domestic is concerned, yes, the domestic demand would continue to grow. With the OEMs doing better, the demand would grow this quarter.
Right. What happens to the ABS plant, which starts in the next year? How much does that start to contribute to your overall revenues?
On a full capacity basis, that should add roughly around 1,000 crores to our revenue.
And you are on track to commission it by the first quarter of FY26?
Yes, we are. The product would be out in the first quarter of 26.
And what would be the glide path of utilization, capacity utilization there?
We expect in the first year we should be doing around 50% of that. And the second year onwards, we will be fully loading the plant.
And what about the styrenics complex that you are looking to set up in Haryana, sir?
The pre-project work is going on there because all the approvals, environment clearances, environment impact assessment studies and all that is going on. And we would be working on that maybe towards the end of this financial year.
And when does that come on
That is
stream?
26. When I say end of the financial year, that will be end of the financial year 26. Yeah.
So you mean by end of FY26 the plant comes on stream, or you expect the work to be completed by the end of FY26?
If the groundwork will commission, I would say that by the third or fourth quarter of the 26, the project work will actually commence there.
All right. And final question, just before we let you go, you've given us a sense of what you're targeting in terms of volumes for this year. Would you have any early prediction for what you're looking at in the next year?
I think we would be doing the similar kind of growth on our existing products, and additional volumes will be coming to us from the ABS.
All right, Mr. Nair, thank you so much for sparing time and taking us through the quarter gone by. Wish you good luck for the rest of the year as well. The management there of Supreme Petrochem, the stock currently trading with losses of around 0.5%. We'll take a short break. More on the markets on the other side. Stay tuned.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, you know, when you stand and people, when they look up to you, they also need to understand that, yes, you know, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right.
Yeah.
You know, when you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you know, you've been very successful, what else you need in life? But I think to get till there itself was a tough task. But I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to, you know, work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but you know, maintaining that level is a different thing altogether, and it takes even more you know, time and hard work, and you know, it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. I mean, wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. You know, when you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then.
Greetings from Davos. It is day 2 of the World Economic Forum. I'm Shireen Bhan. Don't get confused. It looks like we're almost at the middle of the night, but we're not. It's early morning here. It's -5 degrees, and work has already started. Of course, overnight, the headlines continue to be dominated by President Trump. Remember, the countdown has begun now for President Trump to take oath. Of course, the ceremony has now moved indoors on account of freezing temperatures. That is what the Trump team has had to say. Well, what we've seen, not just ahead of the Trump inauguration, is signals coming in on how the Trump administration intends to deal with TikTok. Remember, TikTok went dark in the US to comply with the Sunday ban, but overnight it's back on. And it's back on because President Trump has said that he will pass an executive order when he comes to office to give a reprieve to TikTok. And of course, we will have to wait to see what the eventual fate will be, whether it will have to find American buyers. Who will the American buyers be? There's an Indian angle there. Perplexity AI is reportedly one of the companies that is in the fray for a possible bid for TikTok. So all of that is going to be something that we will have to watch out for. The other big story overnight is the Trump meme coin and the way that that has skyrocketed. Of course, it's also bringing back questions about cryptocurrencies and also what kind of price and value action we're seeing as far as this particular class is concerned, and whether investors need to be cautious while looking at this. And of course, that has been capturing headlines overnight, the kind of surge that we have seen of the Trump meme coin. Of course, it has got industry divided, bankers divided, and that debate, of course, on cryptocurrencies has been ongoing. You heard from Borge Brende, the president of the World Economic Forum, on CNBC-TV18 in our interview yesterday about Trump's address here to the World Economic Forum. That's slated for Thursday, where President Trump will address the World Economic Forum for the third time. In fact, he is the only sitting U.S. president who has spoken at the World Economic Forum. Now thrice, once he does speak on Thursday, it will be his third time speaking at the World Economic Forum. It is going to also be an interactive session. Select CEOs will be speaking to President Trump, so that's going to be something to watch out for. It is a big day for us on CNBC-TV18. We've got a whole host of interviews lined up, global faces, to talk about what the outlook is for 2025. We will, of course, be joined by the president of NASDAQ. Remember, the global markets have had a significant 2024. What is the outlook for the year ahead? We'll talk to Tal Cohen of NASDAQ. That's coming up in a short while from now. Don't miss our conversation with Ian Bremer of the Eurasia Group. He, of course, has been talking about the fact that the world finds itself in a geopolitical recession, but with President Trump in office, what could that mean? That is something that we will talk to Ian Bremer about as well. We've got also the Deputy CEO and the global CFO of IKEA, of the Inca Group, joining us. Of course, IKEA has been a committed investor in India over the last few years. They are setting up new stores in India, but there has, of course, been an expansion in losses specifically for the India business. So we'll talk to IKEA about what the outlook is for consumption and for the India business in 2025. Of course, we will be joined by Ravi Kumar, the CEO of Cognizant, has been on a mission to turn things around for the company. More tech conversations. We've got Frank D'Souza, who used to head Cognizant, also joining us, and now Frank is investing in tech companies, and he's made about 11 odd investments already in companies that are based in different parts, largely in the US. So we'll talk to Frank about the outlook for IT services companies, but also the kinds of investments that he is making. We've got plenty more lined up for you through the course of the day. And of course, the conversations are only just getting started, and they are around AI, as I've been pointing out through the course of the last 2 days here on CNBC-TV18. As you can see, it's still very, very dark. We're just about walking to our studio to get things off the ground this morning here. It is a cold morning, but it promises to brighten up, so to speak, quite literally over the next few hours. Of course, the Indian delegation, lots of ministers are already here. You will hear from many of them on CNBC-TV18. Chirag Paswan will join us, and we'll also be joined by Ashwini Vaishnav, and Smriti Irani, of course, has been a regular in Davos over the last few years. She's here this time around, not as part of the government delegation, but she is here for the work that she's doing with the Bill and Melinda Gates Foundation, as well as CII, for the We Lead lounge, and of course on the issue of gender parity. So we will be speaking with her as well. Today we also have Brian Moynihan of Bank of America, and we're crossing the Bank of America lounge right here on the promenade. Brian Moynihan, incidentally, completes 15 years in office as CEO of Bank of America. So what's the outlook for the bank? What does he make of India? What does he make of Trump? Where does he see interest rates? All of that and more in our conversation with Brian Moynihan of Bank of America coming up on CNBC-TV18. It is going to be a day where sessions kick off in the Congress Center as well. Remember, there's about 300 sessions scheduled here between today and Friday, which is when the annual meeting of the World Economic Forum will draw to a close. These are typically sessions where you register and you can participate. Many of them are available online if you choose to see them, but different sectors, different issues from, of course, reshoring and what that means in terms of supply chain diversification, to AI and emerging technologies, to healthcare. All of that will be up for discussion. In fact, speaking of healthcare, let me just recap a very interesting conversation that we had with the head of the World Economic Forum's Healthcare Committee, Shyam Bishen. He does the work for the World Economic Forum for Healthcare, and WEF, in partnership with some of its other stakeholders, will be setting up the very first digital health activator in India. That's going to be coming up, and we will see that being launched in India shortly. I think in about a month or two, that is going to be off the ground. And they really do believe that what we are seeing at this point in time in terms of using technology to provide access via telemedicine to improve diagnostics and innovate as far as diagnostics are concerned, all of that are likely to be issues where the WEF believes there can be learnings from India, and that is something that they are going to work on in partnership with their Indian stakeholders. So the first digital health activator the World Economic Forum sets up will be set up in India. So that's something that we got from Shyam Bishen. The other interesting conversation that's happening here is around energy transition, and while there is concern that the speed towards making the transition has slowed down, there is also hope and confidence that we will not see a setback or too much of a setback as far as the energy transition goals are concerned. But what happens with the explosion of data centers, what that does to energy consumption, how it reshapes energy consumption, what AI can potentially do to actually cut down on energy use. Can it offset? Can the two be offset? Those are some of the big questions, and we had a conversation with Roberta Boca of the World Economic Forum. And what's interesting to see is how nuclear power seems to be making a comeback, especially when we talk about the need for energy demand in the context of AI and data centers, small nuclear modular reactors. That is something that many companies at this point in time and many countries at this point in time are looking at as well. So those have been some of the conversations that have happened overnight. As I pointed out, the big story, of course, is going to be President Trump's inauguration later tonight, Monday night, India time. And that's going to be the focus here in Davos as well. We've got plenty of reactions lined up on what the Trump era could mean for the world, how we can navigate the markets as well as the currency and commodity trade, all of that and more coming up for you on CNBC-TV18. Stay tuned. We are going to take a break and come back with a lot more.
It out, but I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Recently, I think, not recently, but Tokyo, I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course, it was very, very hard, but I had mixed feelings, mixed emotions where, you know, I was feeling bad, where if I have to think I lost an opportunity, you know, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning, and obviously I just gave my 200% and I got that bronze back. So
right, just come back harder. Just come back
yeah,
even harder.
I think the belief is very, very important. Just believe in yourself.
Didi, we'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, you know, how many hours ever it is. I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play. You know, is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times. But whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone.
Welcome back, and joining us on the show now is Aishwarya Gupta of Polygon Labs. Aishwarya, hi, thank you so much for joining us. Well, big news clearly coming in for you guys and for the Indians as well, and congratulations on that, as Jio Platforms enters a strategic relationship or partnership, as we understand, with Polygon Labs. A lot has been talked, said, written about this on social media, but what better to hear it directly from you on what exactly this collaboration, what does it bring to Indians as overall?
Yeah, absolutely. First of all, thank you for having me here. I think one of the biggest things that we have been able to achieve is like going out and working with like Reliance from the past almost 1.5, 2 years. And like from that perspective, like going out and creating this whole Web3 focused thought process. And like one of the things that we have been seeing with Reliance is like they have been like really very forward looking into like what are the things that we can go out and do together. And the partnership that we've essentially just entered into with Reliance is majorly going to be working towards where we work closely with Reliance to enable some of the products that they already have to add Web3 capabilities, which essentially enables a lot of people who are going out and using the current products and everything of Reliance to be able to go out and experience the Web3 benefits without actually going too deep into how the whole Web3 ecosystem works and everything like that. So I think that is like one of the biggest part from the partnership on what we are doing and what we are planning to do more in the future.
Aishwarya, when you say that you've been working with Reliance for some time, what really is this some time? Because we heard about the release or this collaboration only last week.
Yeah, so I think though we heard it in the last week, we have been working closely with the teams for almost 1.5 years. The idea was majorly on like creating value for the users of Reliance. And that is where I think what we were doing with Reliance was like trying to go out and work on various use cases, which essentially like having all those conversations on whether this adds value to their customers and whether they would be benefiting from it, and also like how we can go out and ensure all the things that Reliance wants to do is from the perspective bringing an impact within India. So the major part was like kind of going out and having those discussions. Like Reliance has been really forward looking into the perspective of like how they can use blockchain as a technology to evolve or to add capability to some of these existing platforms and use cases that they have. I think that was majorly in the past time that we were doing. Now, like a couple of products that are now getting really close into what are the various things that they will start doing is something that we are focusing on now. But that has been like the overall conversation on like how we get these capabilities within the geo ecosystem platforms into the on the blockchain.
Ashwari, what you're telling us is that some of the products that already are with Geo, we are adding Web3 capabilities to it. Until there I understand. Would it also lead it all to Geo users wherein they can use Polygon Labs as a platform to develop something that they would want, or we haven't reached there yet?
So the way it would work is like the products which are where the capabilities are getting added, all those products basically would be running on Polygon. And so users would be using Polygon, but essentially they would not realize this. So this is something similar where we have done it with other companies like Flipkart, where user doesn't know that they are interacting with the blockchain, which is Polygon, but they're still using it in the front end.
Fair point. That talk to us also about there is an intersection of AI and crypto as we see it right now. So when it comes to Web3, what are we all pushing here? And the other point really is, and while we're talking about blockchain and we're talking about Web3, we're not really talking about cryptocurrencies here. And that actually becomes the part and parcel as a token.
Yeah, absolutely. I think on the latter part, when you say like on the cryptocurrency part, so the moment you start using a public blockchain, you need to go out and use the gas fees. Which essentially is in the crypto tokens itself. So the way I look at it is like for even for the platforms who are going out globally and using public blockchains, the crypto part is automatically coming as a default. And from a perspective of that is really important. And from coming to your first question, which is more towards the AI side, I think one of the biggest things that is happening is like a lot of automation or a lot of things. So I'll give you a very simple example on like crypto and AI. Think of, let's say, you going out and you wanting to take a home loan today. And today what happens is we have to go to every bank and ask those banks, what are the interest rates, what exactly are the terms and everything like that. On the blockchain, one of the very beautiful things that can happen through AI agents is you can just ask these AI agents, or you can just deploy these AI agents from the bank side. And anytime someone wants to go out and draw a loan, these AI agents actually come and interact with the user from the backend perspective, giving what exactly is the biggest benefit or which is the best loan that users can get. And that is something which needs the blockchain, because all these things can be very transparently built on top of blockchain. And that is where I think use cases such as this would be becoming one of the very normal things in the AI and the crypto side.
Point taken. Ashwari, I have a final question. And just going back to what you said, that when you use blockchain and when you start using Web3, cryptocurrency or token becomes just an integral part of it. Are we calling this cryptocurrency anything right now? Because there have been various speculation on that as well.
I cannot comment on that basically because like we are still kind of finalizing on what are the products and everything like that. So, but yeah, I think the way we look at it is like there would be some use cases which would leverage tokens. How they're used is something that is still to be disclosed, that is still to be finalized, and that is where I will leave it.
We take that point. A lot of curiosity around that one. Thank you for answering all those things. We will wrap up on this new, edition of Halftime Report with the news that the market is holding on to its gains. 150 points on the Nifty. In the last few minutes, we've seen a big surge come by on a name like United Spirits. Remember, was under pressure at the start of this week on account of a leadership change that came by with Hina Nagarajan deciding to move on. And currently, the stock has moved to the high point of trade. So keep an eye out on United Spirits. We'll take your leave on that note and have the Business Lunch team take over on the market action after this break.
end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, you know, we need support or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that, you know, there are a lot of youngsters who are doing really well, but, you know, not able to prove themselves. I think leagues, now if you see there've been Coco, and then there've been tennis and pickleball, a lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues, you know, a lot of people get a recognition in terms of, you know, they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that yes, even we can do it. Because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leagues that like these will definitely help them to come up and you know, think that yes, you know, we also have something to actually look up to.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Stocks not summer gains led by heavyweights amid uncertainties over policy actions by Donald Trump after he takes charge as US president today. Telecom and financial see big gains while healthcare and FMCG drag. Kotak Mahindra Bank scores on all counts in Q3 with margins, asset quality and business growth surpassing street expectations. Brokerages upgrade the stock. Wipro grows faster than expected in Q3 and achieves its margin aspiration of 17 to 17.5%. A revision in capital return policy to 70% or more from 45 to 50% earlier also instills confidence. Now stock climbs on the back of this. CNBC-TV18 learns the government is considering waiver of AGR dues from Vodafone Idea and Bharti Airtel. The government waive the AGR penalty and interest dues, and the move comes on the back of a 2024 Supreme Court ruling that upheld the government's AGR demand. Donald Trump is all set to return to the White House as the 47th U.S. president tonight. Reports suggest a flurry of executive orders are set to be unveiled in his first few days of office. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A quick look at what the market is doing today. We're managing to hold on to the green. So good Monday morning that is coming in. Nifty holding on to 0.5% trade. Bank, that's holding on to good gains as well of more than 1%. PSU banks, let's look at that. That's the outperformer coming in as well. I beg your pardon. So PSU banks, that's holding on to very good gains. Now, mid and small cap managing to perform in tandem with the benchmark indices. So let's keep an eye out on that. Nifty mid cap as well as a small cap, both holding on to gains of 0.6% approximately, recovered from the day's lowest point. Small cap also trading at the day's highest point right now, 0.8% of gain that we're seeing coming in there. What's among the top drags today that are coming in is the Nifty Auto. That's not managing to do well, and that is among the top sectoral losers that we are seeing coming in terms of the trading session today. So yes, a lot of individual movers also that we're seeing in terms of the back of the earnings, and that is what we'll talk about today as well. Kotak Mahindra Bank, let's pull that chart up because that's doing quite well in trade. 9% uptick in today's trading session. So strong up move that has come in because they reported a better than expected Q3 result this time. Abhishek is here to tell us more in terms of the earnings fine print, what the brokerages are saying as well, and 9% uptick. Why is that so? Abhishek, take it across.
Well, Kotak Mahindra Bank reported a Q3 FY25 performance, which was across various parameters much better than anticipated by analysts on street. So analysts were expecting a decline in net interest margin by about 5 to 6 basis points sequentially. But on the contrary, the net interest margin has actually expanded by 2 basis points sequentially. Slippages declined quarter on quarter versus analysts' estimate of rising slippages on a sequential basis. So that's helped the gross NPA ratio come down to 1.5% versus 1.56% in the previous quarter. Even the business momentum was better than analysts' expectations. So deposit growth was at 15.9% YOY versus Motilal Oswal estimate of about 15% YOY. While advances growth was at 15.1% year on year, while Motilal Oswal anticipated advances growth of 14% year on year. With reference to the PNL versus ARPOL, it was a beat across NII as well as PAT. Brokerages have upgraded the stock, or they remain bullish on the stock. Citi has written on Kotak Mahindra Bank. They have a buy recommendation, target price of 2,070 per share, and they say that their 90 days positive catalyst watch remains open on Kotak Mahindra Bank. ICICI Securities has upgraded the stock to buy from hold, increased the target price to 2,050 from 1,850 earlier. While Anand Rathi has also written on Kotak Mahindra Bank. They have upgraded the stock to buy from hold, increased the target price to 2,010 per share from 1,950 that they had earlier. Back to you.
Thank you so much for that, Abhishek. But that's not only Kotak Mahindra Bank that's reacting positively to numbers. Today we have Wipro that's reacting to a good set of numbers in Q3. It was a beat on revenue and margins in terms of constant currency. Also, the revenue growth at 0.1%, better than what the street was expecting. Now, the guidance of the company also was revised. The capital allocation policy was also higher. And we caught up with the management of the company to discuss their Q3 performance. Let's listen in to the conversation.
As in Q3, I think the team has come together. There has been a significant rigor into execution, helping us with both on the top line and also on the margins. We see the discretionary spend coming back, but slowly. In terms of the specific industries, I think banking, financial services is definitely right there. And typically, if you have seen when the discretionary spend comes back in banking and financial services, other industries catch up. I think that's what we are waiting and watching at this point in time.
As we get into Q4, we feel confident about holding these margins in a narrow band. And after that, it's a set of factors. Hopefully the revenue environment improves. And we also need to invest for the growth. So these will be the two big factors that will play out for improvements from here on.
Let's move on, and the government is considering telecom industry's demand for AGR waiver. Now, CNBC-TV18 has independently confirmed the news report. Asmit is joining in with us to give us that detail.
Well, clearly this has been a long pending demand of the industry. The industry, suffering repeated setbacks at the hands of the Supreme Court, had turned to the doors of the DOT, the government, to grant some relief. Now, since the September 2024 decision by the Supreme Court, which closed the chapter on the Supreme Court proceedings, rejecting the curative application, there were concerns raised by the affected telecom players before the DOT, and that is what the government has chosen to respond to by way of considering the submissions that have been made. Bear in mind, the figures are mammoth as far as the industry is concerned. Vodafone Idea, with the staggered interest payments, that figure, that AGR demand figure, has stacked up to north of 80,000 crore rupees. Bharti Airtel is somewhere in the neighborhood of about 42,000 crore rupees. And these figures is something that they're competing with, that they're struggling with. And towards that end, the government is contemplating, not deciding as of yet, but contemplating waiving off the penalty and the interest component of the AGR demand. The AGR demand had a principal, an interest and a penalty component. The government is considering waiving off the penalty and the interest component, either fully or partially. That is under consideration. But there are a few aspects to bear in mind. Number one, the Supreme Court repeatedly in 2019, 2020, 2021, then subsequently in 2024 has dismissed any and all approaches being made by the telecom companies to dilute this demand, to readdress this demand, to recompute the demand. In fact, the only relief that they've allowed is a moratorium and a staggered payment, and that too with an interest component, so that the net present value is maintained. That is importantly something to bear in mind. That moratorium runs out later this year. Those payments start kicking in September 2026. And finally, the third aspect, that if at all a waiver is granted, this would be relinquishing of public funds by the government to the private sector. That is something that is going to weigh on the minds of the government as they go about the various levels of approvals that may be required for this decision. So no timeline yet, no final decision yet. But yes, the government is considering if at all a relief can be granted to the telecom sector. Back to you.
Okay, thank you so much for that, Ashpit. Now, the much-awaited budget session of the Parliament will begin from January 31st. The budget session will begin with the President addressing a joint session of the Parliament. The first part of the budget session will be completed by 13th February, and after the Finance Minister Nirmala Sitharaman presents the budget on 1st of February. The second phase will start on March 10th and will continue till April 4th.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back to Business Lunch on CNBC-TV18. Now, ahead of his inauguration, President-elect Donald Trump addressed his supporters in Washington, D.C., where he promised to make America great again. He also visited a fireworks show and paid tribute to the fallen soldiers at the Arlington War Memorial. And for more on what to expect today, we have Sanjay Suri joining in with us.
President-elect Donald Trump will visit White House on Monday morning and together with Joe Biden drive to Capitol Hill where the inauguration ceremony is due. It hasn't always gone to plan. It didn't last time. Trump refused to do that and Joe Biden went to the ceremony at Capitol Hill on his own. But the idea of the two going together is to make a demonstration that the transition has been smooth and democratic and the way it should be. The oath-taking ceremony will take place in the Rotunda room, which is a round room directly under that dome there, and that does mean there's limited space. It's only going to be those with tickets for the presidential platform and members of the Congress all standing. A lot of people who were ticketed to attend that ceremony in there will not be able to join that ceremony for that reason. Both the Vice President J.D. Vance and President Trump will be sworn in. First, it will be J.D. Vance just before 12 noon, and then at 12 noon, Trump will be sworn in as president. He'll be given the oath of office by John Roberts, who is the Chief Justice of the Supreme Court. The oath is really quite simple. President Trump will then swear to uphold the Constitution and to carry out his duties faithfully as the executive head of the government. Following that, there will be the national anthem played by the Marines and then a 21-gun salute, at the end of which President Trump then will give his inaugural address. At the very end of the event, a helicopter will fly Joe Biden away. Trump then heads to Capitol One, an indoor venue for an indoor parade and a concert. He will then move to the White House to sign a whole lot of orders waiting on his table. And aren't we waiting to see what these will be?
Okay, thank you so much for that. Now, among the many key issues, all eyes are on Trump's immigration policy and what it could mean for the H-1B visa applicants and holders. Here is a view from the chair of India and Emerging Asia Economics at the Center for Strategic and International Studies, Richard Rosso.
And it is an area that I think, unlike illegal immigration, is up for a lot more debate within the Trump camp. We've seen that spill over in recent weeks. You know, you've got some of the nativist groups that support Trump and want to see immigration stopped at every turn. But you've seen Trump actively engaging and courting a lot of technology companies. You know, some of the sort of kitchen cabinet that's been spending time with him down in Mar-a-Lago and is expected, including, you know, playing some roles in the new government. They are very supportive of keeping the pipeline open on H-1Bs. So when you think about Trump and some curbs on immigration, illegal coming from the southern border, that is by far for his driver what's going to focus, be the main focus. On tech workers and H-1Bs, there's a pretty vibrant debate, and I know how that probably looks in India, but it is an area that within Trump's own camp is going to be heavily debated.
Now, a host of global leaders, including industrialists and diplomats, are going to be present for the inauguration. Reliance Industries chairman Mukesh Ambani and his wife Anita Ambani will also be attending the second inauguration, which will be graced by America's most influential billionaires, politicians, foreign dignitaries as well as celebrities. Now, the Ambanis joined a select group of just 100 guests for a private candlelit dinner with Trump. The Ambanis were the only Indians present at the dinner, which saw Vice President-elect J.D. Vance and his wife Usha Vance meeting the Ambanis. Mukesh and Neeta Ambani will be attending the inauguration on January 20th as personal guests of the Trump family. And as we slip into the break, here's some good news for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, new in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store and Google Play Store, or just scan the QR code on your screen.
The Republicans are actually becoming the mainstream party, and which is unheard of, especially, I shouldn't say this, for a Republican. The Republicans are actually becoming the mainstream party, and very important.
See, the market is still going to be very small, right? Because there are infrastructure, ecosystem level issues that are yet to be sorted out. Whether it is charging or swapping or anything else, that still needs to be sorted out. So we are not looking at market share. It's not a market share game as yet. What we are focusing on is completing the whole variety of products. We are looking at maturing the technology. So when the market is ready, Ashok Leyland should be at the forefront. See, our capex normally is between 500 to 800 crores, and we would, I think, stay within that number. But more and more capex is now shifting towards cleaner fuels and electric vehicles.
Welcome back to Business Lunch on CNBC TV18. Now moving on to the latest updates that are coming in from West Asia. Hamas has released 3 hostages while 90 Palestinian prisoners were released by Israel as a part of the phase 1 of the ceasefire deal. NBC's Richard Engel is bringing us more updates from Jerusalem on this.
Hamas fighters were out in force for the hostage release in Gaza City. There were hundreds of militants on the streets. For Hamas, this was also a show of strength. Then the Red Cross, the designated intermediary, arrived, their convoy approaching slowly. Thousands of Gazans came out to watch. The Red Cross and Hamas vehicles parked right across from each other, just yards apart. So the exchange would be quick. No parading of the hostages out in the open. Hamas released its own video of the handover. The women were transferred to the Red Cross vehicles. Then they were driven into Israel and received by security forces, free and safe at last. And after 15 months, their mothers and other family members were on hand to embrace them. Roni Gonin, kidnapped from the Nova Music Festival, where 364 people were killed. Daron Steinbrecher, a veterinary nurse, kidnapped from Kfar Aza, a kibbutz near Gaza. And Emily Damari, British-Israeli, kidnapped from the same kibbutz. In Tel Aviv, thousands came to what's become known as Hostage Square to watch it all unfold live on a big screen.
And word has just come that they are now safely inside Israel. Romy, Daron, and Emily, everyone here knows them by their first name. Many people consider them almost like members of their own families.
There were tears and celebrations. But no one said it's over as long as dozens of hostages remain captive in Gaza.
We want all of them to come back. We want all of them to be here. And just like, it's our mission.
In Gaza, for the first time in 15 months, Israeli strikes have stopped. As part of the deal, aid trucks flowed in. So much is needed. Gaza is in ruins.
Let's move on. The role of AI is not to replace humans, but to augment them. That's the message from the World Economic Forum ahead of the Davos huddle. Kathy Lee, who heads AI, data and metaverse policy at World Economic Forum, pitched for human-centric AI policies. Listen in.
It's all about AI. I mean, we're talking about collaboration in an intelligence era, which is the overarching theme. And I walked down the promenade, which I did. Literally everyone has some sort of AI that's up for attention.
Yeah, absolutely. It's a trend that's been continuing for the last 12 months. And if you think about last year, it was very much about how AI is applied in the industry in terms of cost cutting, incremental efficiency gains. This year, actually, we're seeing hard numbers and real, real statistics. For example, the companies that's leading in AI adoption are seeing a 15% in revenue growth, and this growth will continue at least until the end of the decade. At the same time, this growth, if you think about it, could contribute up to $7.6 to $17.9 trillion to the global economy by 2038. And this number actually has been backed by our upcoming AI Transformation of Industries report series that we're going to publish on Tuesday.
Well, those are big numbers, but that's also a very wide range, Kathy, to go from 7 to 17. Exactly. What will it take to go from 7 trillion to 17 trillion in terms of gains?
That's an excellent question, because we believe to be able to capture the upper end of the value, the economy needs to be built with human-centric. What we mean by that is AI cannot be replacing human. It needs to be augmenting human, augmenting the skills that we have now. Humans will not be replaced by AI, but it might be replaced by humans who actually use AI. So that's the core message. And AI cannot be applied in this kind of a cookie cutter kind of fashion. You need to look at each country, each region, what are the strengths, where can you apply AI to actually get the maximum gains. Similarly, within the organizations as well. We now have, I think, up to 74% of the companies are using AI in some sort of functions, but many of them are struggling with scaling. They cannot move beyond the pilot kind of phase. Yeah. At the same time, there's only like 16% of the companies who are fully prepared. So to really move the needle, you need to make sure that most of the companies and the industry sector and countries as well be able to really look at what is my strengths, what is my weakness, where can I use AI to augment human instead of replacing. That's how we can get the maximum gains.
Okay, that's all the time that we have on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. Up next, Midcap Radar.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to U.S. inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. Is it? This is the first India pavilion, so to speak, India Bharat, and as I point Hello and welcome to CNBC-TV18's continuing coverage here at Davos 2025. I'm Shireen Bhan. One of the sectors which has seen a fair amount of interest as well as regulatory change in India and potential regulatory change in India is the insurance sector. To talk about the future for the industry but also for his company, joining us now is Tapan Singhal of Bajaj Allianz General Insurance. Tapan, always a pleasure. Many thanks for joining us here on CNBC-TV18. Well, before I talk to you about the outlook for the sector, let's talk about the outlook as far as the alliance is concerned. You have, of course, gone public to say that Allianz has expressed its interest or its intention to exit the alliance. It's an alliance that dates back over 2 decades. Why is that?
First and foremost, always a pleasure, honor to speak to you, Train, and good to be here. So if you look at, it's been a very strong partnership, very strong partnership, and an amazing company has got created by Allianz, which has close to 15 crore customers, one of the largest companies in India. It got very, very well. Technically, we see that the problem, the one with the majority control can roll it up to their balance sheet. India being a big market now, if you look at for the insurance market, it's already the 10th largest, going to become the 5th largest or 3rd largest, depending on how the economy moves, is going to move there. Now, if you are a good international player, why would you miss the opportunity of consolidating it in your balance sheet?
And now the FDI regulations allow them to go it alone.
Exactly, yeah. So if that be the case, this would be something which I would see more happening in the Indian market now, more closely. But having said that, as of now, nothing has come to the board. It is an intent that they have expressed. So let's see how it works
out. But is there still room for discussion and negotiation to keep the alliance going?
As I said, very strong partners together. But this is a question that you should ask the shareholders. The wrong person asking to answer this question. But as I said, an amazing company got created, and the issue would be that on consolidation of balance sheet. And we have seen it in the past also happen for some companies in the Indian market. And the future also we should see this happen, because why should you not roll it up to your balance sheet, with India being such an important market?
Well, that's a fair point that you make. And since you talked about the growth of the Indian market as well as the expectation that it's likely to become the 5th largest insurance market in the world, do you believe that this, in light of the FDI regulations changing, this is a sector that is ripe for more investment, for more FDI, and for more global players looking at starting up in India?
It will happen. See, if you look at US, has close to 6,000 insurance companies, You look at India, it's just about 60, 70, for a market like India, which is a huge market with penetration which is as low as about 3 to 4%, the opportunity and the growing market, the opportunity to set up very good insurance companies is huge. So I'd be surprised if India does not see at least 1,000 insurance companies in the near future.
1,000 insurance companies in the next 5 years?
Give it a 10-year period, because what will happen is initially it's a trickle. People see the exceptional results of the companies that are there, and then they start coming in. So give it a decade, and I would be surprised if I don't see that coming.
Well, that's the long-term outlook as far as the business is concerned. Let's address some of the near-term challenges and concerns as well. And the question mark on GST. Industry has been making representations. This matter was taken up by the GST Council in its last meeting. Of course, now a decision has been made to seek feedback from the regulator as well before the final call is taken. What is it that you believe is the need of the hour? What will work as far as industry is concerned, but also achieve the objective of penetrating to a higher degree the insurance sector in India?
See, so when you look at insurance, also look at the social impact it has, in any environment. It's like a social security for a lot of millions of Indians. if you ask my personal view, every Indian should be covered for health, let's say, be it from insurance, be it from trust, be it from government, but everybody should be covered. We're sad to see about 8-10 crores of Indians getting below poverty line every year because they could not afford the healthcare. So it's a pressing need. Now, an 18% GST on something which is so much societal requirement, I think it's a bit too much. It has to come down, and that is the industry has been representing that. Not only this, even a regulator of hospitals is required. So when you're trying to build a good health ecosystem, you should see end-to-end how do you build it up completely. The good part which is happening right now is an exchange which is getting created, a health exchange for claim settlement, where the insurance industry is already plugged in with their APIs. The hospitals have yet to come on board, and the government is leading that initiative. So I personally feel that this should be fast-forwarded to a hyper speed. Because if we want to become a Viksit Bharat, every citizen of India having a good health cover, whichever may be, the government or the insurance industry or the trust mode, whatever it is, should be there. I think that is how it is. No?
So what, as I said, feedback has been sought at this point in time. What would be the appropriate rate to your mind? And more importantly, because this debate is also on, if you bring down the rates, then do you give input tax credit? Should you not give input tax credit? What's your view?
As I said, from my perspective, if you ask me, my view is purely on the customer. No, if it becomes zero, I'm fine. No, why should we worry on the income tax credit? But if I look at the majority view of the industry, they are looking at about 12% or so, or 5%. I think it's a very oscillation between these two. But individually, if you ask me, I'm perfectly fine even if it becomes zero, because the objective is that how do you make the whole health ecosystem a very, very viable for every citizen of the country.
So you believe that zero is the number that the GST Council should go with?
They should.
Well, let's talk about growth, but let's also talk about the possibility of listings. You said that over the next 10 years, you expect at least 1,000 insurance companies in India. How many listed insurance companies? Now, this has again been something that the regulator has been speaking to industry about, that the large companies ought to be listed or ought to look at that journey now.
Yeah, so listing is also a natural phenomena because it is supposed to bring in transparency and good governance. I think that is why most regulators look for it. But if you look at the insurance industry, it's actually amazing to see the amount of disclosure the regulator already insists on. So if you go onto the site, even a non-listed company has amazing disclosures which is there. And the governance mechanism put in the regulator is actually pretty good, and the kind of review mechanism that they have is already in place. So with a strong regulator, I think the impact of listing or not listing from a transparency governance perspective is not that huge. Now, having said that, listing is always good as a way forward, and as companies become large, they should be looking at it. And that's why the regulator has been nudging large companies to look at listing.
So where does industry find itself with the regulator nudging it on listing?
Why? They will respect the regulator. So I think they would be thinking about a road plan. They would be putting it together. So in the next, let's say about 3-4 months, you would be seeing road plans coming together in terms of how they're looking at it.
3-4 months, as early as that?
No, in terms of their thought process. Because right now the regulators ask for the thought process. They're not asked for the listing to happen immediately. I don't think that is what they have said. They said there should be a thought process. There should be a glide path. There should be thinking.
What do you believe is the appropriate glide path to listing?
It depends on company to company. I think a company at what stage they are in, how they look at it, depending on promoters, they have to think it together. So it will vary from each company to company. You cannot have a one-size-fits-all for this.
Yes, I would imagine so. But, what's the outlook then for 2025 in terms of customer acquisition, in terms of penetration? How confident do you feel about the year ahead?
So one thing I'm very excited about is the initiative by the regulator of reaching to the Gram Panchayat from a general insurance business perspective. There's something called the Bima Vahak and Bima Vistar getting set up very close now, in which you'll have the distribution network created at Gram Panchayat level. And the product which is coming up is a combination of health, life and the PNC product. The industry is coming together to come with a common product and to ensure that they reach to every village and cover that. That would be a kind of a landmark change in the way the industry has operated in major cities or the tier 1, tier 2 cities, reaching to the villages. So next year that will be very exciting. The second excitement would be the creation of Bima Sugam. I think that also by the end of next year you should see a lot of action happening there. That would be exciting. Third is, I think, as an industry, what we are pushing for is 2-3 things. If you look at, let's say, you saw the California wildfire, no? If you look at the natural catastrophe in India also, you saw the Sikkim floods, you saw. But if you look at the coverage in India compared to US, when a disaster happens in US, because 95% insurance is there, rebuilding starts happening very well. And the economic growth gets back, and though it's sad, but people again get back to. But India, 90%, more than 90%, is economic loss which does not get recovered, either from the government or from the insurance industry because of low penetration. Now imagine a budding entrepreneur trying to become the next big industrial house of India. His dreams get washed away one evening, one night, and then he's on the road. Maybe he's bankrupt or she's bankrupt, and they don't know how to recover that. That, I think, is one thing which, again, with the government we're working on, like on the part that we're working on for health for all. A simple thing like why can't the employer and employee relationship be made mandatory to have a health cover? US has that, no? That would actually push up the middle concept. How do you make it more viable end-to-end? So the next year, to me, personally, very exciting. There are 4 or 5 big things going to happen. So I think when I see you next year after that, we'll have a lot to talk about in terms of...
So, you know, we've got the budget coming up, and of course we have the next meeting of the GST Council. Which way both will go, we don't know. But what's the expectation as far as the budget is concerned?
One, if you look at it, and I have mentioned again, insurance and government have to work together because the idea is for societal benefit. Now, if you look at the budget, the 2-3 points which is a clear expectation. One, obviously, would be health for all. I think talks have happened. If you look at the election manifesto, quite a few parties covered that. Now we see over 70 years, it is becoming for all. It's high time, if you talk of Viksit Bharat, health for all should be very clearly laid down for the budget should be there. Second, coverage for all the SME, MSME in the country. Because see, they are the budding entrepreneurs. You can't have a Viksit Bharat where entrepreneurs have a setback because of some kind of...
no safety net.
Yeah, no safety net. Then it doesn't work. So that, I think, would be something which would be, again, very, very keen to be seen into, and how do we put that together. Third, obviously, if there is a tax relief for the homeowners. We have seen the losses which happen in wildfires in US, but in India also, what we forget is we have massive floods happening now. And a lot of people lose their savings in terms of content or damage to the home. And what we also forget is there's 20-30 years hard labor, a lot of people, when they put that together. Imagine a person in his 60s or 70s losing his home. Where will he build it again? It's gone, no? How do you put that together? So I think we are able to address these 3-4 things. It will be very, very good for the country.
Oh, well, I'm going to go back to the question that I started with. Life minus Allianz or post-Allianz, as and when that eventually does happen, will you go it alone, or are you in the hunt or searching for a new partner?
No, if you look at the company, first, as I said, on the Allianz movement, you have to ask the promoters. But let us look at the company to understand how the company should or would behave. The companies are a very strong company. If you look at the general insurance company, it's among the top 3 companies, including the government companies in India. It has a massive customer base, about 15 crores, as I mentioned earlier. Last year, the number of policies issued was 3 crores 60 lakhs, the largest issuance of policies in the market. It has a combined ratio which is at least 17% better than the market. It has the highest solvency in the market. It did not require capital from 2008. It has been a self-sustaining business. With such a massive business doing so well, I don't think, and a massive distribution, one of the largest distribution in the market, if you look at it.
You're saying that there is no need to bring anybody else on board.
Such a massive company, I think it is very, very strongly positioned. So I would be surprised if you see something like that.
You'd be surprised if you do decide to enter into another partnership, but I would imagine that many potential suitors have knocked on the door after hearing about Allianz's decision.
That is a good feeling to have. You should always have a huge queue of people looking up to you.
So is there a huge queue of people?
No, I think that's why I said it's a good feeling to have. But I'm not the right person to be able to comment on that because I don't have previous to this information.
Okay, so leave me with 3 numbers that we should focus on for 2025 as far as your business is concerned. You just talked about 15 crores as the number of customers that you have, as well as the strength of the balance sheet. The 3 numbers that we should focus on as targets.
We have done 3 things as a company, and we don't let that go. One, we have always ensured that we try and go over the market in terms of growth. We always ensure that we do the business sensibly and our balance sheet remains strong, because insurance is about strong balance sheets. We always ensure that we are obsessed with our customer and innovate to bring the best to them and transform as many things as possible and get the best of products. So you'll see this continuity happening. Why would there be a change?
Well, Tapan, we wish you the very best of luck. Thanks very much for joining us here in Davos on CNBC-TV18. We wish you the very best of luck, and thanks very much for your time. Well, that's the view on the insurance sector. As we pointed out, it's a sector that is seeing a fair degree of interest and investment on account of the changes in FDI regulations. Of course, there are some sticky issues that require intervention, namely GST, but of course the decision is still pending on that one. We will continue the conversations with a lot more right here from Davos 2025. We're back in a moment. Don't go anywhere. First time that we have India putting its states together technically under two roofs. And what we've seen happen over the last several years is that states have come out here in Davos. So it's of course been the central government, but also increasingly the number of states being represented here in Davos has gone up quite significantly. It used to be Chandrababu Naidu. He was the original Davos man from a state's point of view. But now we've seen Maharashtra, Telangana, in fact even UP now here in Davos as well. Of course, the Chief Minister is not going to be here, but we do have ministers from the UP government who will be here. So this is the first India House, so to speak, and this is going to be home to UP, Telangana and Kerala. So Telangana, Kerala and UP are going to be part of the India House together. And it's also going to be interesting because this is the federal story. This is the beauty of India's federal story. And it's also its strength. So showcasing its diversity and its unity here in Davos will be something to watch out for. With the next India Pavilion, India, which is going to be home to Andhra Pradesh. Remember, Chandrababu Naidu is going to be here. It is home to Tamil Nadu and Maharashtra. So 3 states, so total 6 states here in Davos, 3 in the house that we just saw, which was Telangana, UP and Kerala. And here we have Maharashtra, Tamil Nadu and Promenade and Andhra Pradesh. Devendra Fadnavis, the Chief Minister of Maharashtra, will also be here in Davos, as will Revant Reddy, the Chief Minister of Telangana. So 3 Chief Ministers will be here in Davos. Let me show you what we are saying to the world here. And of course, all of this has been set up by Invest India. So let's take a look at the themes that India is going to be showcasing. We're going to go right inside. The themes that India is showcasing: the Indian semiconductor market is set to triple by 2032. So semiconductors will be part of the story that India is pitching, from silicon to success. And again, we've got Semicon, the mission that the government has announced. We've already started to see investments coming in there. So semiconductors, electric mobility, EVs to account for over 40% of India's automotive market. EVs will be the other big theme that will be discussed here as part of the India story. So this is India, the roadmap to a $32 trillion GDP by 2047. India's economic overview, so some data and numbers and statistics here being highlighted here at the India Pavilion.
Investing.
Welcome back to Mid-Cap Radar. Well, one stock in focus is Supreme Industries. The company just declared its Q3 results, and it's a muted set of numbers from the company, and the stock is seeing a bit of a sell-off. To understand more about Q3, Q4 as well as the way forward, we have MP Taparia, Managing Director at Supreme Industries, to discuss Q3 numbers and more. First of all, thank you so much, Mr. Taparia, for joining us. It's good to have you back on the show. First up, sir, after Q3, would you be revisiting your guidance? Earlier when you joined us, you gave us a volume growth guidance of 14 to 15% year-on-year for FY25 and plastic piping volume growth of 16 to 18% on a year-on-year basis. Both of these were growth numbers that you had given. Would you be revisiting that after Q3?
After Q3, seeing the such a great vagaries in the business,
we now also can declare that our volume growth will be 3 to 4% more on the country's growth. In plastic piping system, we maintain that we may grow between 15 to 16%, and overall the company will grow in excess of 12%.
Okay, sir. So earlier volume growth was 14 to 15%. Now you are expecting at the end of Q4 to end FY25 with a growth of 12%, and piping growth earlier the guidance was 16 to 18%. You are now expecting it to grow in the range of 15 to 16%. First up, sir, can you please clarify that? And number two, the important question is, while there has been volumes that have come in, how have realizations panned out in Q3? Has there been significant pressure on realizations?
No, there was a significant drop across all the polymer pricing. Now the polymer price is stabilized. There is actually a small way they are inching up also. So we do not see now that the price will be coming proper, and we expect this year we will end up with a turnover 11,000 crore plus for the year.
Mr. Taparia, good afternoon. Thank you for joining in. What about margins, sir? Your margins have also narrowed this time around. Do you stick to your guidance that you had given earlier, which is around 14.5 to 15.25% for the full year?
With the inventory loss what we suffered in our stock of raw material, we now anticipate that our operating margin will be in the range of 13.5 to 14%.
Understood that, sir. Sir, give us a sense of demand. We understand that, H1 especially, demand was quite muted. H2, has there been a pickup? And have you started penciling in any growth, or have you started making projections as far as FY26 is concerned, especially in terms of volume growth that you see?
No, I can talk this year. Now we are seeing the demand coming up, but the polymer prices have stabilized. They are inching upward only, and now this is season time. Now the crops are getting harvested. There is a good demand from housing also. On infrastructure, though, we are not a big player. We are not still sure whether the demand will come up big way. But normally in the last quarter of the financial year, the government spend money on infrastructure also. So some demand may come up from infrastructure. We are factoring all the demand posts, and we therefore are confident that we will achieve a turnover growth of around 12%, and our value growth will be more than 11,000 crore plus this year.
Mr. Taparia, you spoke of an inventory loss, if I heard that correctly. What are the current inventory levels that you are working with? And if you could also shed some light on the working capital cycle that the company is currently going through.
Now, working capital, definitely we had a good stock of the raw material and finished goods, which will be all consumed in this quarter. But as I told you, there was a big fall in the price of PVC and polyethylene, which has caused inventory loss. Final inventory loss number we can talk only in the month of April, but the trend is now a little bit bullish. The rupee is also coming down, and crude prices are going up. So we do not see any more possibility of inventory loss. We only see some inventory gain. So correct inventory loss we will talk in the month of April.
Understood that, Mr. Taparia. Mr. Taparia, we want to understand one more thing. In the previous 2 financial years, you actually saw market share gains. As far as FY25 is concerned, given the fact that volume growth has been muted, is it mainly due to demand being weak, or has there been a certain proportion of market share loss as well? Or have you actually managed to gain some market share in this weak demand scenario?
We expect our market share will go up in this year on plastic piping.
Okay, sir. So what is the targeted market share for FY25 end and FY26 if you have projected?
Correctly, I will talk in the month of April, but we are growing more than the market. Our market share will go up due to our expansion, or the brownfield expansion, due to larger number of SKU, more than 14,000 number, and more than 40 system, and larger increase in distribution network. We are confident our market share will go up this year further.
All right, Mr. Taparia, thank you so much for sparing time and joining us on the show today. Wish you good luck for the rest of the year as well. The management of Supreme Industries, 2 big takeaways. Volume growth now seen at 12% from 14% earlier, and the margins are also seen lower at now at 13.5% to 14% compared to the earlier guidance of 14.5% to 15.25% is what the management had earlier guided for the stock that had seen a bit of a recovery after that investor presentation came out, is now back to the lowest point of the day, 3.5% lower there for Supreme Industries. But as we take a short break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app where you get instant access to in-depth articles, financial world updates, and of course breaking news right at your fingertips. You can download the app right away from your Apple and your Google Play Store as well.
Good morning. How are you? Good morning. How are you? Are you enjoying your time in Davos?
Yes, we are going to work.
And what are you looking forward to the most?
Meet everyone and for the betterment of the economy.
For the betterment of the economy.
Of the world.
So what?
You come from India?
Yes, from India. Where are you from?
Punjab, India.
Punjab, India. आप कहाँ से? पंजाब में कहाँ से?
पंजाब से मैं वैसे तो हरियाणा से हूँ, अम्बाला से।
अच्छा, तो आप यहाँ पे कैसे आए?
वैसे घूमते फिरते आ गए।
घूमते फिरते आ गए। बड़ी।
Welcome back to Mid Cap Radar. Well, as you can see at the top of your screen, the indices will just come up in a minute. All of the indices are trading the green. The Nifty Bank outperforming, up almost 2%. And the small cap index too doing quite well. But now it's time for the growth code, an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, CNBC-TV18's Nigel D'Souza sat down with pro trader Rajesh Baheti, Managing Director, Crossy's Capital Services, to understand if algos are the right product for the retail investors. Let's listen in.
Do you believe, Rajesh, algo trading is an appropriate investment tool for retail investors?
What it cannot do is probably not identify good companies, fundamentally sound companies. For that, you need the good old-fashioned analytics. What it does is, based on the price movement relationships that you can backtest over a period of time, you can with some kind of a certainty predict what is likely to happen in the future. And what algorithmic trading also does is it takes the emotion out of the trade so that your stop losses are adhered to, and these trades take place automatically, including the booking of profit and stop losses. So it's more of an exercise that you do when you're trading. Trading is always on some kind of a leverage, and you need that discipline. And what algorithmic trading does is it forces that discipline in your trading behavior.
Well, what about the potential advantages and drawbacks of algo trading for retail investors in comparison to traditional methods of investing?
I think the starting point should be to actually define who the real retail is. Is it a guy with a low net worth? Is it individuals? Is it any other kind of an entity with a certain capability? So before we get into algorithmic trading for retail, I think it would be very, very important to understand what segment of retail are we trying to talk about. And I think it would be wise for SEBI to first define what they consider as retail and what kind of regulations with respect to algorithmic trading that they want for this segment of retail.
आ गए आप तो कब आए आप यहाँ पे?
रहता हूँ,
आप ज्यूरिख में रहते हैं? अच्छा,
20 years living here.
और तो आप ये डावोस में वर्ल्ड इकोनॉमिक फोरम के लिए पहली बार ही आ रहे हैं कि?
नहीं, हम तीसरी बार आ रहे हैं।
तीसरी बार ही आ रहे हैं।
हमारे एक रेस्टोरेंट है खान्स तारा के नाम से
जी,
तारा रेस्टोरेंट इंडियन।
हाँ,
तो उसकी कैटरिंग करते हैं हम।
अच्छा, तो क्या खिला रहे हैं आज आप डावोस में? क्या है मेन्यू पे, क्या है?
आप आए?
Well, that's lovely.
ये हमारे शेफ हैं जी दोनों।
नमस्ते जी, बहुत आपको शुभकामनाएं। आप कुकिंग करने वाले हैं और काफी लोगों को खाना खिलाने वाले हैं। तो
हम लोग
शुरू हो गए तो
आपको काफी फॉलो करता था मैं। लास्ट ईयर का गीता गोपीनाथ का इंटरव्यू पढ़ा।
थैंक यू जी, थैंक यू सो मच। इट्स वेरी नाइस टू हियर दैट यू वाचिंग CNBC TV18।
कभी इंटरेस्टिंग होता है आपका 2-3 काफी
नहीं, बहुत अच्छा लगा आप लोगों से मिलके। एंड वी विश यू ऑल द वेरी बेस्ट। बिल्कुल जी, इंडिया वालों को अब नमस्ते, सत श्री अकाल।
हमें कुछ सक्सेस हो जाए।
जरूर होगी। आपको बहुत सक्सेस मिले और बहुत शुभकामनाएं।
मैं ऑलरेडी किया कि promenade is captured by the
Indians. Yes. हम पहुंच ही गए। आप बिल्कुल भारत के सामने, और आप लोग को भी डावोस के लिए बहुत शुभकामनाएं। एंड थैंक यू। बिल्कुल खाएंगे जी, बिल्कुल खाएंगे। थैंक यू इंडिया की तरफ से। थैंक यू सो मच।
This is the first look at the new electric Vitara, which has been launched by Maruti Suzuki. It is a completely ground-up electric vehicle. What this means is that it has been developed from scratch and it's not been adapted from its ICE cousin. Now, what we know about this car is it comes in 2 battery packs, 49 kilowatt-hour battery pack and a 61 kilowatt-hour battery pack. The top variant can actually give you a range of 500 kilometers in a single charge. So that is comparable with the Mahindra SUVs, electric SUVs, which have been launched. That will also give a 500 kilometers plus range. Now, there are 10 color options for a customer to choose from. There are changes on the exterior. It's got a more muscular look than the current e-Vitara lineup. It's got a long wheelbase of about 2,700 millimeters. On the inside, well, there is a lot of excitement of what this will offer. It's got a fully digital cockpit. You've got ADAS level 2. You've got over 60 telematic features. You've got a rotary knob to choose normal, eco or sports mode for that matter. You've got a twin deck floating console in the car. You've got ventilated seats. You've got 360-degree camera. The passengers in the second row get leatherette bucket seats.
Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Your Stocks with me, Vinny Motiwala. Markets managing to hold on to good gains. Nifty is holding on about the 23,330 levels as of now. 0.5% of gain is what we're seeing for the Nifty 50, comfortably recovered from the day's lowest point. Look at it. At one point of time, it was in the red, and now it's recovered there. Now, we also have some of these big names, especially private banks, that are doing well. So if you pull up the Nifty Bank also, that's an outperformer holding on to gains of almost 2%, and specifically led by Kotak Bank, which is seeing a strong gain. That is among the top contributors that are coming in for the Nifty 50. Other than that, we have ICICI Bank as well as SBI, Bajaj Finance and HDFC Bank among the top contributors for the Nifty 50. So that clearly indicates that this contribution is coming in from the financial service of the private bank side. And we have PSU Bank, Nifty PSU Bank, that is also managing to hold on to very good gains. What's not doing well today is when you look at it, it's the auto side. So Nifty Auto is down, and in that, among the top drags that we have coming in, M&M is not doing well and not managing to hold on to gains. Other than that, TCS as well as ITC in the Nifty 50 that are not managing to hold on to gains. But yes, that's how the market is looking like as of now. This is a show where we solve all your stock-related queries, and today we have joining in with us Ashish Kayal of Wave Strategy Advisors, as well as Gaurang Shah, Senior Vice President at Geojit Financial Services, joining in with us. Good afternoon, gentlemen, and thank you so much as always for joining in with us. And I'll get started with the first query for today. We have the first query on LTI Mindtree. Now, Suresh is writing to us from New Delhi. He wants to know whether he should invest in LTI Mindtree and wants to know the future prospect of the company. Gaurav, on the fundamentals, what is LTI Mindtree looking like? We've seen a whole host of earnings also coming out for other IT companies as well. So LTI Mindtree, how is that looking?
Well, thank you, Vinny, for having me on the show. Good afternoon to everyone. On the numbers front, there was a slight bit of miss, and we believe that it could be one-off. But if you look at the cumulative YOY performance, then our sense at Geojit is that most of the mid-cap IT companies have done relatively well compared to some of the larger boys over a longer period of time. I'm not talking about 1 or 2 quarters. On the fundamental side, we have a buy and a hold on LTI Mindtree. And the targets that we have set aside is somewhere close to about 3,665, with the caveat that in case if the numbers delivery improve going forward into the fourth quarter and the new financial year, then these targets would get revised accordingly.
Okay. That's the word coming in from Gaurang on LTI Mindtree. On the charts and technicals, Ashish, what is LTI Mindtree looking like? Very muted performance in the last 6 months anyways in terms of a stock move. So now what are you watching out for? Is it a good time to enter this one?
Afternoon to you and all the viewers. Yes, if you look at the stock, I think since many weeks, the stock, or many months rather, the stock has not moved much. It has a very important support which is placed at 5,600, and it has failed to break above the hurdle of 6,100. So it looks like forming a triangle pattern over short term. And I think move above 6,100 is going to gain some, get some momentum on the stock for the rally towards 6,600 levels. So as of now, I would recommend to continue to hold if you have position, or if you want to enter, then at least wait for some time. Let the stock give a positive breakout on the upside, and then we can aim for 6,600 over short term with a support on the downside of the stop loss at 5,700 levels.
Okay, keep an eye on those levels over there for LTI Mindtree. Let's move on to the next query for today. We have ICICI Bank. This is the stock the viewer wants to know on, and the query is coming in from Meena Sheikh, who's writing to us from New Delhi. 35 shares of ICICI Bank is what she's holding. This is at a price of 1,000 rupees per share. Wants to know whether she should continue to hold this or look to sell. She's making some bit of a profit here. Kotak has reported a good number. Gaurang, what are we watching out for in terms of ICICI Bank? Should the viewer continue to hold this, and could we see that run-up that we're seeing in Kotak today? Something similar expected for ICICI Bank.
Glad that you brought up Kotak, because a lot of people wrote an obituary for Kotak for the second quarter, if you recollect, including IndusInd Bank because of the AMFI exposure. And now look at the turnaround. 3 months down the line, third quarter, you have a 9% plus uptick on Kotak Bank. Now coming to ICICI Bank. Well, we've been maintaining a positive stance on ICICI Bank for a pretty long period of time. She holds 35 shares at 1,000 rupees. If she's having a long-term view, then my request to her would be that please don't be satisfied by just having 35 shares. Even at current levels, if you have investable amount and if time is by your side, that means if you have a long-term time horizon, my advice would be to add on to it, and possibly as and when you have accessible investable amount, you can go on adding to the investment and take it to the higher level. Our targets are 1,450. We are of a strong belief, Vinny, that for banking sector overall, private as well as public sector banks, things are are likely to improve at a much better run rate, and that would translate into better earnings, which would translate into price revision upwards.
Okay, and your view on this, Ashish, ICICI Bank?
The ICICI Bank is standing at a very important support, and I think there has to be a bounce back from around these levels of around 1,200 and 1,180. So these are the important support levels. I think it's definitely a buy, and one can continue to accumulate at these levels. We are expecting ICICI Bank to move towards the level of 1,340 on the upside. There can be some short-term volatility that can be observed, but overall, the trend for the banking space should eventually move on the upside. And on the downside, the support, very important support, which should not breach for the stock to remain in the positive territory, is around 1160 zone.
Okay, let's move on to the next query for today. LIC Housing Finance, that's the stock that we'll talk about. And Rahul Vardhan, who's writing to us from Noida, 83 shares of LIC Housing Finance is what they are holding. And this is at a price of 585 rupees. So making some bit of a loss here. Wants to know the level for this one, specifically on the technical front and the one-year view on the stock as well. Technicals, Ashish, let me come to you first. For LIC Housing, how is it looking like on the charts and technicals? Does it merit the viewer to hold it for a time period of 12 months now?
See, on the technical front, if you look at LIC Housing, it is very near to the support which was made on the 4th of June election period time. And that support comes around 540, from where the stock is attempting to show a bounce back on the upside. So I would suggest continue to hold on here. 540 is a very important support. Use that as a stop loss. And we can expect the stock to go towards the level of 660 or 670 on the upside over near term. So continue to hold on is my recommendation. But at the same time, maintain a strict stop loss, because if it breaks that election day low, then there can be some selling pressure intensifying here.
Okay, and Gaurang, your view on LIC Housing Finance, the viewer has a time period of 1 year is what they want to hold on for now. So specifically for this 12-month period, anything exciting, or should the viewer just get out of the stock now?
I don't think so, Vinny. I think you need to give time to your investment in stock market, and you should not tie down a particular time horizon. Now, in case if the time horizon can be extended from 1 year to maybe a little bit more, we have a target of 750. Yes, the stock has not done much in the last 1 year, but things are looking a little bit more positive in terms of the budget announcement for real estate sector and the performance of real estate sector. More importantly, Vinny, we believe that interest rate cuts in India could be around the corner if we have the data points on the positive side as far as inflation is concerned, which is the biggest worry for the MPC as well as the RBI governor. But things are looking a little bit positive over there. So give it a little bit of more time. 750 could be the target.
Little bit more time than just here is what Gaurang is saying. Wait for it. 750 is the target that he's highlighted as well. But on that note, we're going to slip into a short break, and here's some good news for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from Apple Store as well as Google Play Store, or just scan the QR code on your screen.
Now, the charging time for this car with a fast charger would be about 40 to 50 minutes. With a slow charger that you would find at your home or in other places such as in your office would take about 5 to 6 hours for that matter. When does this car really hit the market? Well, it'll be exported first. The production begins in March or April. Perhaps by June, you will get it in India. And in terms of pricing, well, that's something that people are really excited about, but disappointing that Maruti did not come out with the pricing. But we're told that considering that the EV SUV price point in India is now around 15 to 20 to 25 lakhs, the company, Maruti Suzuki, will price the e-Vitara also very aggressively. With Bureau Journalist Akhilesh Singh from the Auto Expo, this is Parikshit Luthra. We're at the Hero Motorcorp Pavilion. The company has launched 4 new products, 2 new scooters, 2 new motorcycles in the range of 86,000 rupees to 1,80,000 rupees. But one of the products that is really catching a lot of eyeballs is the Surge, the Hero MotoCorp Surge vehicle. It looks like a three-wheeler, but is it? Satyendra, why don't you show us what this vehicle can actually do? Have you ever seen a scooter detaching itself? Satyendra is detaching itself from us. Yes, now you have a two-wheeler. So if you want to use it as a passenger vehicle to ferry around commuters from one point to another, you can do that. Also, if you want to leave the three-wheeler at home in the evening, use this as a scooter for your shopping or family time, you can do that as well. And this is not just in the commuter segment. You also have a cargo variant of this. Here you have the Hero Surge in a cargo variant. Here you can keep boxes, any e-commerce delivery items, fruits, vegetables, and you can use this for last mile mobility and delivery. Even this one gets a scooter which you can detach and use independently. So a very interesting concept, a literally two-in-one vehicle, so to say. It's called a class-changing vehicle developed by Hero MotoCorp over the last few years. The company may launch this formally in the middle of 2025. While it is an interesting concept, it remains to be seen how the customer and how the e-commerce market actually accepts it. With Veer journalist Akhilesh in New Delhi from the Bharat Expo, this is Parikshit Luthra.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a
Welcome back, and you're tuned into your stocks on CNBC-TV18. We still have our experts with us, Ashish Kalang as well as Gaurang. We're here to solve all those stock doubts. Let's move on and keep it going with the queries then. We have Deepak Shetty, who's writing to us from New Delhi. He's holding 500 shares of PCBL. This is at a price of 390 rupees per share, making some bit of a loss here. And other than that, he's also holding TD Power. This is at a price of 410. So in this also, he's making some bit of a loss here. Now wants to know whether you should continue to hold this or maybe look to average out on this front. Ashish, your word on both these stocks, PCBL as well as TD Power.
See, if you look at PCBL, right now the stock I think is trading around 360 odd levels, and we have seen some selling pressure from the highs of 480, and the stock has come down to 360. We can clearly see the stock has made a lower high, lower low formation very clearly. The fall has been with higher volumes, so there is no sign of reversal as of now. I would recommend from these levels, it's better to be out because we are not seeing any kind of a positive reversal, and the overall weekly trend has also turned on the downside. So the recommendation will be out from PCBL as of now. And as far as CG Power is concerned, the stock has shown a very smart recovery from the lows of 600, now around 676 levels, and it has managed to give a close above that 10 days average. So there is a possibility we might start seeing some short-term positive movement on the upside. The target will be around 76.
TD Power.
Okay. TD Power. Okay.
Yeah.
Just a second. I was looking at CG Power. So the TD Power is quoting around 406, and the stock is moving in the form of spike. So my recommendation will be to be out of this stock. The volumes have been erratic. There is no systematic movement that we are seeing here, and the stock has collapsed from 460 to the low of 380. And showing an upside flag kind of a pattern, which is a bearish pattern. So recommendation will be better to be out from TD Power Systems.
Okay, better to be out from TD Power Systems as well. Gaurang, your view on both these stocks, if they have a long-term view, does it make sense to hold both of them, maybe look to average out, or you would also say get out of these stocks?
Vinny, look, you can get stuck with investments in stock market. There's nothing wrong about it. But what kind of remedial steps you take in an appropriate time, that's going to be very, very important. And what strategies you put in place. Now, on PCBL and TD Power Systems, we don't have a specific coverage. So I won't give a direct buy, sell and hold. But just in case if the investor is also is open to the alternative investment ideas. Then my first preference would be Zomato, which has corrected and is now showing sign of revival. We have a positive coverage over there. And the second stock that I would possibly recommend is KC International, which is the mid-cap cap goods engineering stock in place of TD Power. This is all subject to the investor being open to an alternative investment idea.
Okay, that was a query coming in on PCBL and TD Power. But yes, we're going to move on and a quick look at the markets. They're managing to hold on to gains of 23,300 levels. Banking side specifically holding on to gains. But let's go across to Shireen Van, who is in conversation with Ian Bremmer, president and founder at Eurasia Group at the World Economic Forum in Davos, to get us some exciting insights there. Shireen, over to you.
Welcome back. You're watching our continuing coverage here from Davos 2025. I'm Shireen Van. The big story here is President Trump. This is a Trump Davos, so to speak. In a couple of hours from now, President Trump and the inauguration ceremony will kick off in the U.S. and all eyes on what he's likely to do on day one in office. Joining me now is a man who understands politics as well as the implications of what a Trump 2.0 era could possibly mean for the world. Ian Bremmer, it's great to have you back on CNBC-TV18. Thanks very much for joining us. As I said, it's all about Trump this time around, isn't it?
It is, and there are lots of reasons for that. One is because he's in a much stronger position in the United States than he was in 2017. This was a bigger win for him. He got the popular vote. He has legitimacy. The Democrats were saying he didn't deserve to win. It was the Russians in 2017. Yeah. This time around, they recognized, nope, he just won. And he won even after all of the impeachments, even after all of the cases. So, I mean, people wanted this. This is what they wanted. And furthermore, around Trump, you have all of these loyalists. There's nobody like Mike Pence. There's nobody like Jim Mattis or Mike Pompeo. Trump doesn't feel he needs the imprimatur of establishment Republicans, and he did. In his first term. So this is an administration where what Trump wants, he's going to get. And that means other leaders that don't like it don't have other people they can work with to engage with and say, well, can't we find another way? No, no, no. You're right. It's the Trump Davos because it's so much more about him as opposed to about the election, the administration, and how the world is changing.
So a stronger Trump, what does that mean as far as economics are concerned? I mean, through the case of his campaign, we've heard him talk about what he intends to do as far as tariffs are concerned. How's that going to play out, whether it's 10, 20, or 60%? But from an economic standpoint, a stronger Trump, what is it going to mean?
Well, of course, it comes at a time that the U.S. has a strong economy as well. Coming out of the pandemic, the Americans are outperforming the entire G7 by a long margin. So that means other countries are really concerned about getting into a fight with Trump, about having him focus on them. Interest rates are, of course, higher now than they were. So there's not as much fiscal space for a lot of these countries to do what they want. Indebtedness is a problem. And China today is running a $1 trillion surplus with the rest of the world. It's the only part of their economy that's working. So in other words, this is a much better time for Trump to be walking around saying, I'm going to hit you in the face if you don't do what I want. So he's going to get a lot of wins. I mean, like the first win he got was...
How confrontational do you expect him to be? I mean, from Canada to Greenland to China, I mean, everything's on the table at this point in time. How confrontational do you expect him to be?
I think the opening salvos are meant to shock. It's meant to say this is the law of the jungle, what I call a G0 world, where he's the apex predator. And, that's not a bad place to be. If you're the United States and if you're Trump, you're going to get a lot of wins that way. So, yeah, I expect that plenty of countries are going to do what Mark Zuckerberg did. Change his business model, change the people around him, and say, sure, yeah, we can work with you, we can work with Elon. I think that's exactly what we're going to see from a lot of American allies. And we might see it from adversaries, too. We already saw a ceasefire in Gaza. I don't believe that ceasefire happens if Kamala Harris is president. So, yes, Biden set it up. He did the grunt work, the groundwork over the past few months, but Trump is the one that came in and was prepared to hit the Israelis and the Palestinians harder and was credible in doing so, that forced a deal that otherwise wouldn't have gotten done. I think you're going to see that on the economic side with countries all over the world.
Let's talk about the U.S. and China. We had that call between President Trump and Xi Jinping. What did you make of that?
I guess it was kind of like two boxers coming out at the beginning of the match and touching gloves. I don't think it shows that they're buddies. I think they're getting ready for a fight. let's keep in mind that the Secretary of Treasury, the Secretary of Commerce, they're not going to be in their positions until the end of February at the earliest, given confirmation hearings. So right now, the people that have the ear of Trump and the policy-making capacity are in the White House. And those are much more hawkish on tariffs. So I actually expect that in the first weeks, maybe even the first days, maybe we'll see it at Davos, there will be an announcement of initial additional tariffs against China. I think this is going to be a tough environment for the Chinese to navigate. Yes, there'll be a summit meeting. I'm sure it'll be announced at some point in the coming months. And TikTok, Trump has said he's, willing to try to find a way to make TikTok
one of the first
available.
decisions he says that he's going to take when he comes into office. But what do you make of that? You've got a Supreme Court ruling that upholds the ban. You've got Elon Musk saying that, look, there should be reciprocity. If you keep TikTok alive in the U.S., then, big tech should be allowed to operate in China as well. Do you think that Trump can get away with keeping TikTok alive in the U.S.?
Well, to be fair, what Elon said was, yes, I agree with the president. I would want to keep TikTok too. But there is this reciprocity issue. My view is absent reciprocity, TikTok should be banned. That's a different position than Elon's, though it's close. Look, Trump has received a fair amount of campaign support from TikTok investors, Jeff Yass in particular, seven-figure numbers. Once he got that money, he flipped his position. And one thing that has been fairly reliably constant for Trump is that if you give him money, he is willing to provide you political response. And TikTok is a place that originally he was the guy that said we think we should ban TikTok. And now he doesn't. So he can change his mind, and he's more likely to change his mind if you pay him, right? And that's true whether you're, the Mexicans looking for a trade deal or whether you're, TikTok trying to stay alive. But this is the law of the land passed by Congress and upheld by a 9-0 Supreme Court ruling. And so Trump can say, I'd like there to be a 50-50 deal, but that's not the way the law works. And we've already heard that from Tom Cotton, Republican senator. We've heard that from Mike Johnson, Speaker of the House. I'm not sure that what Trump says is what's going to move the needle here. And I think the Chinese are waiting. The Chinese aren't going to make a decision on this until they see what the deal is. There were these rumors that, they're talking to Elon about, maybe letting him buy it. No, they're not. They are waiting to see what the deal is. And if they're going to give anything to the Americans, it's going to be in connection to, more leverage on the overall relationship. Because TikTok's actually not that important for China. It's part of the digital economy. It's not primarily a surveillance mechanism. It's not primarily a propaganda delivery mechanism. It's part of the digital economy in China that is not considered strategically all that important. So I don't see Xi Jinping making a decision on TikTok by itself. Not at all.
Yeah, well, that's an interesting take there as far as how TikTok could perhaps be leveraged by the Chinese as well. But, we're talking about Elon Musk. Let's talk about Vivek Ramaswamy, because reports seem to suggest that he's out of the Efficiency Commission already, or on his way out of the Efficiency Commission already. Are you surprised by that?
Well, I mean, it shows that they're efficient, right? They had two co-heads. Now they only have one. That's 50% efficiency gains, just like that. Haven't even started it. I'm a little surprised. I mean, of course, last time around, there were people that were in and out of the Trump administration, on every week, every month. You remember someone we'll see here, Scaramucci, who was, I believe, for 11 days, the communications spokesperson. So, still, Vivek hasn't quite impressed me to that degree. But look, he did clearly antagonize a lot of people in MAGA, when he came out and made posts that seemed to be anti-patriotic about how Americans need H-1Bs and American culture isn't very good. I think that landed very badly. I also think he had a lot of personal problems with some of the staff around the White House that didn't like him and were talking badly. And at the end of the day, Vivek is not all that important to Trump. So it wasn't hard. I assume he's going to announce his candidacy for governorship in Ohio in short order.
So where does that leave Elon Musk in the Trump era?
He's the most powerful man in the United States after Trump. And I think that he's the biggest surprise in terms of the geopolitical order. He's probably the most powerful man in the U.S. military, industrial, technological complex. And that's the most powerful institution in the world. So what Elon says when he attacks the Canadian government or the British government or the German government, which is being done in full view and knowledge and coordination with President Trump, I think that's a really significant challenge for other countries because, you know, they may have conversations, oh, we'd like to ban X, but you know, if you do that, you're actually endangering your entire relationship with the United States. And I worry about that. You know, if we were talking about India, if Narendra Modi were having a meeting with the head of state and brought in Gautam Adani, we would call India a kleptocracy. We would say that's an aberration of the rule of law. We would not find that acceptable. But the reality is, in a G0 world, not a G7, not a G20, but a G0 world, which is the world that we are in right now, the United States, when they break an international norm and do something themselves, that's the new norm, at least for America, and you're going to have to find a way to deal with it. So the idea that rule of law is somehow something that is collectively ascribed and agreed to is going to face conflict with rule of law as whatever Trump and Elon say it is. I think that's a big problem.
Well, you know, speaking of rule of laws and multilateral forums and multilateral institutions, here at the World Economic Forum, Trump is going to be speaking to the WEF for the third time as a sitting U.S. president. And the overarching theme here is collaboration in an intelligence age. I mean, you know, we're talking about confrontation and conflict. Is there any hope for collaboration on anything of any significance?
Yeah, collaboration not so clear. Intelligence becoming more challenging. Age, there's a lot of age among all the men that are running these countries these days, so I think we've got that piece of it. Look, I mean, my friend Borga Brenda wrote in the New York Times today that we're seeing the end of the post-Cold War era.
That's right.
I firmly agree with that. Right now, today, is the end of the post-Cold War era. It is a new era. It is a G0 era. It is a geopolitical recession. We are in a bust cycle where the strong do what they will and the poor suffer what they must. And it's not a world where we can rely on those in power, whether they are governments or individual leaders or corporations, to take care of the people that they have power over. Now, when you talk about, you know, sort of cooperation in an intelligence age, that's what you need. You need the people with power to have some level of accountability for those that aren't in power. And that's what's breaking right now. We're all on defense, playing geopolitical defense. We're in damage control mode. We're trying to maintain some level of capacity because, you know, right now, this is not a time that you say, oh, well, you know, who's going to empower these underprivileged people? No, no, no. All of the momentum is in the other direction.
Well, you know, what are some of the big risks that you foresee as we look at 2025 in a G0 environment that we continue to live in? And let's talk about some of the breakthroughs that we've seen. We talked about Israel and Gaza. Do you believe that that's going to be a fragile piece, or do you expect the Middle East to stabilize?
I don't think there's that much more that Israel can target of Hamas. I mean, they've hit all the weapons caches. They've taken out all the tunnels. They've taken out all of the, you know, operational capability. But of course, the reality is that as long as there are Palestinians in Gaza living the way they are, Hamas is going to have an easy time recruiting. So if Hamas is an army, they're a lot weaker. If Hamas is an idea, they're much stronger. But Israel can't defeat an idea. So I do think that this 42-day agreement, a ceasefire, would not have occurred if Kamala Harris had won the presidency. I think it's because Trump came in and was seen as credible in threatening the Israelis and the Palestinians that we're going to hurt you if you don't actually get this done, because I want to show a win. And Netanyahu was willing to do it, and frankly, Hamas was willing to do it too. That doesn't mean that we're closer to a two-state solution. I don't believe that. It doesn't mean we're closer to an end to the war overall.
Well, speaking of wars, Russia and Ukraine, and the role that you believe Donald Trump can perhaps play there.
Well, it's not going to be one day, as we learned. He said that a lot during his campaign, 24 hours, he can end the war. And sometimes he exaggerates. I think we've learned that over the past years. This is one of those cases. But he does want the war to be over, and the Ukrainians are saying we recognize that we're going to have to start negotiating. Some of that is because of Trump, and some of that is because they just don't have the people on the ground to keep fighting the way they have. And by the way, neither the Russians. The Russians have suffered 700,000 casualties in this war, which is just a breathtaking number. And the Russians also would like to have some time to regroup before they continue. So I think that there is a reasonable chance, more than 50-50, that this year we do see a ceasefire. But a ceasefire is not an end to the war, and a ceasefire doesn't suddenly bring NATO and Russia together. NATO will still be arming Ukraine. And I think it's a mistake to believe that Trump is going to sell out to Putin. This is 4 years of a Trump presidency, and he doesn't want Ukraine to be lost on his watch. So he is going to want to ensure that Ukraine can still defend itself in the territory that Russia doesn't occupy.
Let's talk about Canada, and of course Trump has threatened Canada as well, but Canada's got its own domestic issues to deal with, including an election. Mike Carney now in the race. What do you make of that?
Well, I'm not surprised, of course. He's very popular, central bank governor. He was asked by Trudeau to become Minister of Finance in Trudeau's own administration, but that was before Chrystia Freeland very publicly shot Trudeau in the face and said, I'm out, and she's deputy prime minister. So that was the end of the administration. She's running as well, and she's popular among some on the ground. I think that Carney is the voice of the establishment. He's the person that, people that you are interviewing would certainly prefer to see. He was very capable in the UK when he was central bank governor. He was very capable in Canada in that role as well. But still, right now, the odds-on favorite would be the Conservatives to win, Pierre Poilievre, and they've got about a 25-point lead on the Liberals in the hustings. So he has a shot, and she has a shot, but I mean it's very clear that it's going to be an uphill struggle.
20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely, yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, when you stand and people, when they look up to you, they also need to understand that, yes, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right. Yeah. When you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you've been very successful, what else you need in life? But I think to get till there itself was a tough task, but I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but maintaining that level is a different thing altogether, and it takes even more time and hard work, and it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So, just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it.
Okay, welcome back. That's conversations from Davos, which we will keep sort of getting to you. But we want to talk about a big news development which was announced about an hour and a half back or so. I'm talking about Nazara Technologies. Stock is up 2% or so. Now, what's happened is that an existing investor, actually a bunch of existing investors have come together and are buying about 25% of the company, triggering an open offer with the intention of acquiring another 26% in the company. So the set of investors wants to go up to 51%. Remember, the existing investors of Nazara hold about 9% in the company. We have, the existing promoters, Nitish Mitterson, Joint Managing Director and CEO of the company, joining in now to take some questions and explain this entire thing to us. Thanks very much, Nitish, for joining us. You've done so many acquisitions, and we've spoken about many of the, at least some of the bigger ones. It looks like you yourself are getting acquired here. Just explain to us what's happening step by step with numbers. I mean, what do these existing investors own? What are they going up to? And how does things change? Will you still be running the company? Go on.
Hi, Prashant. Sure. I think it's very exciting news for us today and a big milestone in our journey. Arpit Khandelwal and the Plutus family have been investors with us for over 4 or 5 years. And we've had, very good relationships with them. And of course, a well-known tech entrepreneur, Mithun Sacheti, founder of Carrot Lane, invested in us in the last preferential round. And also, I think just the fact that we've been able to get such marquee investors to cross over the line, join hands with us in this vision that we have of making Nazara, a global gaming company to reckon with out of India, I think is something we've done for 25 years. And this is another milestone that will get us there. We are very excited about this opportunity as well as what 2025 has in store for us.
So explain the transaction for our viewers, Nitish, with numbers. What is everybody at? Who's going to what percentage? Just step by step. Go on.
Sure. So today our board approved a preferential issue of 495 crores at a price of rupees 990 per share that will be issued to Aksana Estates LLP, which is jointly held by Mithun Sacheti and Arpit Khandelwal. This preferential placement collectively increases their stake to 25% because they will add 5.4% more through this preferential issue. And therefore, it triggers a mandatory open offer, which they have already intimated a while back.
Nitish, hi, afternoon. What happens to your stake? Your stake was at 9% as per the last BSE shareholding. What would it come down to? And are you open to bringing it down even lower? Would you participate, for instance, in the open offer? Would you stay as a promoter of the company?
Yes. So we are very much, in control of the company. We are going to remain the promoters of the company and hold the positions of MD, CEO, etc. I think for us as original promoters of the company, we really more than stake in the company. I think we have soul in the company. We have, full commitment to the vision that this company was started 25 years ago of making it a global gaming company to reckon with. And this is the right thing to do to bring on, really strong hands who come together with us to achieve that dream that we have. We will continue running the company. In terms of the stake, there'll be a 5.4% dilution due to the new preferential issue. So maybe our 9% will come down to 8.6 or so. Besides that, the promoters are not selling any equity at this point of time.
Nitish, hi. So just trying to understand whether there will be any reclassification of promoters. You're saying you will remain a promoter at just sub 9%. the new entity, Aksana, I mean, they will remain institutional investors, or because they're at 25%, then there's an open offer and we need to see how much they go up to. So what will be their classification and what will be their role, more importantly, in the company as the largest shareholders?
So in terms of classification, the PACs, which are the people acting in concert, Arpit Khandelwal, Mithun Sacheti, Aksana Estates, Plutus Wealth, and also Chuna Mehta, Finsol, all would classify as co-promoters or deemed co-promoters. And in terms of operational execution, like I said, existing promoters and existing management will continue to run the company as we do today.
No, but now you're saying they will be classified as deemed co-promoters. So then we now need to understand, their thought process as well. I remember a conversation that we had right at the end of December when you'd done a small acquisition. At that time, you told us that the cash level in the company was, I think, 300 to 400 crores. And now there's this preferential issue that's happening. So what is the cash in the company and what is the immediate strategic vision in terms of the areas of focus? Because at that time, I remember you told us that there's a lot of emphasis on offline gaming. There was emphasis on growing the real money gaming vertical as well, along with, of course, the sports vertical and the other businesses that you have.
Yes, I think the big picture here is that, Nazara has, built a very diversified, profitable, now global gaming platform. And the whole idea is to supercharge this and accelerate our growth. We obviously have seen good success in past M&A. In the recent cash deployments, we've also increased stakes in most of our companies to 100% and have control of many of our subsidiaries. We today announced a small asset acquisition of 2 games, which we are quite excited about. And in 2025, we will definitely focus on boosting significantly our organic growth, but also we have a very strong pipeline of M&A, especially the core gaming business, which we hope to expand.
Nitish, just a quick point. There is complete alignment here, or the people, because Aksana will own 51% of the company, right? If the open offer is fully taken up.
There's, I would say, 101% alignment. Like I said, the whole dream is to make this India's biggest gaming company globally. And I think all of us are fully aligned to make that happen.
And, but if you have a co-promoter coming on, I'm sure that they add and they bring a lot of experience and their own sets of skills, etc. But they will also have their own views about what direction to take. So I'm just sort of asking you again: is that?
No, I think there's good alignment on vision, and they are backing 25 years of experience and credibility that we have built. And I do not anticipate any such issues going forward. I think collective thinking will be able to kind of enhance the vision and the strategy going forward, and we will very aggressively execute it.
Okay. How many board seats for you, the current promoters, and how many board seats for the new co-promoters? And secondly, the open offer is at a price lower than the current market price. What is plan B if the open offer is not successful?
So in terms of board seats, the existing board is constituted of 2 promoter seats and 4 independent directors, 1 non-executive director, so 7, 2 out of 7, and also 1 seat that is held by a Plutus nominee. It's going to remain as it is right now, without any further change, at least in the short term.
Nitish, give us some numbers. I mean, as this gets underway, I'm sure there'll be more discussions going forward as the transaction is complete and the open offer is complete. But some numbers, again, I'm going back to the last stated conversation where you said, at least for this year, FY25, I think you're expecting about 10% top line growth. But now as this business, I mean, I understand the larger vision of being one of the biggest gaming companies of the world. But say FY26, 25, 26, going to 27, right now, what visibility do you have? What sort of top line growth, CAGR? What can we expect in terms of cash levels, both organic, inorganic? I mean, all put together, if your investors stay with you for the next 2 years, what is the kind of EPS accretion, top line growth, margins? What should they, expect?
Yeah, I think FY27, our target of 300 crores EBITDA is very much on track. And we feel extremely confident about achieving that. So I think all our focus is on that. In terms of how we will achieve that, I think a combination of organic as well as inorganic growth. Many of our organic businesses are also in recent months and quarters picking up steam. And I think you will see acceleration of growth in the coming quarters. I'm very confident of that.
Okay, all right. Thank you very much, Nitish. Appreciate you joining us. And thank you for joining us exclusively this afternoon on CNBC-TV18 with all of that detail. Stock was buzzing last few days. Today, did go up about 4.5%. It's come off the day's high, but trading higher at this point in time. Deepan Mehta is with us of Elixir Equities. Deepan, good afternoon. Good to have you with us here. Thank you for your time. Interesting and important day in terms of what happens over the next many hours all the way to the Trump inauguration. But Nazara, I'm sure you heard some of that conversation. Any thoughts?
Yeah, Prashant, good afternoon, and thank you for having me on your show. Well, I have certain thoughts on Nazara, but I don't know whether the viewers will like it because I have been an investor in the company, or rather I was an investor in the company right from IPO. And then a couple of years ago, I just threw in the towel and I sold off all my holdings which were there. And while you were speaking, I was just checking out. In 2016, Nazara's revenue was 211 crores and operating profit was 76 crores. Come back almost 8 years later in March 24, it is doing 1138 crores in revenue and operating profit is just 99 crores. So what has happened is that it has had a long period of stagnant profits, and whatever appreciation has happened because of PE expansion. And it is one company which has clearly underperformed its potential. It operates like a hedge fund, keeps on acquiring companies, divesting companies, diluting its equity. And end of the day, the bottom line remains static. And that's the most disappointing part of Nazara. And all such gains which are there, appreciation which is there, up moves which are there, are best opportunities to sell off Nazara. And this is one company which, although it's in a fabulous sector, and there's no other way to play the gaming sector except for Nazara, but that track record has been extremely disappointing to say the least.
Which is why that question, Deepan, which is why I tried asking the question, saying there has to be some clear roadmap. I mean, in terms of if investors stay on, what do they get? Because it's been a lot of headlines on acquisitions, etc. But like you're saying, long-term wealth creation, I think the clarity has been missing, at least for the past couple of quarters. Let's see with this new arrangement what comes through. But let's talk about happier things in terms of today's trading action. And look at what's been happening to the two stars of the day, right? Kotak and Wipro. Let me start with Wipro actually first. What do you think it is? Is it just market positioning? Because if one were to look at it dispassionately, the company's it's got flat growth, top line growth, and obviously still guiding for -1% to +1%. The margin improvement has been staggering. The cash payouts that they're talking about, obviously that's very, very impressive. Would you, be an optimist on Wipro after the third quarter?
For me, I think I don't understand. Maybe I'm getting a bit old for the market. That the people have lowered the bar, is it? I mean, you have stagnant performance and 1-2% single-digit growth rate, and the street rewards it. I don't understand. In 30 years of the market, I haven't seen such phenomena. I mean, a few years ago, we would have sold Kotak as well as Wipro on such a very poor set of numbers, 8-9% type of growth rate. But here the market is rewarding them. So I don't know, maybe I'm getting something wrong over there. But certainly I'm avoiding all such companies which I don't understand why they should go up and trade at these multiples, despite having such poor and stagnant performance. Okay, all right, in the future things may improve and therefore you can pay a higher multiple. But look at the track record for last few years or so for both these companies, and then suddenly out of the blue you start paying a higher premium, hoping that the management delivers, it's not new in the entire IT industry. You see several quarters they've been saying that, oh, the turnaround is around the corner, discretionary spending will pick up, revenues will pick up, but end of the day, I think it just remains flat. So let's just wait and watch. I'm not buying into these rallies. And in fact, as shareholders of Kotak Bank or Wipro, I think they should seriously consider their long-term positions in these companies. I doubt they have the capacity to grow at double-digit 12-13% on an extended basis, which is necessary to create wealth.
Okay, all right, Deepan, stay on. We'll come back, discuss some more stocks with you. We do have to take a quick break, but as we do that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app from the Apple Store or from Google Play, or you can even scan the QR code that's on your screen now.
wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. You know, when you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Yeah, recently, I think, not recently, but Tokyo, I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course, it was very, very hard, but I had mixed feelings, mixed emotions where, you know, I was feeling bad, where if I have to think I lost an opportunity, you know, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like...
Welcome back. Well, the markets actually are doing pretty well today. All that we saw on Friday in terms of a downtick, that's almost all of that has got, got reversed, which is good news. And a couple of stocks actually are doing quite well. The OMCs, BPCL and HPCL, both of them have moved to the high point of the day. So keep an eye out on both those two names. But let's get in Mitesh. Hi, Mitesh. Good afternoon. Good to see you win. Mitesh, we are above that 23,350, which is a crucial mark. 23,400, I think that will be the next resistance. Your view on the markets at this point of time on the Nifty and the Nifty Bank, and also fill us in with a couple of stock calls.
Good afternoon. So I think the Nifty, I think, is now at this level of 23,350, which is what you were indicating would be the level. The high is about 23,390, which is very similar to what we got a high on Thursday last week. So I think let's see a break about 2400 or an early close about 2 early close about 23,350. I think that could suggest that a pullback this pullback could get stronger to about levels of 23,550, 600 zones. Otherwise, we are still in that range. But the good thing is that we have stopped falling. The hourly to hourly charts, the indicators are turning flat, which means that a new low may not be made immediately, and therefore more possible or a more probable outcome could be the markets breaking about 23,350 and extending this pullback by another 200 points. So that's the way we are approaching it. On the stock side, Tata Consumer is something which has come on the buy list. Would recommend buying here with the stop below levels of 945. Look for 990, 995 as the target area. And the other one is United Breweries, which is a buy with the stop below levels of 2035 for targets of 2120.
Okay, all right, stay on. Mitesh, we'll have some more questions in a bit, but for the time being, let's put the spotlight on the telecom space, and we have our colleague Ashmit joining in. The telecom industry's demand for some sort of AGR relief or partial waiver that seems to be finding at least some hearing in Delhi, because Ashmit has been verifying this from independent sources that there could be something of this sort that is being considered. Let's go across to him for the latest. Ashmit.
Well, clearly this has been a long pending demand of the industry. The industry suffering repeated setbacks at the hands of the Supreme Court had turned to the doors of the DOT, the government, to grant some relief. Now, since the September 2024 decision by the Supreme Court, which closed the chapter on the Supreme Court proceedings, rejecting the curative application, there were concerns raised by the affected telecom players before the DOT, and that is what the government has chosen to respond to by way of considering the submissions that have been made. Bear in mind, the figures are mammoth as far as the industry is concerned. Vodafone Idea, with the staggered interest payments, that AGR demand figure has stacked up to north of 80,000 crore rupees. Bharti Airtel is somewhere in the neighborhood of about 42,000 crore rupees. And these figures is something that they're competing with, that they're struggling with. And towards that end, the government is contemplating, not deciding as of yet, but contemplating waiving off the penalty and the interest component of the AGR demand. The AGR demand had a principal, an interest and a penalty component. The government is considering waiving off the penalty and the interest component, either fully or partially. That is under consideration. But there are a few aspects to bear in mind. Number one, the Supreme Court repeatedly in 2019, 2020, 2021, then subsequently in 2024 has dismissed any and all approaches being made by the telecom companies to dilute this demand, to readdress this demand, to recompute the demand. In fact, the only relief that they've allowed is a moratorium and a staggered payment, and that too with an interest component so that the net present value is maintained. That is importantly something to bear in mind. That moratorium runs out later this year. Those payments start kicking in September 2026. And finally, the third aspect, that if at all a waiver is granted, this would be relinquishing of public funds by the government to the private sector. That is something that is going to weigh on the minds of the government as they go about the various levels of approvals that may be required for this decision. So no timeline yet, no final decision yet. But yes, the government is considering if at all a relief can be granted to the telecom sector. Back to you.
Okay, all right, Ashmit, thank you for that. So there's some green as the market gets hopeful that maybe some sort of a relief indeed will come through. And Vodafone Idea obviously has been the biggest beneficiary today, rising between 9 to 10%, though of course the caveat is that it is a 10 rupee stock. Mitesh, any interesting trades here on telecom given the news flow?
Well, I have a disclaimer that I personally have Vodafone Idea in my portfolio. I think, the stock was showing good traction last week. So I bought it actually last week itself when it managed to get past a very important supply pivot of 8.5, 8.6 zone. And since then, the traders work well, but I think I am still not seeing a massive upside, over here. I think it's a trading bet. 10.85 to about 11 is the first target area. We got a high around 10.47 today. And then if that is cleared, a target possibly around in the range of about 12.2 to about 12.3. I think that should be it. But given that, if you've been able to buy it around 8.5 rupees, that's still a 40-50% kind of a move you can capture. So it's a trading bet. As long as the stock is above 9.4, I think maintain a long bias. Look for targets of 10.85 to begin with, and 12.20 is the next target.
Dipan, were the numbers of Paytm exciting enough? Revenues went up 10% quarter on quarter. The EBITDA loss came down. What did you make of the numbers?
I think decent set of numbers, and certainly supports the stock price increase we have seen recently. And if it keeps going on this path, I think a quarter is not far when it will start to show profits, and then incremental growth will go towards going solid into the bottom line. And I think gradually all the regulatory issues are well behind them, and management has I think put its head down and focusing on delivery, on execution, and that's reflecting in the numbers. End of the day, their key strength is the fact that they have millions of users and so many merchants also on their website and their platform, and that certainly benefits them. And lastly, this government initiative, which is so right, to reduce the concentration of UPI payments away from just PhonePe and Google Pay to homegrown companies. If some regulation comes, then it will be very favorable for Paytm. So that could be a further trigger point. I'm not selling Paytm at these levels. I think at corrections, it may look like an interesting buy.
Okay, all right. Dipan, for many quarters, I think you've maintained that the cement and metal stocks don't excite you. But I want to ask you about the pipe companies. APL Apollo Tubes, they have just come out with that set of numbers, and I'll tell you what is the key number for me with regard to their numbers. The EBITDA per ton in the past quarter, it fell down to around 2,000 rupees. Now that's recovered to around 4,200 rupees, but it's still a distance away from that 5,000-6,000 rupees odd that we've seen in the past. What's your view on the stock? I'm asking you this because it's a play on the economy as well, infrastructure, as those spend, as capex comes back. And this is one stock that's done nothing in the last 1 year.
Nigel, first a disclosure, we are invested in the company, so our views could be biased. Very pleased with these set of numbers. I think even their pre-quarter release was very interesting and optimistic. And I think the focus on value-added products is what differentiates APL from any of the other commodity pipe manufacturers or steel manufacturers for that matter. And it's focusing a lot on brand building. It's got some marquee, names to endorse their products. And this entire phase of, beautification of structures, be it commercial, residential. Then we have modernization of key infrastructures like stations and building of new airports. All of these things benefit APL Apollo, and I think they've got the strategy right over there in terms of how to grow the business. And it's got a very, very large market share, a dominant market share within the space it operates. So many positive things going for APL Apollo. The only thing, of course, is the valuation. It remains pretty much high, but then, one can't have everything, and we remain firmly invested in the stock.
To play this theme, APL Apollo is the only one you would look at, right? Because there have been talk about the other players, try to play them on valuations. But irrespective of the valuation, if you want to play this theme, you rather stick to the market leader that has more than 50%. Is that correct?
Yeah, absolutely. I think amongst the so-called building products category, I think this is one of the good companies to look at in terms of growth. And there are very few sub-segments in this building products category which are just falling off the grid, like, paints and even pipes for that matter. We saw Supreme Industries numbers are not that too exciting. So one by one, I think, we need to assess that within this building products, which is also play on consumption, on infrastructure, which are the stocks or the segments which are really still going strong, and APL Apollo certainly is one of them.
By the way, look at a few more names, right? Look at CG Power, if you can pull the stock, the intraday up. It came a long way off. Almost 900 rupees was the high, and 2-3 days back had fallen to about from 9 to 600 rupees. So coming back up, it's recovered about a little over 10% from the lows a few days back. Tejas Network, for example, is another name. High was about 1500. Last week low was about 970. From 970 to about 1100. These are decent recoveries which we are seeing on many of these names. Credit Access, of course, is chopping around still. So the low was about little over 800. Stocks at about 1,000 rupees. That is Credit Access. And of course, UBL is, of course, news related. It saw that sharp sell off very, very quickly from 2,100 to about 1,900. And stocks basically recovered 50% of that damage coming in right now. Many other names, Greaves, Cotton, I can go on with a few others, Saregama, etc. Large volumes and sort of well-owned names which are seeing recoveries after recent sell-offs. Deepan, thank you very much for joining us. Pleasure as always. Appreciate your time here on CNBC-TV18. Well, we earlier in the day spoke with Pankaj Tibrewal of Ikigai Asset Managers. He thinks maybe, with the third quarter, once the third quarter is out, he's expecting aggregate earnings cuts, but that perhaps would be the time where you should look at buying some sectors. So this is a slice of that conversation with his picks.
Going into 25, some of the concerns which I think are genuine and we need to address them. One, we did a dealer check across the board, across distribution, across sectors. And one thing which is coming out clearly is that the liquidity is extremely tight and working capital cycle has got elongated across the board. The second one is that probably the government capex has slowed down materially. I think the easy money is behind us. Markets should consolidate for next 12 to 18 months and bottom-up ideas will make you money. So we need to be extremely careful on the BFSI side that what is the loan book? Is it more unsecured? Then we need to be a little careful on that. And I think that's something which is a reality.
no matter what. I couldn't even sleep that night because I had a match next day in the morning, and obviously I just gave my 200% and I got that bronze back. So
Right, just come back harder. Just come back
yeah,
even harder.
I think the belief is very, very important. Just believe in yourself.
Bibi, we'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, how many hours ever it is. I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play. Is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times. But whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good system. That is very important. And I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, we need support, or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be...
Okay, I think the Zomato numbers are on our screen. So the top line has grown a smart 64%. Let's see what the bottom line is going to be coming in at. Because I think the expectation was that the GOV will keep growing higher for both food as well as for Blinkit. But the question is what happens to profitability, and of course the new apps like, for instance, District that they've launched. Zomato stocks reacting quite sharply on the downside. We'll get to the bottom line in just a bit. In fact, let me see if I can open the press release right now and get any further details on it. No, doesn't seem to be having too many details. As of now, I think we only have the revenue numbers, so we'll get to the others in a bit as we go forward. I think we do have Mitesh with us while we get to more of the fundamentals around this and more of the numbers start trickling in. Mitesh, Zomato kind of has gone into a bit of a range now after having a pretty stellar last few months. What are the levels, immediate levels now for this?
To me, I think, Sulbi, this is a first, sign of some kind of a correction. The bigger supports for the stock taken around 220 to about 210 zone. It's rallied from 50, sub 50 levels to about 300 without any kind of a significant correction. So I think now is the time when the charts are suggesting that the stock either will do a price-wise correction or a time-wise correction. I think a time-wise correction already started, failed to sustain about 300. Time and again, it's come back to about 240 levels. But in case 240 breaks and there's a chance of that, then I think 220, 210 is the range where the stock could possibly, take a breather and sustain.
By the way, on the profit line, I'm talking about now for the company as a whole, the net profit line. The profit has reduced over the previous quarter. Profits at 59 crores versus 176 crores in the September quarter. And obviously, these companies will be gauged more quarter on quarter just to see if that turnaround story, that improvement in the internal ratios, whether all of that is sustaining or not. So this is just the net profit number. So let's wait for it. We'll get it Mangalam to give us some more of the details. In fact, I think we've got Mangalam. Mangalam, how's it looking?
Well, the numbers aren't looking particularly bad. If you are concerned about why the profit of Zomato is down by about 57%, remember they are on that expansion spree when it comes to quick commerce, and at the same time they made an acquisition of Paytm's going out business as well. So as a result of which the depreciation, which is a non-cash expense, has increased from 128 crore to 247 crore, and that has resulted in the bottom line being a lot lower than the same number in the previous quarter and the same time last year as well. But year on year, these numbers would be a lot better because quarter on quarter, they have the seasonality impact, which will make it look a lot better anyway. So look at year on year, 64% revenue growth at 5,400 crores. And the company is on an operating leverage, mode. And as a result of which, the EBITDA is up nearly 218%. 51 crores turns into 162 crores. And the bottom line, like I pointed out, impacted by depreciation. If you look at the segments as well, food delivery, out here the growth has slightly slowed down at 22%, but then again the company has been speaking about that business being in a lot more mature phase, and the driver for the food business will be the operating profit, not as much acceleration in the revenue. Here that has played out. The operating profit in the food business has grown by 67%. Margins in food business have increased from 15% to about 20% on an operating basis. Quick commerce, now that is the revenue driver of the company, and year on year that has seen a massive jump of 113%. Quick commerce has shown revenues of close to around 1399 crores versus 644 crores. And at the same time, the EBIT out there, the losses have been contained. The same time last year, they made an operating loss of 56 crores. And this time around, it is a loss of 30 crores. So the revenues have doubled, losses have nearly halved. That's a positive. And finally, going out, a business that they acquired and see a lot of potential in, there the revenues have come in at 259 crores versus 73 crores. And this time around, they have been investing in that business, as a result of which it's made a loss of almost 15 crores on an operating basis. The only thing they have to watch out for is Hyperpure now. Hyperpure, which is the B2B business, has shown a revenue of just about 13% in terms of growth at 1671 crores. The street would have liked that to grow a lot faster. So if you look at the overall numbers of Zomato, not particularly bad. Year on year, there's a 64% revenue growth, and as a result of which, the EBIT has grown a lot higher. The net profit has been impacted by higher investments in quick commerce and the acquisition of the going out business. Quick commerce growing in triple digits, and the food delivery EBIT margin increasing by 500 basis points. I think the street should be content with these numbers.
But Manglam,
yes, please.
yeah. So, no, completely take your point on the net profit declining because of depreciation. They've been investing in their other businesses, so therefore, that point is well taken. I just want to draw viewers' attentions back to the quick commerce loss, because the thing is, in September, we saw a profit and the street was super excited and happy. Now, again, I'm just comparing September to December for the sake of comparison. From a 48 crore rupee profit, they've gone into a 30 crore loss. You're saying maybe we should not look at it that way. There could be seasonality, etc. I mean, year on year, like you're saying, the losses have come down. But September was a profit, December is a loss. How should we read this?
So what you basically do is look at the acceleration in their store addition as well. So maybe the number of stores that they added in September were not as much as they added in December. The quantum of store addition, etc., will be known only once, the company gives out its information docket to the analyst. My sense is that up until September, when the company was adding stores, a lot of stores matured as well. They would have increased the pace of store addition in the December quarter in line with, getting ahead of the festive season, etc. as well. So maybe that could have been a reason why, the revenues of the company have doubled while the operating losses have narrowed. So instead of looking at it quarter on quarter like that, just look at how the revenue has grown versus whether there has been an increase in losses or there has been a decrease. So long as there is a decrease in the loss and the revenue is growing, that means it's in an investment mode, and these numbers are pretty chunky when it comes to different quarters, depending on the number of stores that you would have added in that particular quarter itself.
I have that number for you because their letter to the shareholders is out, and I think it's exactly what you're saying. The Blinkit store count has crossed the 1,000 store mark 1 quarter ahead of plan.
Yeah.
And now they're aiming to get to 2,000 stores by December 25. I mean, look at that. They're going to double their store count by the end of the current calendar year. So I guess you got it spot on. Maybe because they've been rolling out stores so aggressively, that's why what was a profit has swung into a loss. But I mean, if it's investment in the business, maybe it's a good thing.
And the other thing is that they had targeted 1,000 stores in Blinkit by fourth quarter and 2,000 by fourth quarter of next year. They've brought that forward by 1 quarter as well. So now it'll be 2,000 stores by third quarter FY26 as against fourth quarter FY26. So that is a long-term positive as well. So they are accelerating their store expansion. That in the near term may be impacting their EBITDA, but the fact that they're doing it ahead of what the street is anticipating means that, there could be, if not, some upgrades to the estimates. There could be some, bringing forward of their growth, estimates as well by the analysts, largely because the company is rolling out stores faster than what it had guided for, and the guidance was something that the analysts were working with. I'm not sure if, there is any commentary on the competitive space and the margin profile of the Blinkit business, because that is something that the street will be eyeing as well going forward, given the competitive intensity in quick commerce. So if there is any commentary around that, the street may react to that as well. But basis the numbers that have come by and the commentary so far that we're aware of, it's nothing really to worry. Maybe one can argue about the valuation of the stock or the future of quick commerce itself, but these numbers seem to be pretty much on track with what the company has been promising and what the analysts have been expecting as well.
No, absolutely. On quick commerce, they go on to say that the adjusted EBITDA is lower by 14%, driven by investments in expedited new store openings and new customer acquisition in quick commerce. So they're investing heavily into quick commerce. That could explain it. Having said that, on the food delivery side of the business, they are acknowledging the slowdown because they're going on to say that the muted 2% Q-on-Q GOV growth in food delivery is driven by the broad-based demand slowdown. So it's a mixed picture. It's on Zomato. Let's quickly get in. Thanks, Mangalam, for that. Let's quickly get in a view from Rajesh Kothari as well of Alpha Accurate Advisors, not just on Zomato, but the overall market. But Rajesh, since this is the hot subject at hand right now, food delivery, quick commerce, internet-based platform companies, what's your sense on this space?
Yeah, I think it is an interesting space, and we all are monitoring. I think there are a lot of data points which one needs to analyze before to, the conclusion either way. So we are holding one of the big platform company, of course, not in the food business, but in the insurance technology side. And, we are waiting for those numbers. But I think it's the trend for next 2-3 years are going to be in the favor of the oligopolies who are into this platform business. But yes, there are a lot of numbers to analyze to check the profitability of the few of them.
Rajesh, I remember a year back when we were chatting, you were an investor in KPIT Tech. And at that time, the company was growing very, very smartly, beating their own guidance, every single quarter. But things have slowed down. Automotive in Europe has come under pressure. Tech spends have been declining, and companies are hurting. So in that context, what are you doing with ER&D companies focused on automotive, say KPIT in particular?
So basically, as I keep saying that we need to monitor the business cycles very, very closely. And for the ER&D kind of companies for this space, the auto industry global spend is something very critical. So we have exited the name which you have talked about, a few quarters back. Currently, we are not holding, but we are again watching the space, and at right time we'll reevaluate it whether one should enter the stock again or not.
Okay, all right. Hi, Rajesh. Good afternoon. Good to see you in. Rajesh, I want to ask you about this travel and tourism theme. I recall, you all had some, you were playing some of those hotel-related stocks, I think. So the luggage player as well you all played, which had worked very, very well for you all. Today we have Indian hotels that actually reported a good set of numbers, and the stock has slipped from the top. So it makes me wonder how much of the good news on this travel and tourism theme is already in the price, at least, in the next 12-18 months or so. Your view?
So, well, first of all, we have a zero exposure to the hotel industry. We do not invest in hotel business. They are very, very deep cyclical business. But we always look at the proxy business. Like you said, the luggage business is one, which is like proxy business. So these are the businesses on which we are more positive on in the longer term. But I think the short term for a few quarters are, in my view, still going to be a little bit more pain because, the inventory corrections are still happening. The competition has increased. And because, if you're top 3 players, the competition becomes more intense, and that's where the price war starts. And I think the industry is still grappling with those issues from last 2 quarters. And I think I don't see any significant change in that, at least for next 1 or 2 quarters. But yes, that's more structural trend. We are seeing luggage over hotel because, that is less cyclical, more B2C, more FMCG. And therefore, that can be much more. Like we already made, one of the large, multi-bagger was there in our portfolio. So I think that's an interesting space, and that's a much better bet than hotel industry, if you ask me personally.
Luggage over hotel. Stay on, Rajesh. We'll just talk about Kotak Mahindra Bank. That's clearly the stock of the day. Abhishek is here to give us the earnings fine print. What brokerages say?
Rima, it's been better than expectation from the analyst front that Kotak Mahindra Bank has reported in Q3 FY25. Now, what's worked is that their net interest margin actually improved versus an expectation of a decline anywhere between 5 to 7 basis points. It's actually improved by 2 basis points. Slippages declined sequentially. Analysts were expecting slippages to be higher on a sequential basis. As a resultant, gross NPA ratio is at 1.5% versus Motilal Oswal estimate of 1.56%. Deposit growth came in at 15.9% YOY, while Motilal Oswal anticipated it to be around 15%. And loan growth also better than analyst expectation, coming in at 15.1% YOY versus 14% growth that Motilal Oswal had anticipated. A strong core operating profit growth up about 11.5% YOY and about 4% sequentially. What has not worked in the result is that subsidiary PAT has declined both YOY and quarter-on-quarter for Kotak Mahindra Prime and Kotak Mahindra Investment as well. With reference to their PNL, both the NI and PAT is ahead of our poll. Now, brokerages remain upbeat and they some of them have upgraded the stock. Citi has a buy recommendation with a target price of 2070. They also have a 90 days positive catalyst watch on Kotak Mahindra Bank. ICICI Securities have upgraded the stock to buy from hold, raised the target price to 2050 from 1850 that they had earlier. And Anand Rathi as well, they have upgraded it to buy from hold. The target price now stands at 2010 from 1950 that they had earlier. Back to you.
Okay, all right. Abhishek, thank you very much for that. Rajesh Kothari is still with us, so we're going to come back to him in just a bit. By the way, look at Zomato. Zomato is down 4.5% at the day's lowest level. Right before the numbers came, stock was at about 254. From 254 to 237, it's essentially been a pretty negative reaction to the numbers at this point in time. We'll take a break here. We're going to come back on the other side. More market conversation. As I said, Rajesh is with us. Stay tuned.
Leagues happening so that there are a lot of youngsters who are doing really well but not able to prove themselves. I think leagues now, if you see there've been Coco and then there've been tennis and pickleball. A lot of leagues are coming up and I hope there will be a lot more in every sport, because these kinds of leagues a lot of people get a recognition in terms of they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that yes, even we can do it, because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leagues like these will definitely help them to come up and think that yes, we also have something to actually look up to.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Welcome back. Well, Zomato clearly is the stock of the afternoon. You'll have to keep an eye out on this one. The street doesn't like those numbers too much, even though on Blinkit, that store edition is actually been preponed. But otherwise, the street is very, very nervous on this set of numbers. And from the highs, in fact, the stock has now lost close to 20% of its market capitalization. Just one technical factor at play. The Nifty rejig will be announced in the next 1 month or so. And at least as of the last, notes that we had got, that Zomato could be a potential entry into the Nifty. So that could be a technical factor at play. For the time being, the street is taking note of the numbers and the stock at the low point of the day. Rajesh Kothari is still with us. Rajesh, what are you making of the financial and the banking space? You know, at Kotak Mahindra Bank, that after a lull came out with a good set of numbers and the street likes it. While RBL Bank, the numbers are very, very disappointing. Stock was down 5% earlier today. Now it's up 2%, 7% of the day's low. Your view on the banking and financial space?
Well, I think the banking and finance space, the one most important thing, the two things, Raja, is one is, of course, the credit cost, which is by and large is reasonably fine in most of the large bank sector except the microfinance. So microfinance is one which we have been avoiding from last 5 years, and that remains so. On the private sector banks, I think everybody's focusing on two parameters. One is credit cost, and second, the growth. And that's why one of the large names which talked about, they reported the healthy growth after a very long time, I would say. And that's why, there is a positive reaction on it. So I think, the growth is likely to come back in few private sector banks. It may come probably with 1 or 2 quarters lag. But FY26 is going to be reasonably good years for both NII growth, as well as, PPOP growth, as well as by and large, the cost is going to be under control on the credit side. So all three put together, banking and finance should do reasonably well. The valuations are in your favor. And therefore, I think even from the stocks perspective, they should do reasonably well.
Okay. All right, Rajesh. Thanks very much for that. We've just got about 2 minutes to go before the day closes out. Before we head to the close, I really want to acknowledge some commentary that you cannot ignore on Zomato, because I was going through this letter to the shareholders. This is the first time I think that I remember, Manglam would perhaps know more, but the company has look at the just vertical slide on the Zomato stock. And why is that happening? They have in black and white acknowledged that there is competitive intensity, and it has put, and I'm quoting from the release, by the way, heightened competition has led to a pause in margin expansion in the business, which is expected and should be temporary. This is Zomato saying, yes, the margin expansion in quick commerce has paused. It's as clear as that. So there's very, very quick profit taking underway on the stock right now. At some point, probably buyers will come in, medium-term buyers, but as of now, it's just a quick dash to the exit, because this is just very clear, statements coming in, as clear as it gets, as direct as it gets.
Absolutely, and I think the price action tells you the story, isn't it? So even though the margin expectation was that there will be a pause in terms of that story of margin expansion and profitability, etc., and that expectation was there, mind you. But even despite that. And the stock, by the way, going into these results off the highs, the high was close to 300. It had already fallen to about 250. From those levels, it's lost another nearly 20 rupees or so after the results which have come through. So I think that's very, very telling. And it'll be interesting how it's a very widely covered stock from a sell-side institutional perspective. And it'll be interesting to see what the brokers the analysts really have to say after these numbers. So 230 at close, 7% lower. That perhaps is one of the stocks of the day on the other side, and all happening in basically 30 minutes or so. Now the Nifty's ended higher with about a 1% odd pop. Actually not a 1% pop, a 100-point pop. That's about 0.6%. The Nifty Bank ending at decent levels, 1.6%, largely thanks to, of course, what happened in Kotak Bank. Interestingly, both Nifty and the Nifty Bank ending just about 1%, around 1% away from their daily moving averages, the 20 moving average. So that is interesting. And of course, the real big movers today, there was Kotak and Wipro on the upside and Zomato on the downside. Just in terms of sheer volumes traded, etc., the three of them really are the ones which made all the headlines. Zomato, by the way, did go up. Right at the top is the #1 volume-led loser on the NSE today. And most of that action, of course, after the results really came through. Kotak, and of course, one more name I want to mention is Kalyan, because, for the simple reason that it went up, not at the day's high, but it did end at about 530, almost 6% higher. High was about 550 today on Kalyan, so ended about 20 rupees off the high, even with the gains it closed with. Credit Access, 9% gain. There was, of course, Wipro was steady all through, about 6.5%. And many others, Tejas Net, Global Spirits, Greaves Cotton, and others as well, Triveni Turbine, and so on and so forth. So decent day. Market breadth was positive, about 1,800 stocks higher and about 1,000 stocks which are lower on the NSE. Well, I think we're going to wrap up on this edition, a closing bell here. Thank you very much for staying with us. But don't go anywhere. Rima and I'll take you through markets forward after a quick commercial break. Stay tuned.
25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
A positive close on Dalal Street as markets await U.S. presidential inauguration later in the day. The Nifty ends above 23,300. Banks lead the charge while FMCG stocks lag. Mid-caps fare better.
CNBC TV18 learns the government is considering waiver of AGR dues from Vodafone, Idea and Bharti Airtel. The government may waive the AGR penalty and interest dues. The move comes on the back of a 2024 Supreme Court ruling that upheld the government's AGR demand.
Kotak Mahindra Bank scores on all counts in Q3 with margins, asset quality and business growth surpassing street estimates. Brokerages upgrade the stock. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. Well, tomorrow's trading day is a big one, right? You've got the Trump inauguration in the night.
Absolutely. And at 10 o'clock, right? 10
How are you going to
PM.
prepare everyone?
I don't have to prepare. I think he's going to be, whatever he does, he'll be loud about it. Yeah. And I think it'll be something. And I think he's been waiting for a long time for it. That's Donald Trump, 4 years. And I think, his supporters have been waiting for a long time as well. So one way or the other, it's going to be consequential and we'll kind of wake up to it. Just a quick wrap on things in terms of what the market really did. It was a decent day. So about 100 points on the Nifty, that's about 0.6%. Nifty Bank, a little better, 1.6 odd percent. And of course, a big thank you to Kotak Bank. And I'll get to stocks, etc. We'll get to stocks, etc. in just a bit. Mid caps and small caps also doing well. So all in all, I mean, not a bad session at all. The way we've left things now, both the Nifty and the Bank Nifty are round about 1% away from daily moving averages. So far we were at hourly. Now we are about 1% away from the 20-day moving average respectively. But I suspect whether it will be a one-way kind of a street with the Trump inauguration and headlines, etc. from the global side, which I think will be top of mind. And it's not all going to be clear immediately. But I think over the course of the next 4 or 5 days, expect a lot of volatility to really set in. So 23,344 is how we've left off. Not a bad way to start the week. The question is, will we be able to sustain all of this as we go into the remainder of the next 4 sessions? Rima.
The mid-cap index outperformed. The mid-cap index ended with a gain of 1% with an advanced decline ratio which favored the gainers, 2 stocks advancing for 1 in the red. Banks led from the front. The Nifty Banking Index ending with a gain of more than 800 points. Kotak Mahindra Bank in pole position. We'll talk more about that stock. Wipro, Bajaj Finance, Bajaj Finserv, NTPC, SBI were some of the other big gainers in the large cap space. On the way down, SBI Life slumped, posted its numbers. Trent, Shriram Finance, HDFC Life, Adani Ports and TCS came under a bit of pressure. That's the picture across the large cap screen. Let's also tell our viewers what we've lined up for you on the show. We start with the top movers and shakers of the day with Vivek. The sector of the day was telecom. Telecom stocks were buzzing in trade over news reports on a partial AGR due waiver. We'll get you more on that. So as promised, it's over to Vivek now for all the stock movers of the day.
Well, thank you so much for that. Another session where I actually saw quite a bit of outside views, especially from stocks that came out with very good set of results. So we have to start off the day with the top gainer, and that has to be Kotak Mahindra Bank. Top gainer as far as both the Nifty as well as the Bank Nifty was concerned. Slew of upgrades coming in over there, almost 9% higher for Kotak Mahindra Bank. The second stock has to be Wipro. Again, another stock from the mid-cap IT space doing very well. Upgraded payout guidance, also something that aided the up move over 6.5% higher. The other set of stocks that did quite well in the session today was the entire metal and mining pack. Most of the stocks today managed to end the session with gains. Names like Nalco, Vedanta, especially aluminium names did very, very well. But overall, the sector was one of the top gainers. The other stock on the radar, of course, has to be Aether Industries. Now, this particular stock recovered from Friday's low. Vodafone Idea, one particular stock from the broader end of the market, especially the telecom pack. Any sort of relief from AGR dues is something that the street is looking at very positively. But on the other hand, quite a few laggards as well. SBI Life, Friday, this particular stock was a gainer, but growth guidance getting trimmed is something that the street didn't like, down almost 3% today. Swan Energy, remember one of the subsidiaries of the company, Swan Defence, erstwhile Reliance Naval, got listed. This particular stock saw selling pressure post that. BLS International, this stock again one of the top laggards today as far as the NSE 500 index was concerned. And Supreme Industries, a muted quarter from the company. The management came on the channel and they cut the volume guidance for FY25. The back of that, down almost 4% was Supreme Industries today.
All right, thank you very much, Vivek, for that. And there's a fair bit of stock-specific action, as Vivek highlighted, which we will talk about. Sudeep Bandyopadhyay is with us, Group Chairman at IndiTrade Capital, and Jay Thakur is Head of Derivative Research at ICICI Securities. Gentlemen, good afternoon. Great to have both of you here. Thank you for your time. Sudeep, I think broadly the acknowledgement slowly setting in, or at least not acknowledgement, but expectation that at a top-down level, perhaps it's a tough year, but as always, there is going to be enough ideas out there. And the reason why top-down maybe it's a tough year with some of the macro factors is what starts today, which is Trump 2.0. So just quick thoughts. Is it going to be really disruptive? Is it going to be, markets have already traded President Trump and his policies since November, although he only is president starting today. So starting today, maybe a bit of stability, or you think it's going to be volatile out there? What's the sense?
My sense is it's going to be volatile. I think, if you have seen Trump's first 4 years, his policy making, his interaction is always very transactional. And, that leads to a lot of volatility globally. And of course, India will be a part of that volatility as well. We've been hearing of multiple executive orders he's supposed to be coming out with today, later. And, we'll have to see end of the day, basically tomorrow morning, what's those executive orders augur for the markets and in general and India in particular. So volatility will be the order of the day. We also have, as far as domestic markets are concerned, a bit of a slowdown, and we'll have to, wait and watch what the budget does to kind of handle the slowdown in the economy. If the budget is good in terms of handling the slowdown and providing growth impetus, I think, we will then wait and watch the credit policy which RBI will come up with. Again, there'll be expectations of something positive to kind of kickstart or to give growth a boost. So I think a lot of uncertainties are there, but a lot of it, at least to an extent, will get clarified in the next 10 days. So next 10 days are going to be very, very interesting.
Okay, let's get to telecom then. That was the sector of the day. The government is considering the telecom industry's demand for AGR waivers. The CNBC-TV18 has independently confirmed this news report. Ashmin joins in with the details. Ashmin.
Well, clearly this has been a long pending demand of the industry. The industry, suffering repeated setbacks at the hands of the Supreme Court, had turned to the doors of the DOT, the government, to grant some relief. Now, since the September 2024 decision by the Supreme Court, which closed the chapter on the Supreme Court proceedings, rejecting the curative application, there were concerns raised by the affected telecom players before the DOT, and that is what the government has chosen to respond to by way of considering the submissions that have been made. Bear in mind, the figures are mammoth as far as the industry is concerned. Vodafone Idea, with the staggered interest payments, that figure, that AGR demand figure, has stacked up to north of 80,000 crore rupees. Bharti Airtel is somewhere in the neighborhood of about 42,000 crore rupees. And these figures is something that they're competing with, that they're struggling with. And towards that end, the government is contemplating, not deciding as of yet, but contemplating waiving off the penalty and the interest component of the AGR demand. The AGR demand had a principal, an interest and a penalty component. The government is considering waiving off the penalty and the interest component, either fully or partially. That is under consideration. But there are a few aspects to bear in mind. Number one, the Supreme Court repeatedly in 2019, 2020, 2021, then subsequently in 2024 has dismissed any and all approaches being made by the telecom companies to dilute this demand, to readdress this demand, to recompute the demand. In fact, the only relief that they've allowed is a moratorium and a staggered payment, and that too with an interest component, so that the net present value is maintained. That is importantly something to bear in mind. That moratorium runs out later this year. Those payments start kicking in September 2026. And finally, the third aspect, that if at all a waiver is granted, this would be relinquishing of public funds by the government to the private sector. That is something that is going to weigh on the minds of the government as they go about the various levels of approvals that may be required for this decision. So no timeline yet, no final decision yet. But yes, the government is considering if at all a relief can be granted to the telecom sector. Back to you.
But the biggest beneficiary will be Vodafone Idea, which is now majority control. I mean, the largest shareholder is the government of India itself. But it's a big positive for Vodafone Idea because it will enable their debt funding, which has been stalled for the last couple of months, and they can go ahead with their capex, which can stem the loss of market share. Jay, Bharti, Industars, these are pretty much trader favorite, investor favorites. Any trade in the telecom stocks?
Hi, good afternoon to you, Rima and Prashant. Well, see, as far as telecom is concerned, the overall sectoral outlook has been definitely quite positive, and the kind of development which has now taken in the space, I think, is definitely positive for the sector going forward as well. Bharti is the stock wherein we had seen a good uptrend, post which we saw some consolidation or a correction, within which we saw some shorts getting built up, Rima, and that short covering is now expected, and which can take the Nifty Bharti Airtel up beyond 1700 levels. Now 1600 is a very crucial support. But interesting is to watch out for most of the market participants will be Idea, because I'm sure that most of the market participants have it in their portfolio. Remind out here, the observation is that whatever correction we had seen from 18 to below the levels of 10 in the single digit had all come out of long liquidation. We did not see much of short getting build up there, and now with this kind of a breakout above 8.5, 9 levels, and the stock is back to almost 10 levels, we are seeing again some good long build up. So I think that here too, if at all the stock is able to manage to hold on to the levels of 8, then we can see the stock bouncing back to the levels of 15 odd levels going forward. So that will be a good 50% jump from here on. So that's the stock to watch out for. Bharti, definitely we can see some short covering out there. And Indus has been trending higher, so the overall trend has been quite positive there. So out and out, the sector is positive. Idea is the stock to watch out for further, move until 15 odd levels.
Okay, all right. No, everything is recovered a little bit. Indus, for example, from 315 levels has jumped to about 380 or so today. Well, we'll come back to you for more, but one name which, of course, went south after reporting numbers in the last hour was Zomato. Mangalam is here to take us through the segments and the overall results and the take. Mangalam, take it away.
Well, so the stock fell about 8% after the results came by. On a reported basis, the numbers were, what the street anticipated, barring a couple of one-offs. One, the food delivery revenue actually grew a little slower than what the street was anticipating. And the second part was the Blinkit EBITDA losses expanded. And it was here where, there was some fear on the street, which was, further fanned by management commentary. So Deepinder Goyal and Albinder on the food delivery business said that the food delivery GOV slowed down due to weak consumer sentiment, grew at around 17% versus the company's long-term guidance of around 20%. Blinkit, now here they said that the losses will continue in the near term as the company continues to invest. They've brought forward some of their investments and also brought forward the 2,000 store guidance by 1 year from December 2026 to December 2025 itself. And what really hit the final nail was the company saying that heightened QCOM competition has actually led to a temporary pause in margin expansion, as a result of which the stock started to sell off. And remember, this is the first quarterly performance that the company has reported after the stock has entered the F&O space. So as a result of which there was accelerated sell-off from the top as well. Some internals, the B2C GOV grew by about 57%, quick commerce GOV grew by about 120%, whereas food delivery gross order value grew by just around 17%. On the District app, the company said that it's launched, just in November and has had about 6.5 million downloads already. And the going out business over the next couple of years can grow upwards of 40%. So there are some businesses which are growing, some businesses in which the company is investing. And because of competition, maybe the margins in Blinkit could actually be paused. The margin expansion in Blinkit could pause for the temporary near term. And as a result of which, the stock saw a big decline post the numbers that came by.
Indeed, thank you very much for that. We'll get to our experts on Zomato, but let's also talk about Kotak Mahindra Bank. That was at the other end of the spectrum. Shares surged after reporting much stronger numbers. Abhishek joins in.
Well, Kotak Mahindra Bank reported a better set of earnings than what was estimated by analysts on street. So what's worked for them is that the net interest margin, which was expected to decline as per analysts, actually improved by 2 basis points on a sequential basis. The slippages came in lower than last quarter. Analysts fear higher slippages than the previous quarter by 200 to 300 crore. As a resultant, gross NPA ratio was at 1.5% versus Motilal Oswal estimate of 1.56%. Even the business momentum was better than analysts' expectation. Deposit growth of nearly 16% YOY versus Motilal Oswal estimate of 15% YOY. Advances growth was at 15.1% YOY, while Motilal Oswal estimated a 14% growth on the advances side. Strong core operating performance. Operating profits grew by 11.5% YOY and about 4% sequentially. On the flip side, what didn't work in the result is that the two key subsidiaries saw their PAT decline both YOY and quarter-on-quarter. That is Kotak Mahindra Prime as well as Kotak Mahindra Investment. With reference to the PNL, both the ANA and PAT were ahead of our poll. Brokerages largely remain bullish on the stock. Citi has a buy recommendation, target price of 2,070 per share, and they also have an 90 days positive catalyst watch open on the stock. ICICI SEC, they have upgraded the stock to buy from hold. Target price has been increased to 2,050 from 1,850, while Anand Rathi also upgraded the stock to buy from hold. Target price has been increased to 2,010 from 1,950 that they had earlier. Back to you.
All right, thank you very much for that. Sudeep, Zomato first, quick thoughts?
I think the numbers aren't too bad. That's what I would say, Zomato. I can understand the reason for the sell-off because they're saying heightened competition will ensure that the margins don't go up in the foreseeable future. So obviously market is taking it as negatively. Plus the stock getting into FNO has accentuated the selling today. But the way I look at it, the numbers aren't bad. And of course they're expanding and they're expanding rapidly. In these businesses, particularly quick commerce, the winner takes it all. So their quick expansion and reaching 2,000 stores at the earliest, I think is a good thing in the long run. So I won't be too disappointed. Also, the District app has just been acquired and relaunched. So I will wait and watch. I won't take a negative view on the Zomato stock based on these numbers.
Okay, and Kotak Bank, as someone said, it's done more today than it has done in the last 5 years. Point to point, of course. Is there more here, or you think it's kind of done?
No, absolutely, Prashant. It has done today more than it has done in the last few years. But I think today's excitement is a bit overdone. I don't see too much of upside from current levels. The numbers definitely was a beat on the expectations, but too early to kind of say that this will keep going up or this will deliver superior returns from here on.
Let's get to Wipro, the other big mover on the way up, 6.5% higher. Wipro has now become the best performing large cap IT stock in the last 1 year with a return of close to about 26%. Q3 numbers were a beat on revenues and a beat on margins. Margins the highest that we've seen in the last 3 years. Not just that, the company has also upped the capital return policy. They're now committing to paying 70% of the net income over a period of 3 years. Q4 guidance disappointed a few people. It's very unexciting, lackluster, -1% to +1%. But to this, UBS says that the company for the last 2 quarters has been coming out with numbers at the upper end of the guided range, which basically tells them that perhaps the Q4 guidance is very conservative by the management. They've upgraded the stock to a buy and their target price stands at 335. And Macquarie says that this is an easier firm to turn around compared to Tech Mahindra. Sudeep, a quick word on, Wipro. Is this the best IT stock to play? It's done very well. And Jay, then if you could come in on the technicals.
Well, I think there are signs of promise as far as Wipro numbers are concerned. I will wait and watch. But amongst the numbers which have come out of the IT large players, I think Wipro definitely deserves kudos. So yes, at this stage, Wipro does seem impressive.
Okay. And Jay, is there any trade in? Yeah, go ahead.
Sure, Rima. Rima, as far as Wipro is concerned, see, overall, if you check this vis-a-vis Nifty IT chart, and definitely this stock has underperformed the peers as well as the index, and it has been a slow mover. However, the trend, if you look at it, then it's positive on a weekly or a monthly basis. The stock has been steadily moving up, but the pace has been slow. So the momentum is slow out here. Overall trend is though positive, and whatever correction or consolidation we have seen in this stock, Rima, has been on account of long liquidation. So we haven't seen any short positions getting built up out here. And if you look at the open interest as well, I mean, since past a couple of years, it's been at the lowest levels. So there is a good room for this stock to move higher from here on if we have a good positive outlook from here on as well. As far as the management is concerned, then this stock has a good chance of an uptake until the levels of, say, 375, which is way back to its all-time highs. The critical level to watch out for this stock going forward on the downside would be 260, Rima. Until those levels are held, the overall trend should be positive, and the outlook is positive technically as well as from the derivatives point of view.
Gentlemen, thank you very much for joining in. Get into a break. On the other side, we'll get you the top corporate voices and the key events to watch tomorrow.
Republicans are actually becoming the mainstream party, and which is unheard of, especially, I shouldn't say this, for a Republican. The Republicans are actually becoming the mainstream party.
Okay, welcome back. You're with us here on Markets Forward. ICICI Lombard spoke with us today. This is, of course, corporate commentary that we had through the course of the day. ICICI Lombard expects insurance market to remain competitive, added that pricing discipline is looking up in the industry, said that the premium trajectory for the commercial business looks promising. The insurer expects combined ratios to keep coming lower over the next many quarters.
And next up is NetWeb. The company's order book is at 360 crore rupees. The management maintains its CAGR annual revenue growth guidance at 30 to 35%, despite doing a 60% growth in the first 9 months. On its partnership with NVIDIA, the management says they are a manufacturing partner for the global chip maker. In terms of the guidance for FY25, they're expecting profits of about 100 crore rupees and the AI contribution to rise to 20% by the end of next year versus the current 15%.
Okay, finally, Indian Hotels expects the hotel business to grow by over 12% and the flight kitchen business to grow by over 15%. The hospitality chain is working on expanding their presence in temple cities as they see rise in demand for spiritual tourism. Further, Indian Hotels plans to open over 30 hotels in FY26 and more than 100 hotels over the next 3 years. Well, there was a Nazara news flow which also hit the market towards the end of the day. We spoke with the management and Nitish Mitterson, the CEO of the company, told us that the preference issue that the company is doing will give Axana Estates. Axana Estates is basically an entity formed by existing shareholders of Nazara. The pref issue will give Axana, this entity, a stake of 25%, which will then trigger an open offer for another 26%. Axana Estates' stake will rise to 51% in Nazara if the open offer is fully subscribed. Nitish told us that he and his father and the existing promoters will remain promoters of the company and will continue to run the business. Axana Estates will become a co-promoter.
And as we wrap the show, we'll bring you some key market events to watch tomorrow. Vamakshi.
Well, Rima, lots of earnings to track tomorrow. ICICI Prudential, Cyan DLM, Dalmia Bharat, KEI Industries, PNB Housing Finance, Tata Technologies, as well as UCO Bank are some of the counters that will be reporting their numbers tomorrow. So keep an eye out on those. Angel One is a share that goes ex-dividend tomorrow. So watch out for that one as well. But apart from that, several other events lined up. The Trump administration will be convening Quad Foreign Ministers meeting tomorrow. Watch out for that. That is an important one. And, lastly, World Economic Forum's annual meeting will continue in Davos until January 24th, 2025.
All right. Thank you very much, Vamakshi, for that. Well, it's a wrap on this edition of Markets Forward. From all of us here, it's goodbye. Thank you very much for joining us. News and updates follow after a quick break.
See, the market is still going to be very small, right? Because there are infrastructure, ecosystem level issues that are yet to be sorted out. You know, whether it is charging or swapping or anything else, you know, that still needs to be sorted out. So we are not looking at market share. It's not a market share game as yet. You know, what we are focusing on is completing the whole variety of products. We are looking at maturing the technology. So when the market is ready, you know, Ashok Leyland should be at the forefront. See, our capex normally is between 500 to 800 crores, and we would, I think, stay within that number. But more and more capex is now shifting towards cleaner fuels and electric vehicles. Hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening. Market receives a fillip from Wipro and Kotak Mahindra Bank. Power financials and telecom stocks spar the Nifty to above the 23,300 mark. Sensex rises 454 points. The union government is considering telecom industry's demand, seeking a waiver of the accrued penalty and interest on their adjusted gross revenue dues. However, there is no timeline or finality on whether the relief will come through. The Supreme Court has already rejected telecom companies' plea and upheld the AGR demand raised by the centre. Company Law Tribunal orders the liquidation of debt-ridden airline Go First. Lenders had filed an application in September last year. Go First is the second airline in the last 4 months after Jet Airways to head towards liquidation. The airline had moved the NCLT for voluntary bankruptcy proceedings in May of 2023. The US Capitol decks up for the inauguration of Trump 2.0. Trump addresses a victory rally in Washington on Sunday evening, pledges a barrage of executive orders on day one itself, says starting tomorrow, he will act with historic speed and strength to fix every single crisis facing the US.
I think he won the elections on the two I's, fighting inflation and on immigration. Today is the end of the post-Cold War era. It is a new era. It is a G0 era.
The spectre of Donald Trump looms large at Davos. World Economic Forum President Borge Brende says that Trump will use tariffs as a negotiating tactic, will focus on immigration and inflation, which dominated his campaign rhetoric. Eurasia Group's Ian Bremmer says Trump 2.0 is the law of the jungle, with Trump as the apex predator. Nazara Tech to sell 5.4% stake to existing investor Aksana Estates for 495 crores. This will trigger an open offer for another 26%. CEO Nitish Mittal Sen says that though the promoter group holding may fall to below 9%, they are very much in control. Blinkit will not enter the price wars to drive growth, says CEO Albinder Dhinsa. Tells CNBC-TV18 that the focus will be on expanding into new markets and growing by investing in infrastructure. Adds that new business verticals like its ambulance service and its fresh food delivery will be power future growth. That's a CNBC-TV18 exclusive. Food delivery giant Zomato's net profits fall by over 50% to 59 crore rupees, despite a 64% rise in net revenues. Its quick commerce vertical reports an EBITDA loss on the back of higher investments in store expansion. The company says a 63% surge in expenses and a broad-based demand slowdown have also hurt performance. Fintech major Paytm's net loss narrows to 208 crore rupees even as its digital payments business recovers from the winding down of its payments bank unit. Performance was helped by a rise in gross merchandise value, other income and subscriber base, but net revenues are down 36%. Sugar mills and exporters may be in for some relief. Sources say the government is likely to allow the export of 1 million tons of sugar in the current season, move to help mills get rid of surplus stock and aid in propping up domestic sugar prices. A formal notification is expected soon. Fresh lease of life for TikTok in the USA after Trump's intervention. The platform begins restoring services after Trump says that they will have to save TikTok. Adds that he will give the Chinese company a 90-day extension to find new owners. 90 Palestinians freed from Israeli prisons in exchange for 3 Israeli women in phase 1 of the Gaza ceasefire. Hundreds of aid trucks queue up outside Gaza to deliver supplies to the war-battered region. Well, we'll come to all of that and a lot more in just a bit. But first, a look at the market action for the day. It was a positive start for this week for the Lal Street. Positive earnings commentary coming in from Kotak Mahindra Bank and Wipro gave the markets a big fillip. Power financials as well as telecom stocks sparked the Nifty to above 23,300 mark. Well, for more on that, Prashant Nair is joining us for a quick wrap of the day's market action. Prashant.
Well, all told, a decent day. The Nifty Bank doing well, broader markets holding on and strong market breadth. And of course, all of this before Trump takes over for his second term as US president. In that session, it was expected to be a bit of a holding pattern kind of a day, but it turned out to be pretty decent with lots of mid-cap action, which I will just detail in a bit from now. So the Nifty and the Nifty Bank up on your screen. By the way, both have crossed their hourly averages, and now the 20-day moving average is just about 1% away from both the Nifty and the Nifty Bank or so. The question, though, is with headlines out of the US, the inevitable headlines one way or the other, is it going to be a straightforward move higher through some of these levels, daily averages, or will there be volatility? In any case, I mean, the 20-day perhaps becomes the next level, either as a resistance or maybe a level to take out. Now, the Nifty and what did well, Kotak Bank, of course, was the standout gainer, big gains, lots of upgrades. Wipro was another name. Bajaj Finance, Bajaj Finserv stood out. There was NTPC and State Bank of India, which looked good. On the losing side, SBI Life, Trent and Shriram Finance were stocks which actually lost in the broader markets after about almost 10 days. Kalyan Jewellers saw some respite, about 6%. Credit Access did quite okay. TTML, Tejas Network, CG Power. Some of these have basically lost about 15-20% in the last few sessions from the highs and saw some recoveries. Global Spirits, UBL, Greaves Cotton, Ashapura Mindchem, and a name like Sarigama was higher as well. In terms of what was down, BLS was lower. Supreme Industries reported numbers was down. NetWeb, decent numbers, but valuations hurt. SW Solar, no respite, although in the morning it looked up. Voltas, Uno Minda, VMart and Rallis India were some of the others which were lower. I think it's going to be a completely sort of new set of cues which markets will react to, mostly from the global stuff, which we will get to for sure when Trump takes over and, of course, makes that speech. Lots of promises of many executive orders coming. And I think we'll have to deal with all of that as we come back tomorrow. Remember, overnight US stock and bond markets are shut. Back to you.
Right, Prashant, thanks a lot for that. Clearly, Trump 2.0, the buzzword as we head into the inauguration in only a few hours from now. But onto the money market action for now. The rupee remains steady and appreciated slightly against the US dollar as the dollar index traded lower ahead of US President Donald Trump's inauguration. Other Asian currencies, including the Chinese yuan and the Korean won, also traded higher. However, $1 still costs over 86 rupees and 50 paise. Onto the commodity space now. Crude oil prices slipped today over expectations of US President-elect Donald Trump's move to relax curbs on Russia's energy sector in exchange for the end to Ukraine war. The ongoing ceasefire between Israel and Hamas also fueled this fall. And the government is likely to consider the telecom industry's demand to waive the penalty and interest component of AGR dues. Sources have told CNBC-TV18 that the telcos had reached out to the government to seek relief. This after the Supreme Court rejected a curative petition for the recomputation of this AGR demand. Remember, the government had earlier allowed a moratorium and staggered payment schedule as relief, but no waiver had been granted. Shares of Vodafone Idea and Bharti Airtel rose in early trade today on the back of this development. However, there is no timeline or finality on whether a relief will come through. Now, meanwhile, the National Company Law Tribunal has ordered the liquidation of low-cost airline Go First. The NCLT has approved this decision of the Committee of Creditors to liquidate the airline. Lenders had filed an application to liquidate the airline in September of 2024 after Go First was left without a single aircraft and no viable revival option in sight. The airline had filed for a voluntary insolvency resolution process in May of 2023. Well, incoming President Donald Trump is set to take oath in the office as the 47th President of the United States. The U.S. Capitol has decked up for the inauguration. Bitcoin hit a new record high on Monday, crossing over $109,000 today on the back of the ceremony. The ceremony will see the likes of outgoing President Joe Biden, tech CEOs, including his aide Elon Musk, Amazon founder Jeff Bezos, and Meta CEO Mark Zuckerberg in attendance. Trump's victory rally in Washington last evening was peppered with promises of deporting millions of immigrants and better governance. He has pledged a barrage of executive orders on day one itself.
We're going to stop the invasion of our borders. We're going to reclaim our wealth. We're going to unlock the liquid gold that's right under our feet. Liquid gold. We're going to bring back law and order to our cities. We're going to restore patriotism to our schools, get radical left, woke ideologies the hell out of our military and out of our government. And we are going to make America great again.
Well, even as Donald Trump is all set to get sworn into Washington, his spectre looms large, 4,200 miles away in Davos, Switzerland. CNBC-TV18's managing editor, Shireen Bhanna, joins us live from Davos, from the sidelines of the World Economic Forum's annual meeting. Shireen, you've been speaking with a lot of thought leaders. We're hearing words like law of the jungle and apex predator. Tell us, what is the sense that you're getting on Trump 2.0? Is there a sense of anticipation come the inauguration in only a few hours from now?
Well, absolutely. This is a Trump Davos. There is absolutely no doubt about that. He is going to be the big headliner here when he addresses the World Economic Forum on Thursday. Remember, President Trump has spoken at the World Economic Forum twice in his previous tenure, in 2018 and 2020. And on Thursday, he will address the World Economic Forum. In fact, it is going to be an interactive session as well with select CEOs in conversation with President Trump. So all eyes on what he has to say and what direction the Trump administration is likely to take when it comes to geopolitics and geoeconomics. In 2018, which is when he spoke here for the first time, he did try and assuage concerns around the fact that his policy of America first did not mean America alone. But this time around, as Ian Bremmer was telling us on the channel just a short while ago, that this is a stronger Trump. This is a Trump that has returned to office with a popular victory, with a popular mandate as well. And perhaps that emboldens him to do things the way that he would like them to do. What will we finally see in terms of executive actions on day one? He's promised a lot. We will have to wait to see. But the world is waiting to see how the Trump administration takes forward some of the threats that President Trump has made in the run-up to his oath-taking ceremony, and more importantly, whether we are going to end in a world of more confrontation and even less collaboration. Well, I spoke with Borge Brende, the president of the World Economic Forum, as well, on what the Trump era could mean, or the Trump 2.0 era could mean. And he was very clear that immigration and inflation, the two I's which were a focus point of the Trump campaign, will be priorities for the Trump administration. But on the issue of inflation, if President Trump goes through with his tariff plans and brings in aggressive tariffs across the board, what will that mean as far as inflation is concerned? That is, of course, the question at this point in time. What will it mean for consumers who will have to perhaps fork out more if tariffs are imposed at the levels as which has been speculated or spoken about? Here's Borge Brende and Ian Bremmer on the Trump oath-taking ceremony, the inauguration that will take place shortly, and the impact and implications of President Trump in the White House for the world.
So for him in the U.S., I think he won the elections on the two I's, fighting inflation and on immigration. So I think we will see very soon some steps on the immigration side. But on the inflation, it's a more of a mixed thing. So he will need to also then share what is his economic policy to keep the growth going, but also making sure that inflation is not coming back.
I think the opening salvos are meant to shock. It's meant to say this is the law of the jungle, what I call a G0 world, where he's the apex predator. And, you know, that's not a bad place to be. If you're the United States and if you're Trump, you're going to get a lot of wins that way. Today is the end of the post-Cold War era. It is a new era. It is a G0 era. It is a geopolitical recession. We are in a bust cycle where the strong do what they will and the poor suffer what they must.
Clearly, Trump 2.0 dominating conversations in Davos as well. You can catch our entire coverage of the Trump presidential inauguration from 10 p.m. onwards right here on CNBC-TV18. Well, back home, shares of Sri Renuka Sugars, Dalmia Bharat Sugar and other sugar stocks surged in today's trade. This after sources told us that the government is set to allow exporters of 10 lakh metric tons to take place this year. Now, the move is expected to provide relief to sugar millers and exporters while maintaining adequate reserves for domestic consumption. A formal notification on the specifics of the export policy is yet to be issued. In earnings action now, fintech major Paytm's losses narrowed to 208 crore rupees from 220 crore rupees on a yearly basis in the third quarter. However, consolidated revenue from operations dropped 36% on an annual basis, while rising 10% on a sequential basis. And food delivery giant Zomato's net profit halved to 59 crore rupees in the third quarter, even as net revenue rose by 64% on a yearly basis. The revenue from the quick commerce business doubled from the previous quarter. However, the vertical recorded an EBITDA loss of 30 crore rupees amidst growing competition in this space. Blinkit reported an EBITDA loss on the back of higher investments in store expansion. Now, shares of Nazara Tech gained in early trade. This after the company said it would sell 5.4% stake to existing investor Aksana Estates for 495 crores. This will trigger an open offer for another 26%. Company CEO Nifty Sensex said that though the promoter group holding may fall to below 9%, they are still very much in control.
We are very much, in control of the company. We are going to remain the promoters of the company and hold the positions of MD, CEO, etc. There'll be a 5.4% dilution due to the new preferential issue. So maybe our 9% will come down to 8.6 or so. Besides that, the promoters are not selling any equity at this point of time.
Blinkit will not enter the price wars as they are unsustainable. That's the word coming in from Blinkit CEO Albinder Dhinsa, speaking exclusively to CNBC-TV18 Shireen Bhan. Dhinsa said that growth for the quick commerce business will be driven by market expansion and investing in infrastructure. Dhinsa also not worried about rising competition in the quick commerce space. He believes that 7 to 8 competitors will vie for the quick commerce market and more specialized players will emerge in the short term. So Dhinsa is betting on future growth of new verticals like the 10-minute ambulance service and 10-minute food delivery. He says he's also exploring the role of quick commerce that it can play in a sector like fashion. He adds that just as horizontal platforms like Flipkart coexist with niche players like Myntra, sector-focused companies will carve out niches in the quick commerce space as well.
So, how are you looking at the race that's currently on? And forget the newer players who are getting in, but at this point in time, it's, Swiggy, Zepto, and you. How do you look at it? Do you believe that there is enough room for everybody? Do you believe that this is a winner-takes-all market? I mean, how do you see this evolving and playing out?
So, we think that there is space for more than one players. And I think just because of the market size, there is going to be obviously space for more than one player.
What would more than one player be? Is it 3? Is it 10? What are we talking about?
I think in the short run, we'll probably see 7 or 8 players go at it, right? And I think a lot of them will find, and I think there will be more players which will join in certain verticals, right? So like everything is not going to be like one platform is not going to be everything. Like when you think about horizontal e-commerce for a player like Flipkart, there is also Myntra, which was specialized in fashion. And I think that's a lot of those companies are coming up. A lot of those bets are being taken for sector-focused quick commerce companies, which are going to take some of the insights that we have been able to build on and basically customize it for certain use cases. And they will probably do a better job for those use cases than we will, right? So I think those companies will come up as well. They will probably be subscale today, but I think you will see them come up a lot more over the next few years. So I think there's going to be space for a lot of players of different varieties, right? Both in terms of catering to different segments of the market, right? Catering to different, maybe like geographic areas, catering to different specific categories. I think so this market is going to evolve a lot over the next 10 years. And it's not a mature model anywhere in the world. That is the beauty of this, that this is an India-specific business model.
Well, with that, it's time now for heading into a very short break. But coming up, fresh lease of life for TikTok in USA. After Trump's intervention, the platform begins restoring services after Trump says that they will have to save TikTok. Details when we come back on the other side.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to U.S. inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. Is it? This is the first India pavilion, so to speak, India Bharat, and as I pointed out, this is the first time that we have India putting its states together, technically under two roofs. And what we've seen happen over the last several years is that states have come out here in Davos. So it's of course been the central government, but also increasingly the number of states being represented here in Davos has gone up quite significantly. It used to be Chandrababu Naidu. He was the original Davos man from a state's point of view, but now we've seen Maharashtra, Telangana, in fact even UP now here in Davos as well.
Well, let's focus now on TikTok. It's one of the key bit of news that people will be watching for. Now, what's important is that we understand that this is one of the key issues that, in fact, the US president had been working on. The Chinese social media company TikTok has said that it was restoring service to users in the United States after the platform went dark on Sunday. This was in response to a federal ban that US President-elect Donald Trump said that he would try to pause by executive orders on his first day in office. Reports indicate the CEO of TikTok is expected to attend Trump's inauguration ceremony tonight.
TikTok announced it was restoring service to users in the U.S. on Sunday after it briefly went dark in anticipation of a law forcing it to shut down in the country. The video sharing app said the reversal was thanks to U.S. President-elect Donald Trump, who said he would revive the app in the U.S. after he was sworn into office on Monday. A bipartisan law had threatened to force TikTok to either divest its U.S. operations or shut down, citing national security concerns and data risks due to the app's Chinese parent company, ByteDance. A unanimous U.S. Supreme Court upheld the law on Friday. But on Sunday, Trump wrote on Truth Social that he would postpone the period of time before the law took effect and set a goal, 50% ownership in the app by U.S. investors. He said, quote, "By doing this, we save TikTok, keep it in good hands, and allow it to stay up." Trump's support for TikTok is a reversal from when he first pushed for the ban in 2020 while in office. Even if temporary, the unprecedented shutdown of TikTok could have a wide-ranging impact. The U.S. has never before banned a major social media platform. The law, passed overwhelmingly by Congress, gives the incoming Trump administration sweeping authority to ban or seek the sale of other Chinese-owned apps. Privately held ByteDance is about 60% owned by institutional investors such as BlackRock and General Atlantic, while its investors and employees own 20% each. It has more than 7,000 employees in the U.S.
Well, staying with international news, at least 90 Palestinians have been freed from Israeli jails as a part of the ceasefire deal. People across West Bank and Gaza can be seen celebrating the hostage release. This comes the day after Hamas released 3 Israeli nations from their captive back to their home country. Today, Palestinians in Gaza were also seen returning to their ruined homes and awaiting the delivery of food and medical assistance. Humanitarian aid supplies also continue to come into the enclave. Around 600 trucks entered Gaza carrying food, water and medical supplies. Well, with that, it's a wrap on this edition of Business 360. More news and updates will continue right here on CNBC-TV18.
Not going to be here, but we do have ministers from the UP government who will be here. So this is the first India house, so to speak, and this is going to be home to UP, Telangana and Kerala. So Telangana, Kerala and UP are going to be part of the India house together, and it's also going to be interesting because this is the federal story. This is the beauty of India's federal story, and it's also its strength, so showcasing its diversity and its unity here in Davos will be something to watch out for. With the next India Pavilion, India, which is going to be home to Andhra Pradesh. Remember, Chandrababu Naidu is going to be here. It is home to Tamil Nadu and Maharashtra. So 3 states, so total 6 states here in Davos, 3 in the house that we just saw, which was Telangana, UP and Kerala. And here we have Maharashtra, Tamil Nadu and Promenade and Andhra Pradesh. Devendra Fadnavis, the Chief Minister of Maharashtra, will also be here in Davos, as will Revant Reddy, the Chief Minister of Telangana. So 3 Chief Ministers will be here in Davos. Let me show you what we are saying to the world here. And of course, all of this has been set up by Invest India. So let's take a look at the themes that India is going to be showcasing. We're going to go right inside. The themes that India is showcasing: the Indian semiconductor market is set to triple by 2032. So semiconductors will be part of the story that India is pitching, from silicon to success. And again, we've got Semicon, the mission that the government has announced. We've already started to see investments coming in there. So semiconductors, electric mobility, EVs to account for over 40% of India's automotive market. EVs will be the other big theme that will be discussed here as part of the India story. So this is India, the roadmap to a $32 trillion GDP by 2047. India's economic overview, so some data and numbers and statistics here being highlighted here at the India Pavilion.
Hello and welcome to CNBC-TV18 special coverage here live from Davos 2025. I'm Shireen Bhan, and joining us here bright and early is a man who spent 27 years of his career in the IT services sector and has now decided to branch out and actually invest in companies that are doing things related to technology. Frank D'Souza, it's a pleasure to have you join us here. In your avatar is Recognize, a private equity company that you're now a part of. But appreciate your time here in Davos. Let me start by talking to you about the big headline. This is, of course, the Trump Davos, and all eyes on President Trump and the inauguration later tonight. What's the expectation? What will this Trump regime mean for IT services?
Well, Shireen, first of all, thanks for having me. It's great to be here from Davos talking to you. Look, I think that as we were here in Davos on the eve of President Trump's inauguration, I think we're at a time when the theme of Davos is cooperation in the intelligent age. The intelligent age is a shout out to this incredible innovation that we've seen over the last few years in technology. And I think that what's going to happen is that over the coming years, the world, whether it's businesses, governments, civil society, is going to get more and more technology intensive. And as the world gets more and more technology intensive, it's going to require IT services companies to help to make that technology come to life, become real for all of us. And so as we sit here today, I have tremendous optimism for what the role of IT services is going to be over the coming decade.
So potential for significant growth from here, you believe?
I think that the IT services industry is reinventing itself. We've already seen that happen over the last several years. I think there's a fragmentation that's going on to some extent, where smaller companies are emerging, specialized companies in particular areas. That's part of our thesis at Recognize. We're investing against these smaller, more specialized services businesses. But I think you'll see pockets of very fast growth in IT services for those that have figured out how to build the operating model of the future.
Well, what is going to be the operating model of the future, Frank? Can I ask you this in the context of the AI bets that everyone's making? I mean, you walk down the promenade, everyone's hawking some kind of AI or the other. I mean, how do you differentiate yourself? How do you create moats, especially from an Indian IT services standpoint?
Yeah. You know, I think, Shireen, first of all, what I would say is that I've been following AI for decades now. When I came to the United States for the first time, I came to Carnegie Mellon University because I was interested in AI. That was 35 years ago or so. And I did classes in AI. And of course, for many, many years after that, AI was somewhat in the background. But as somebody who's followed the industry, I would say that this is probably one of the most profound technology shifts and technology changes that we've seen. And so I think the opportunities are very profound. I think from a services standpoint, services businesses, we've said this for quite some time, but the moment has come now where services businesses have to get more and more IP intensive.
Okay.
The old model of providing just people and very knowledgeable, capable people without some form of software or other IP. Now that IP could be software, it could be data, it could be algorithms in the AI world, but you've got to have some of that in order to be competitive. And so I think the IT services firms of the future are the ones that are going to be willing and able to invest in creating that specialization, and that specialization is going to come from investments in intellectual property.
So what will that mean then in terms of capital allocation, in terms of deploying capital to create these IP-led businesses that you speak of? Is there a willingness, is there appetite to do that at this point in time?
Yeah, look, I think it's difficult to make that transition, but I think the IT if you think about the services world and the software world, if I can put it that way, those two worlds have been relatively separate worlds in the past. And I think you're going to see those worlds coming closer and closer together. And therefore the P&Ls or the balance sheets of the services firms starting to look a little bit more like software, where you have to make some investments in R&D, allocate capital to upfront IP development, and then monetize that IP over time.
Do you believe that perhaps inorganic growth will drive this kind of IP-driven growth that you talk about?
I think it's certainly possible. I think for the larger firms that have the ability to do that, I think you'll start to see some M&A. In fact, I would argue that maybe that started several years ago. In my time at Cognizant, we bought Trizetto, which was a software business We bought it because we liked the intellectual property that they had in healthcare. They have a very strong software stack. And so perhaps, that M&A and others that were done in the industry around that time was the start of it. And I think you perhaps will see more of that.
Well, what are we talking about in terms of the kind of money that will be required to make the kind of transition that you speak of from an Indian IT services standpoint?
I think the jury is out because, frankly, the innovation that's taking place in AI, generative AI, agents, the agentic world that we're talking about, I think we're in the very, very early innings of that. And so I think the capital required is somewhat unknown at the moment. But what I would say is, if you look at the average software firm, the average software firm spends 15 or 20% of their revenue on R&D. And so, I think that gives you some sense of potentially what might be coming down the pipe.
Let's talk about Recognize now and the kinds of bets that you're making. More than a dozen investments already done. What's driving the investment thesis at Recognize?
It's many of the things, Shireen, that we just talked about. So we are Recognize is we're a private equity firm. We're entirely focused on investing in and around technology services. So we are sector focused. And what we're looking for is we're looking to find the fast growth parts of IT services, find great management teams that are running services businesses in those areas, and looking for management teams and firms that have an operating model of the future, many of the things that we just talked about. And we want to provide to those firms both capital, but also we feel like we bring operating experience to the table, networks from our past and so on and so forth. And our goal is to accelerate growth of these businesses and drive fundamental value creation.
And you've already seen one exit, another likely sometime soon?
We've announced one exit already, a company called Torque, last year. And a few days ago, we announced that one of our portfolio companies, AST, the intention of IBM to acquire that business. That is not closed yet. It's expected to close sometime this quarter.
So what is the typical check size that you're writing for a company that you're looking to invest in today?
Shireen, our first fund was just shy of $1.3 billion. We've made, as you said, about 13 investments. So, on average, we are looking to deploy $50 to $100 million per investment, maybe a little bit more than that.
And what about India? Is that going to be a focus area for you, for Recognize?
Absolutely. I say all the time, Shireen, that if you think about the global IT services industry, India in many ways is the epicenter. It has been, I think will continue to be, and so we look actively at firms both that are headquartered or domiciled in India, or that have, and also firms that have a significant presence in India. Across our portfolio, many of our firms have a significant presence in India. India is an important part of the delivery ecosystem of many of our firms, and we'll continue to look actively at it.
So what does 2025 look like in terms of the kind of capital that you're likely to deploy?
We just continue to look for great investments. We don't have targets specifically to deploy capital. We look for great investments. And
what about valuations? I mean, anything that has AI linked to it, even remotely, has seen its valuations skyrocket. What do you make of valuations?
Yeah, we still like the sector. We like the risk reward in IT or technology, what we call digital services. And what we are looking for are firms that are, properly valued, but we think we can accelerate their growth, increase their differentiation, and therefore create returns for our investors.
So 27 years of IT services. Are you missing that world, Frank?
Well, I still feel like I'm very much in that world. So it's not like I've gone from that world.
Running a business.
Shireen, there are moments when I miss being an operator, but I think the opportunity that I have now to be an investor, to look across the industry, but also importantly for me personally, to give back to another generation, a new generation of leadership teams that are building the next generation of services firms is really rewarding. So I'm having a great time.
But do you see more headwinds today for the Indian IT services space, or more tailwinds? Or is it a sort of mix and a balance of both?
I think it's a mix and a balance of both, and I think it's uneven. I think that at this moment, I think this is a moment of great opportunity, but I think it's also a moment of great disruption. And so we have to be clear-eyed about that. And given that it's a moment of great opportunity and a moment of great disruption, I think there will be winners and losers in the industry. And I think the winners will be the ones that are prepared to make the investments that are necessary to build the firm and the operating model of the future.
Which would then make it a big boy play?
I don't think so, no. In fact, I think that it'll be a mix. In the recognized portfolio, and our thesis is that there's going to be a group of small, specialized firms that are really focused on particular parts of the market. And because of their focus and because of their specialization, they're going to be able to differentiate. But equally, I think there's a role for the big firms here as well. And so I think it's a question of who is able to make those investments, who's able to create that focus and differentiation. And there'll be winners and losers.
Well, speaking specifically about some of the challenges that the sector is going to face, and H1B, of course, has been the big issue of debate and discussion, and how that plays out in the Trump era. How concerned would you be about that?
Look, I think that
and is it less a worry for Indian IT services companies and more a worry for actually American tech companies?
Yeah, look, I think that's the point. I've been talking about H1B visas for 27 years now, almost from the beginning of Cognizant. And, I think my genuine belief and feeling has not changed over that period of time, which is that the question about workforce has to start within each country with a discussion and a debate about how you develop the local workforce. And so, that requires, public-private collaborations, academia being involved, and so on and so forth. And so, specific to the H-1B in the context of the United States, developing the local indigenous workforce in the United States is critically important. Having said that, over 27 years that I've been in the industry, we've seen that there continue to be shortages of talent in different parts of the world at different points in time. And therefore, smart immigration policy allows us to fill those gaps when it's necessary. The United States right now is arguably one of the leading economies in the world in artificial intelligence, and therefore the need for AI talent is incredibly acute and profound. And so I think we need to find a prudent balance between local workforce development and smart immigration that enables that to happen.
And let me end by asking you about what looks exciting for you from an India standpoint, not just from the Indian IT services standpoint, but what looks exciting from the Indian economy perspective as well. The GCC story is the other story that's playing out in a significant way for India. What are the pockets of confidence and hope that you're focused on?
I think there were two things I would say, Shireen. I think that the GCCs, the rise of the GCCs, is a statement and a testament to the role that India is playing globally on the technology stage. The fact is that the GCCs in India, to me, are a representation of fundamental innovation and company-specific intellectual property being developed in India for companies on a global stage. So I think that's really, really, really good for India. The other thing that I'm really excited about for India as a technologist is the fact that we have a large digitally enabled population, and the India stack further enables that. In the world of AI, the winners are going to be the ones that are digitally enabled and have lots of data. And I think India has the conditions to really be a winner in AI indigenously, and we'll see that story play out over the next 10 years.
So where are we in the AI race today? From an India standpoint as well as an Indian IT services standpoint, what's your take?
Early innings, very, very early innings. I think the world is in early innings with this new wave of AI, with generative AI, agentic AI. It's still very, very early days. I think the opportunities are significant, but as I said before, there are going to be winners and losers here. We're at an important inflection point. And investing and being smart about the future is going to be important.
Yes, an important inflection point, but it also requires a significant amount of capital and, of course, a focus on IP, as you pointed out, for us to be able to create the differentiators and the moats around our businesses. Frank, many, many thanks. We wish you the very best of luck with Recognize. Thanks so much for joining us here in Davos and for your time.
Great to be with you, Shireen.
Well, that was Frank D'Souza with his take on the future for artificial intelligence and for where Indian IT services companies find themselves in this transition and in the roadmap, which could potentially see a balance between some tailwinds but challenges as well. We're going to take a break here on CNBC-TV18, but the conversations will continue from Davos. Don't go anywhere. We're back in a moment with more.
Good morning. How are you? Good morning. How are you? Are you enjoying your time in Davos?
Yes, we are going to work.
And what are you looking forward to the most?
Meet everyone and for the betterment of the economic.
For the betterment of the economy.
Of the world.
So what?
You come from India?
Yes, from India. Where are you from?
Punjab, India.
Punjab, India. आप कहाँ से? पंजाब में कहाँ से?
पंजाब से मैं वैसे तो हरियाणा से हूँ, अम्बाला से।
अच्छा, तो आप यहाँ पे कैसे आए?
वैसे घूमते फिरते आ गए।
घूमते फिरते आ गए। बड़ी लंबी घूमते फिरते आ गए आप। तो कब आए आप यहाँ पे?
में रहता हूँ।
आप ज्यूरिख में रहते हैं। अच्छा।
20 years living here.
और तो आप ये डावोस में वर्ल्ड इकोनॉमिक फोरम के लिए पहली बार ही आ रहे हैं कि?
नहीं, हम तीसरी बार आ रहे हैं।
तीसरी बार ही आ रहे हैं।
हमारे एक रेस्टोरेंट है खान्स तारा के नाम से।
जी।
तारा रेस्टोरेंट इंडियन।
हाँ।
तो उसकी कैटरिंग करते हैं हम।
अच्छा, तो क्या खिला रहे हैं आज आप डावोस में? क्या है मेन्यू पे, क्या है?
आप आए?
Well, that's lovely.
ये हमारे शेफ हैं जी दोनों।
नमस्ते जी, बहुत आपको शुभकामनाएं। आप कुकिंग करने वाले हैं और काफी लोगों को खाना खिलाने वाले हैं। तो
हम लोग
शुरू हो गए तो
आपको काफी फॉलो करता था मैं। लास्ट ईयर का गीता गोपीनाथ का इंटरव्यू पढ़ा।
Thank you जी, thank you so much. It's very nice to hear that you're watching CNBC TV18.
कभी इंटरेस्टिंग होता है आपका 2-3 काफी
नहीं, बहुत अच्छा लगा आप लोगों से मिलके एंड वी विश यू ऑल द वेरी बेस्ट। बिल्कुल जी, इंडिया वालों को अब नमस्ते, सत श्री अकाल।
हमें कुछ सक्सेस हो जाए।
जरूर होगी। आपको बहुत सक्सेस मिले और बहुत शुभकामनाएं।
ऑलरेडी किया कि promenade is captured by the
Indians. Yes. हम पहुंच ही गए। आप बिल्कुल भारत के सामने और आप लोग को भी डावोस के लिए बहुत शुभकामनाएं एंड थैंक यू। बिल्कुल खाएंगे जी, बिल्कुल खाएंगे। थैंक यू इंडिया की तरफ से। थैंक यू सो मच। Our conversations continue here at Davos 2025. I'm Shireen Bhan, and joining me now is a very interesting guest. She, of course, is the CFO of the world's largest miner. We're talking about Vandita Pant, the CFO at BHP. Vandita, thanks very much for joining us here in our studio in Davos on CNBC TV18. Appreciate your time.
Thanks a lot. It's great to be talking to you, Shireen.
So let me start by asking you about what the demand environment looks like at this point in time as far as the commodities that you look at, whether it's coal, iron ore, in light of the uncertainty that we continue to see on Chinese demand.
Yeah, indeed. So if I were to step back, some of the commodities are really related to the global growth, which has been pretty good. So if I were to pick up copper demand, it's been robust. And in fact, in long term, we think the drivers of copper demand get amplified from not just the traditional drivers of standard of living increase, higher urbanization, but now also due to energy system which needs to be rebuilt, and on top of it build out of AI infrastructure, which is hugely metal intensive. In terms of steel making commodities demand, China, as you said, has been an uneven story, but overall it has still had around 1 billion tons of steel for 6th year in a row. And for metallurgical coal, which is steel making coal, India with its production of 140 million tons of steel coming from 100 million tons a couple of years back means that metallurgical coal demand has been pretty solid. So over a long term, I do think that the commodities that the world needs to develop, to decarbonize, to digitize, have a very positive trajectory. In fact, of a scale that we have never seen before.
So given the fact that you continue to see demand being robust while China continues to be patchy, but we can't scoff at the numbers still as far as China is concerned, what's the pricing environment? What is the pricing trajectory look like at this point in time?
So iron ore would be a balanced kind of a market, but over a period of time, we have been saying for a very long time that over a longer period of time, the China steel does plateau, as has happened in almost every economy as it has transitioned through its development phases. And as it starts to plateau for BHP, which is the lowest cost producer of iron ore in the world for 4th year in a row, it's a fantastic place to be. So it will remain a very, very interesting and a hugely attractive market for us. Copper is a very different story. Till about 2050, based on the amplification because of decarbonization and AI, we think the copper demand will grow by 70%.
Wow.
Just over the next 10 years, Shireen, we will need an investment of $250 billion just for copper to keep pace with what the world needs. And it's a fantastic position for BHP because we are the largest or second largest producer of copper, depending on the measure you choose, and the largest holder of endowment of copper in the world.
So, you spoke about the investment number that is required. What do you foresee in the near term in terms of additional incremental investments that you will need to make? What are you looking at?
Yeah, so copper is very attractive to us. We really like it. As I mentioned, we have a huge portfolio already. We have growth options and projects in Australia, in Chile, in US, and very recently we have gone into a joint venture in Argentina. And that is a growth option where we will look to develop what is one of the most interesting and attractive copper discoveries of the last decade or so. So huge growth vector on copper within BHP. Along with that, we also are growing in potash, which is a fertilizer commodity, and that again has very attractive demand dynamics because of increasing population, rising growth of incomes means calorie values go up. And as the arable lands gets very constrained, potash is really needed. So we're looking to grow in potash as well, both with real secular demand trajectory from here on.
Let's talk about how India is shaping up in terms of strategic interest as far as BHP is concerned. The demand, you gave us a very quick glimpse into what demand is shaping up like, but how do you see India in terms of its role and relevance for you strategically over the next 5 to 10 years?
Yeah, so India has been a fantastic long-term partner for BHP, and BHP has been a long-term partner for decades with India. Traditionally, it has been steel-making coal. So we have got 40% of our coal goes to India, the metallurgical coal. And as India continues to look at increasing its steel-making capacity from 140 million tons today to doubling it potentially to 2030 and then way beyond, we will continue to grow and service India for that requirement. Another one is copper. As the country is yet to be built, if I can say it that way. That's
it's a work in progress.
It is, but that is the exciting part, Shireen. Growth is only one-way trajectory. Infrastructure yet to be done. Copper is the pervasive commodity needed. And right now, we are already the largest suppliers of copper concentrate to India. And we see by our estimates that demand growing by 5x. 5 times by 2050. So, and we are also partnering with lots of our customers in India, steel-making partners, for example, around low carbon emission technology. So either it is for the growth or for decarbonization aspirations of India, I think BHP and India will continue to have a very symbiotic and strategic relationship.
What's the likely impact of Trump 2.0 as far as the commodity markets are concerned? How are you factoring this in?
So if I were to say one thing which is very bipartisan in the US is the need for focus on critical minerals and more investment in that. I think it is quite important to take that into account when we look at Trump 2.0, and equally as we look at the industrial policy resurgence, if I can say that, not just in the US but globally.
Yes, you're right.
And some protectionism. I think this is an important consideration for global companies and big players like us to take into account, especially for us with high capex industry with very long-term horizons. But if I were to take it back to what does it mean?
Does it push you to press the pause button till you have clarity on how things like tariffs, etc., work out? Or
there's a lot to play here, Shireen, and I don't think the world or any stakeholder will require BHP to pause on aspirations for growth, and that is because it is so critical, be it for growth, be it for AI build-out, as in we are forecasting that from less than 1% of copper going to AI data centers today, it will be around 6 to 7%, 6-7-fold increase by 2050, and same for decarbonization. All that means is we need to fund, find, and bring to fruition a scale of resources that we produce in a massive way, but also in a right way, in a sustainable way. And that's where the largest mining company does come into play, from a very strategic imperative for what the world needs.
So geopolitics and geoeconomics, do you believe that these will be the two big factors that could shape demand as we move forward for commodities?
I think what it would shape, Shireen, is an acute focus on huge investment to make supply chains of critical minerals robust, durable, and plentiful.
Right.
And in that aspiration, I don't see anything which is a negative. What I do see, and that's why it's great to be here in Davos, meeting so many different stakeholders with different perspectives, is that nations, investors, big companies, small companies, innovators will have to come together and say, how do we realize what is needed to unlock the resources? And that's where we are hoping that BHP plays its due share as the leading miner in the world.
Well, Vandita, before I let you go, it's been 26 years since you left India, and you've of course been around the world and now based in Australia. You know, what does the view look like from your perch now as far as the India story is concerned?
So, you know, the heart is where the heart is, if I can say it that way. But if I were to say even heart and mind put together, India is an exciting story. The trajectory is secular on one end, and I'm hoping professionally as well as otherwise, I'll be able to be cheerleading the country, but also contribute to what needs to happen through the business that BHP does with Indian customers.
Vandita, it's been an absolute pleasure. Thank you very much for joining us and giving us a quick snapshot of what the world looks like in 2025. Appreciate your time, and we wish you the very best of luck.
Thank you. Very nice talking to you.
Well, with that, it is time for us to wrap up our conversation here, but lots more will continue, so stay tuned to CNBC TV18. We're back in a moment right after this very short break.
This is the first look at the new electric Vitara, which has been launched by Maruti Suzuki. It is a completely ground-up electric vehicle. What this means is that it has been developed from scratch and it's not been adapted from its ICE cousin. Now, what we know about this car is it comes in two battery packs, 49 kilowatt-hour battery pack and a 61 kilowatt-hour battery pack. The top variant can actually give you a range of 500 kilometers in a single charge. So that is comparable with the Mahindra SUVs, electric SUVs, which have been launched. That will also give a 500 kilometers plus range. Now, there are 10 color options for a customer to choose from. There are changes on the exterior. It's got a more muscular look than the current e-Vitara lineup. It's got a long wheelbase of about 2,700 millimeters. On the inside, well, there is a lot of excitement of what this will offer. It's got a fully digital cockpit. You've got ADAS level 2. You've got over 60 telematic features. You've got a rotary knob to choose normal, eco or sports mode for that matter. You've got a twin deck floating console in the car. You've got ventilated seats. You've got 360-degree camera. The passengers in the second row get leatherette bucket seats is what we are told. Now, the charging time for this car with a fast charger would be about 40 to 50 minutes. With a slow charger that you would find at your home or in other places such as in your office would take about 5 to 6 hours for that matter. When does this car really hit the market? Well, it'll be exported first. The production begins in March or April. Perhaps by June, You will get it in India. And in terms of pricing, well, that's something that people were really excited about, but disappointing that Maruti did not come out with the pricing. But we're told that considering that the EV SUV price point in India is now around 15 to 20 to 25 lakhs, the company, Maruti Suzuki, will price the e-Vitara also very aggressively. With video journalist Akhilesh Singh from the Auto Expo, this is Parikshit Luthra. We're at the Hero Motorcorp Pavilion. The company has launched 4 new products, 2 new scooters, 2 new motorcycles in the range of 86,000 rupees to 1,80,000 rupees. But one of the products that is really catching a lot of eyeballs is the Surge, the Hero Motorcorp Surge vehicle. It looks like a 3-wheeler, but is it? Satyendra, why don't you show us what this vehicle can actually do? Have you ever seen a scooter detaching itself? Satyendra is detaching itself from us. Yes, now you have a 2-wheeler. So if you want to use it as a passenger vehicle to ferry around commuters from one point to another, you can do that. Also, if you want to leave the 3-wheeler at home in the evening, use this.
You're watching our continuing coverage here from Davos 2025. I'm Shireen Bhan. The big story here is President Trump. This is a Trump Davos, so to speak. In a couple of hours from now, President Trump and the inauguration ceremony will kick off in the U.S. and all eyes on what he's likely to do on day one in office. Joining me now is a man who understands politics as well as the implications of what a Trump 2.0 era could possibly mean for the world. Ian Bremmer, it's great to have you back on CNBC-TV18.
Sure.
Thanks very much for joining us. As I said, it's all about Trump this time around, isn't it?
It is, and there are lots of reasons for that. One is because he's in a much stronger position in the United States than he was in 2017. This was a bigger win for him. He got the popular vote. He has legitimacy. People, the Democrats were saying he didn't deserve to win. It was the Russians in 2017. Yeah. This time around, they recognized, nope, he just won. And he won even after all of the impeachments, even after all of the cases. So, I mean, people wanted this. This is what they wanted. And furthermore, around Trump, you have all of these loyalists. There's nobody like Mike Pence. There's nobody like Jim Mattis or Mike Pompeo. Trump doesn't feel he needs the imprimatur of establishment Republicans, and he did in his first term. So this is an administration where what Trump wants, he's going to get. And that means other leaders that don't like it don't have other people they can work with to engage with and say, well, can't we find another way? No. You're right. It's the Trump Davos because it's so much more about him as opposed to about the election, the administration, and how the world is changing.
So a stronger Trump, what does that mean as far as economics are concerned? I mean, through the case of his campaign, we've heard him talk about what he intends to do as far as tariffs are concerned. How's that going to play out, whether it's 10, 20 or 60%? But from an economic standpoint, a stronger Trump, what is it going to mean?
Well, of course, it comes at a time that the U.S. has a strong economy as well. Coming out of the pandemic, the Americans are outperforming the entire G7 by a long margin. So that means other countries are really concerned about getting into a fight with Trump, about having him focus on them. Interest rates are, of course, higher now than they were. So there's not as much fiscal space for a lot of these countries to do what they want. Indebtedness is a problem. And China today is running a $1 trillion surplus with the rest of the world. It's the only part of their economy that's working. So in other words, this is a much better time for Trump to be walking around saying, I'm going to hit you in the face if you don't do what I want. So he's going to get a lot of wins. I mean, like the first win he got was...
How confrontational do you expect him to be? I mean, from Canada to Greenland to China, I mean, everything's on the table at this point in time. How confrontational do you expect him to be?
I think the opening salvos are meant to shock. It's meant to say this is the law of the jungle, what I call a G0 world, where he's the apex predator. And, that's not a bad place to be. If you're the United States and if you're Trump, you're going to get a lot of wins that way. So, yeah, I expect that plenty of countries are going to do what Mark Zuckerberg did. Change his business model, change the people around him, and say, sure, yeah, we can work with you, we can work with Elon. I think that's exactly what we're going to see from a lot of American allies, and we might see it from adversaries too. We already saw a ceasefire in Gaza. I don't believe that ceasefire happens if Kamala Harris is president. So, yes, Biden set it up. He did the grunt work, the groundwork over the past few months, but Trump is the one that came in and was prepared to hit the Israelis and the Palestinians harder and was credible in doing so, that forced a deal that otherwise wouldn't have gotten done. I think you're going to see that on the economic side with countries all over the world.
Let's talk about the U.S. and China. We had that call between President Trump and Xi Jinping. What did you make of that?
I guess it was kind of like two boxers coming out at the beginning of the match and touching gloves. I don't think it shows that they're buddies. I think they're getting ready for a fight. Let's keep in mind that the Secretary of Treasury, the Secretary of Commerce, they're not going to be in their positions until the end of February at the earliest, given confirmation hearings. So right now, the people that have the ear of Trump and the policy-making capacity are in the White House. And those are much more hawkish on tariffs. So I actually expect that in the first weeks, maybe even the first days, maybe we'll see it at Davos, there will be an announcement of initial additional tariffs against China. I think this is going to be a tough environment for the Chinese to navigate. Yes, there'll be a summit meeting. I'm sure it'll be announced at some point in the coming months. And TikTok, Trump has said he's, willing to try to find a way to make TikTok available.
One of the first decisions he says that he's going to take when he comes into office. But what do you make of that? You've got a Supreme Court ruling that upholds the ban. You've got Elon Musk saying that, look, there should be reciprocity. If you keep TikTok alive in the U.S., then, big tech should be allowed to operate in China as well. Do you think that Trump can get away with keeping TikTok alive in the U.S.?
Well, to be fair, what Elon said was, yes, I agree with the president. I would want to keep TikTok too. Yeah. But there is this reciprocity issue. My view is absent reciprocity, TikTok should be banned. That's a different position than Elon's, though it's close. Look, Trump has received a fair amount of campaign support from TikTok investors, Jeff Yass in particular, 7-figure numbers. Once he got that money, he flipped his position. And one thing that has been fairly reliably constant for Trump is that if you give him money, he is willing to provide you political response. And TikTok is a place that originally he was the guy that said we think we should ban TikTok. Yeah. And now he doesn't. So he can change his mind, and he's more likely to change his mind if you pay him, right? And that's true whether you're, the Mexicans looking for a trade deal or whether you're, TikTok trying to stay alive. But this is the law of the land passed by Congress and upheld by a 9-0 Supreme Court ruling. And so Trump can say, I'd like there to be a 50-50 deal, but that's not the way the law works. And we've already heard that from Tom Cotton, Republican senator. We've heard that from Mike Johnson, Speaker of the House. I'm not sure that what Trump says is what's going to move the needle here. And I think the Chinese are waiting. The Chinese aren't going to make a decision on this until they see what the deal is. There were these rumors that, they're talking to Elon about, maybe letting him buy it. No, they're not. They are waiting to see what the deal is. And if they're going to give anything to the Americans, it's going to be in connection to more leverage on the overall relationship, because TikTok's actually not that important for China. It's part of the digital economy. It's not primarily a surveillance mechanism. It's not primarily a propaganda delivery mechanism. It's part of the digital economy in China that is not considered strategically all that important. Yeah. So I don't see Xi Jinping making a decision on TikTok by itself. Not at all.
Yeah, well, that's an interesting take there as far as how TikTok could perhaps be leveraged by the Chinese as well. But, we're talking about Elon Musk. Let's talk about Vivek Ramaswamy, because reports seem to suggest that he's out of the Efficiency Commission already, or on his way out of the Efficiency Commission already. Are you surprised by that?
Well, I mean, it shows that they're efficient, right? They had 2 co-heads. Now they only have 1. That's 50% efficiency gains. Just like that, haven't even started it. I'm a little surprised. I mean, of course, last time around, there were people that were in and out of the Trump administration, on every week, every month. You remember someone we'll see here Scaramucci, who was, I believe, for 11 days the communications spokesperson. So, still Vivek hasn't quite impressed me to that degree. But look, he did clearly antagonize a lot of people in MAGA when he came out and made posts that seemed to be anti-patriotic about how Americans need H-1Bs and American culture isn't very good. I think that landed very badly. I also think he had a lot of personal problems with some of the staff around the White House that didn't like him and were talking badly. And at the end of the day, Vivek is not all that important to Trump. So it wasn't hard. I assume he's going to announce his candidacy for governorship in Ohio in short order.
So where does that leave Elon Musk in the Trump era?
He's the most powerful man in the United States after Trump. And I think that he's the biggest surprise in terms of the geopolitical order. He's probably the most powerful man in the U.S. military, industrial, technological complex, and that's the most powerful institution in the world. So what Elon says when he attacks the Canadian government or the British government or the German government, which is being done in full view and knowledge and coordination with President Trump, I think that's a really significant challenge for other countries because, they may have conversations, oh, we'd like to ban X, but if you do that, you're actually endangering your entire relationship with the United States. And I worry about that. If we were talking about India, if Narendra Modi were having a meeting with the head of state and brought in Gautam Adani, we would call India a kleptocracy. We would say that's an aberration of the rule of law. We would not find that acceptable. But the reality is, in a G0 world, not a G7, not a G20, but a G0 world, which is the world that we are in right now, the United States, when they break an international norm and do something themselves, that's the new norm, at least for America, and you're going to have to find a way to deal with it. So the idea that rule of law is somehow something that is collectively ascribed and agreed to is going to face a conflict with rule of laws, whatever Trump and Elon say it is.
Well, what are some of the big risks that you foresee as we look at 2025 in a G0 environment that we continue to live in? And let's talk about some of the breakthroughs that we've seen. We talked about Israel and Gaza. Do you believe that that's going to be a fragile peace, or do you expect the Middle East to stabilize?
I don't think there's that much more that Israel can target of Hamas. I mean, they've hit all the weapons caches, they've taken out all the tunnels, they've taken out all of the, operational capability. But, of course, the reality is that as long as there are Palestinians in Gaza living the way they are, Hamas is going to have an easy time recruiting. So if Hamas is an army, they're a lot weaker. If Hamas is an idea, they're much stronger. But Israel can't defeat an idea. So I do think that this 42-day agreement, a ceasefire, would not have occurred if Kamala Harris had won the presidency. I think it's because Trump came in and was seen as credible in threatening the Israelis and the Palestinians that we're going to hurt you if you don't actually get this done, because I want to show a win.
Yeah.
And Netanyahu was willing to do it, and frankly, Hamas was willing to do it too. That doesn't mean that we're closer to a two-state solution. I don't believe that. It doesn't mean we're closer to an end to the war overall.
Well, speaking of wars, Russia and Ukraine, and the role that you believe Donald Trump can perhaps play there.
Well, it's not going to be one day, as we learned. He said that a lot during his campaign, 24 hours, he can end the war. And sometimes he exaggerates. I think we've learned that over the past years. This is one of those cases. But he does want the war to be over. And the Ukrainians are saying, we recognize that we're going to have to start negotiating. Some of that is because of Trump, and some of that is because they just don't have the people on the ground to keep fighting the way they have. And by the way, neither the Russians. The Russians have suffered 700,000 casualties in this war, which is just a breathtaking number. And the Russians also would like to have some time to regroup before they continue. So I think that there is a reasonable chance, more than 50-50, that this year we do see a ceasefire. But a ceasefire is not an end to the war.
No.
And a ceasefire doesn't suddenly bring NATO and Russia together. NATO will still be arming Ukraine. And I think it's a mistake to believe that Trump is going to sell out to Putin. This is 4 years of a Trump presidency, and he doesn't want Ukraine to be lost on his watch. So he is going to want to ensure that Ukraine can still defend itself in the territory that Russia doesn't occupy.
Let's talk about Canada, and of course Trump has threatened Canada as well, but Canada has got its own domestic issues to deal with, including an election. Mike Carney now in the race. What do you make of that?
Well, I'm not surprised, of course. He's very popular, central bank governor. He was asked by Trudeau to become Minister of Finance in Trudeau's own administration, but that was before Chrystia Freeland very publicly shot Trudeau in the face and said, I'm out, and she's Deputy Prime Minister. So that was the end of the administration. She's running as well, and she's popular among some on the ground. I think that Carney is the voice of the establishment. He's the person that, you know, people that you are interviewing would certainly prefer to see. He was very capable in the UK when he was central bank governor. He was very capable in Canada in that role as well. But still, right now, the odds-on favorite would be the Conservatives to win, Pierre Poilievre, and they've got about a 25-point lead on the Liberals in the hustings. So he has a shot, and she has a shot, but I mean, it's very clear that it's going to be an uphill struggle.
Let me get your take on India and where India finds itself in 2025 and what you're going to be watching for.
I'm watching most carefully for how India navigates the U.S.-China relationship, because it's going to get worse, and I think India is going to have a harder time. They're trying to stabilize the relationship with China. China is their most important trade partner, but the Americans are going to push India to become much, much more aligned technologically if they want to continue to benefit from American engagement at the highest level. That's really in India's interest, but India wants to balance. It's becoming harder to balance. It's not impossible, but it's becoming harder. So navigating that is the most interesting thing for me.
So the headline for 2025?
Headline for 2025 is G0 wins. You know, I've been talking about a G0 world for 12 years.
Yes.
I was hoping I would be wrong. Unfortunately, this is what we've ended up with, and hopefully it won't be with us for too long. But certainly this year, it's going to get worse, not better.
Get worse, not better.
Geopolitically, yes.
Geopolitically.
Yeah.
Well, thanks very much, Ian Bremmer, for joining us here in our Davos studio on CNBC-TV18. It's always a pleasure to speak with you and appreciate your time. Well, we will take a break here, but the conversations will continue. Don't go anywhere. Back in a moment with more.
Shopping or family time, you can do that as well. And this is not just in the commuter segment. You also have a cargo variant of this. Here you have the Hero Surge in a cargo variant. Here you can keep boxes, any e-commerce delivery items, fruits, vegetables, and you can use this for last mile mobility and delivery. Even this one gets a scooter which you can detach and use independently. So a very interesting concept, a literally two-in-one vehicle, so to say. It's called a class-changing vehicle, developed by Hero MotoCorp over the last few years. The company may launch this formally in the middle of 2025. While it is an interesting concept, it remains to be seen how the customer and how the e-commerce market actually accepts it. With video journalist Akhilesh in New Delhi from the Bharat Expo, this is Parikshit Luthra.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? how you've matured as a player, your journey, your experience?
Yeah, definitely, yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, you know, when you stand and people, when they look up to you, they also need to understand that, yes, you know, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right.
Yeah.
You know, when you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you know, you've been very successful, what else you need in life? But I think to get till there itself,
Welcome back. You're watching our continuing coverage here from Davos 2025. I'm Shireen Bhan, and joining me now is Tal Cohen, the president of NASDAQ. Tal, thanks so much for joining us here on CNBC-TV18. It's an absolute pleasure to have you here. What does 2025 look like as far as the NASDAQ is concerned? What do you intend to prioritize and focus on?
Yeah, 2025 is a year where we're going to advance our ambitions to be the trusted fabric of the financial system. And the way we're going to do it, and we've been loud and clear about this, is we're going to make sure that we enhance the liquidity across the financial system, that we strengthen integrity and resiliency of the financial system, and that we promote transparency. And we'll do that through the markets that we own and operate, as well as the technology solutions that we provide to our strategic partners.
So let's talk about the technology solutions that you provide, because I would imagine that in an AI world, you know, there's a lot happening on that front. What's exciting?
So we've been investing in AI and more broadly in the capabilities that allow for AI for the better part of a decade. So we've invested in data management, and we've embraced the cloud, information security, and we've put really good governance in place, which is going to allow us to unleash the power of AI responsibly and safely. And the way we think about it is we have AI in the product, and we have AI on the business. And so in the product, we think about the customer experience and how we elevate that customer experience, allow you to manage risk, meet regulatory reforms, and then on the business, it is all about productivity gains and as well as the customer experience.
What does that mean in terms of the kinds of investments that you're making on technology?
So we think just more broadly, AI will transform the way we write, test, and deploy code, the way that we service our customers, how we personalize those services. So we'll work on how we personalize that and then tailor the products and solutions that we have. And so the individual investments we're making, number one, we're investing in our employees. Because when you invest in AI, you're bringing your entire population of employees with you. So we're upskilling them, making sure they're comfortable with the technology. So then we can make sure that we put it into the product in a way that our customers can embrace it, and we can explain and articulate clearly and effectively the value proposition of doing so.
Well, you know, speaking about the value proposition, I don't know if you saw the comment that came in from Goldman Sachs CEO David Solomon on how an S1 filing is being done using AI in a matter of minutes versus what used to typically take 2 weeks and a 6-member team. I mean, you know, the transformational power, the transformational capacity of it. I mean, you know, what are you hearing from people that you speak to? What are you hearing from clients at this point in time? And how does it change things for the NASDAQ?
Yes, everybody's talking about that productivity uplift that you just referenced, and they're giving stats, whether it's 10%, 20%, 30%. But the real question is, what do you do with that productivity uplift?
Yeah.
How do you empower your employees to engage in higher value activities, more decision making and less mundane activities? So the question I think we're all grappling with is, all right, we have this productivity uplift. What does that mean for the scale of our businesses, how we think about needing to hire to grow? Versus having the current employees that we have focus on tasks that they may not be focused on today, or maybe not focused on as much as they should. So that's really the transformation that we're undergoing of like, how do we then employ all that productivity gain and put it back into the system so our customers and our shareholders benefit from that.
Let's talk about the outlook as far as the markets are concerned. I mean, 2024, great year for public markets the world over, the US and of course India as well. You know, in a Trump era with a new regime taking shape, what's the expectation?
So I think the relationships between India and the U.S. will continue to be strong, number one, in the new administration. And in terms of the IPO backdrop, you have strong economic outlook with a healthy pipeline of IPO activity that we see bubbling up, mostly in technology and fintech, a lot of quality that's going to come into the market in 2025. So we're really excited. And as long as valuations stay strong, as long as volatility is well managed, as long as the financial system is healthy and the economic backdrop is strong, I think we're in for a really strong year in 2025. And that is for both India and the U.S.
Well, speaking of IPOs, I mean, it was a record-breaking year for India as far as the IPO market was concerned, and a relatively quieter year for the NASDAQ and for the U.S. markets from an IPO perspective. Do you see that changing in 2025?
Again, I think the IPO backlog in the pipeline looks strong. We're really encouraged by the kinds of companies that are coming out. But most importantly, we're encouraged by the economic backdrop. As I said, if the economic backdrop is healthy, we'll be able to welcome a number of companies into the public markets, which will be exciting. And I will note that we had a win rate of 76% last year. So the franchise is really strong. We're really proud of what we built. It's a great world-class public franchise. And we'll see what 2025 has in store for us.
Well, let's talk about the India connection, and as a very deep and strong one for the NASDAQ. You're now operating out of 4 different locations in India with a significant workforce as well.
We are, and we're really proud of it. So we've been in India for over a decade in 4 locations: Mumbai, Pune, Chennai, and Bangalore. We have over 2,000 employees, and what those employees are working on, very importantly, is our next generation product. They're working on AI. They're working on all the innovative capabilities that we want to input into our products. A lot of that's coming out from India. So we couldn't be more happy with our presence in India. And also, we're trying to grow our business in India as well. And so we're excited about that.
And it is a fast-growing business, isn't it?
It is. We're really excited about what we're seeing in India, more generally speaking. And as you alluded to, healthy economy, healthy capital markets. The banking system is maturing. Regulations are coming about to raise the standards there. And we feel like we have technology to help raise the standards on the regulatory side. And we have technology that helps the banks automate and help their growth trajectory and make sure they don't introduce too much complexity as they grow and expand into new asset classes.
So headcount expansion likely for India?
Yeah, so I think that's going to continue. India, we're really excited about, again, the workforce that we have, the presence that we have. And as we grow, we're a fast-growing company. We're going to make sure that India is a big part of that growth.
So, the big opportunities, but also some of the key risks that you're prepping for in 2025.
Some of the key risks, the ones that are out of our control, of course, is geopolitical. We want to make sure that we're ready for that. The markets are resilient. We have the capacity. The markets are well functioning. So as an owner-operator of markets, we think a lot about that, our public mandate. And on the other side of that, we look at just the health of the financial system. So that's the economic backdrop that I alluded to before, but also the way that banks and financial institutions are investing. And that is going to be a very important indicator for us in terms of our ability to partner with those banks. The 2 other concerns we have more generally is cyber. We always think about cyber. And as you embrace new technology like AI, we want to make sure that we do that responsibly, we do that safely, and we maintain the integrity and the resilience of the systems and the solutions that we provide.
Well, thanks so much for joining us. With that, it is time for us to wrap up this edition of our coverage here from Davos. We will be back in a short moment from now with more conversations. Stay right there.
But I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. I think coming to a level is one thing, but maintaining that level is a different thing altogether, and it takes even more time and hard work, and it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So, just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. I mean, wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. You know, when you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Yeah, recently I think, not recently but Tokyo I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course it was very, very hard, but I had mixed feelings, mixed emotions, where, you know, I was feeling bad, where if I have to think, I lost an opportunity, you know, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning, and obviously I just gave my 200% and I got that bronze back. So
right, just come back harder. Just come back
yeah,
even harder.
I think the belief is very, very important. Just believe in yourself.
Bibi, we'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, you know, how many hours ever it is, I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play, you know, is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times, but whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, you know, we need support or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that, you know, there are a lot of youngsters who are doing really well, but, you know, not able to prove themselves. I think leagues, now if you see there've been Kho-Kho, and then there've been tennis and pickleball, a lot of leagues are coming up. and I hope there will be a lot more in every sport, because these kinds of leagues, you know, a lot of people get a recognition in terms of, they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that yes, even we can do it, because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leagues that like these will definitely help them to come up and think that yes, you know, we also have something to actually look up to.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into the
Hello and welcome to CNBC TV18's AI Roundtable. We're coming to you live from Davos 2025, and I have a packed house here with me, men in very spiffy suits who are going to tell us all about the magic of AI and how it's going to disrupt and transform the world. Well, great to have you gentlemen here with us. Jack, I'm going to start by getting to you first, and let's get the Trump question out of the way. Inauguration in a few hours from now, all eyes on what the executive actions President Trump is going to take on day one. A lot has been promised. What do you expect from the Trump administration, specifically in the context of technology and AI?
Well, Shreen, I just came from D.C., actually. That's where I was the last few days. A lot of activity there, meeting with some of the incoming administration, the cabinet officials. I would say this administration is going to be very lean in on technology. They're going to be using technology, looking for ways to be more productive, more efficient with technology, but also to think about it in imaginative ways. Thinking about it both in terms of the education sector, as an example, the defense sector, and boosting domestic production as well. So I think it's going to be a very big embrace of technology, both in the US, but also globally as well.
Well, Umesh, let me ask you, a big embrace, says Jack, and you've got Elon Musk there virtually at the helm of a lot of affairs. So what do you believe Trump 2.0 is going to mean for technology and AI?
Well, Shireen, what's interesting to me is what meets the eye is Elon Musk, and there's an appointment of an AI czar for the first time in Washington, D.C.
Yes, with an Indian connection.
But what misses people's eyes is I have never seen a huge contingent, the number of people from Silicon Valley, VCs, entrepreneurs, who've received calls in the coming weeks leading up to the inauguration to join the Doge transition team for AI, for crypto, for AI infrastructure. So clearly there's a huge focus. And I'll say with today's inauguration, just in a few hours from here, there are two things for me that are going to be very pivotal that are happening this week that are going to shape AI in the coming months. One is where we are in Davos. The conversation, all of us are feeling it. It's AI everywhere, etc. And this administration. I think it's not only going to be lean forward, it's going to be very pivotal, and it will have a major impact on the pace of AI, both for US as well as friends or foes of US. So it's going to be very interesting to watch.
Friends and foes of US, nicely framed there. Neeraj, any reports out on what this is going to mean, or reports out on what this is going to mean as far as the AI and tech world is concerned?
So I think there's a coming of age moment for AI, to my mind. As we talked about 1,500 CEOs across the world. I think there is a tale of two 75s, as I call it. 175 is 75% of CEOs want to lean in on AI.
Right.
But equally, 75% of CEOs are not seeing the ROI on AI. So there is, but I think that bridge will get, that divide, will get bridged in the coming, hopefully in the coming years, or it will get widened. So I think it's a very coming of age moment. I do see the ones which are leaning in on fewer use cases are actually getting the ROI. The ones which are leaning in beyond the technology on the people part of the equation are getting the ROI. So I think that's what we are seeing.
Well, that's what you're seeing. Chakri, let me ask you, and we were chatting and you said even last year the conversations were dominated by AI. It felt more like we were in the hype cycle. This time around it feels a little bit more real. What feels more real this year?
I think the progress in AI has been amazing, especially the last 3 months, the way it's grown in intelligence and reasoning. So we help plan the supply chains for the biggest companies in the world. And, you asked about the Trump question. I think the uncertainties are at an all-time high. There's a lot of variables that companies have to plan for. Resilience is absolutely important. Flexibility is absolutely important. So I think the biggest benefit of AI I see is large companies can't pivot easily. There's a lot of complexity. Change is difficult. And I see Gen AI and, in fact, agentic AI being that missing force that makes complexity simplified. It's a great, it's early stages, but I see great promise in what's possible with that.
Well, yes, speaking of promise and potential, Akrit, it's great to have you join us here, and it's been an interesting transition for you as well, from a founder of a company called Haptic to now being an advisor to the government of India for the AI mission. Take us through where we find ourselves in the India journey on its AI path.
Yeah, thank you for having me, Shireen. India is at that classic point where we need a spark to kickstart the ecosystem. I would say that, to your earlier point about last year, there being a lot of hype globally, and this year, the fellow panelists saying there's been progress. I hope that we as a country get to the same place in the next 6 to 12 months. I think we are just about, like I said, putting the infrastructure in place, putting the compute capacity in place, putting the ecosystem in place for deep tech and research. And ultimately, I mean, as the going says that, India will be the AI use case capital of the world. We have obviously a lot of people who need a lot of problems to be solved, particularly in core areas such as agriculture, education, healthcare. And more I'm realizing from the inside, even within the government, right? Even within governance, there are so many use cases that generative AI or AI can solve in general. So, from an India standpoint, still only getting started, lots to do. And the fun part is that it's never a dull day. By the time you wake up every morning, something's changed in Silicon Valley and we need to keep up.
Yeah, no, absolutely. And I guess that catch-up is on the way. Jack, you wanted to make a point, but I like the way that Akrit framed it. India could possibly emerge as the largest AI use case.
Well, I think both for India and for the US and for the globe, we've heard a lot for the last 2 years with the explosion of ChatGPT about language AI. ChatGPT, Google Gemini, Meta Llama 3, all wonderful language AIs, and many use cases for that to cut costs. But what we're going to start hearing about this Davos in the next 24 months is quantitative AI. Not large language models, but also now complementary to that, large quantitative models. This is where you can make a new medicine for Alzheimer's, for dementia, for diabetes. In India, for example, many key diseases still have no great treatment. In the US as well, in other countries. This doesn't need ChatGPT, it needs is large quantitative models, AI that knows chemistry, AI that knows biology. This is the new wave of AI that we're going to start seeing, starting this Davos, but also the next 24 months.
Okay, so that's going to be the trend to watch out for, and Jack always does the trend spotting for us here in Davos. Umesh, let's talk about the point that Neeraj was making, the 75% that have bought in to AI on account of the fact that they see a return on investment, and the 75% that are holding back because they don't yet see a return on investment. Now, from your perspective, take me through how you're being able to sell this to clients and what you're actually seeing in terms of return on investments today.
So, a couple of observations. First of all, in the last 12 months, Unifor has seen an acceleration, and that's coming from the US and number 2, Europe. I will say from our lens, Asia is not where US or Europe is. And the difference
that's probably only because of spends, right?
Well, it spends, and also the leaning forward of leaders. I think in US there's a clear understanding, whether it's a retail company, healthcare company, a big bank, or a telecom, that in each industry there's a club emerging in Wall Street. You're either a big adopter of AI, which means you're not just using it, but you're coming out in earnings and saying, here's what AI did in my business, and here's what impact it had on my earnings, and the stock is being rewarded for that. And then there are companies which are not being able to do it. So I see a speed and velocity being a big differentiator around the world, and the point that Akrit was making, India needs to catch up on that. The two things that are coming in the way across the board, and the CEOs who are absolutely on it are solving this with aggression, and others are still figuring out. First, people don't understand that AI, unlike software of the past, like CRM and others, isn't a silver bullet. You first need to get your data prepared inside your company before which you can make big use of AI. Otherwise, it's a cool POC and a great demo, but not real production. So that's one impediment that people haven't yet figured out. And the second is, even if you figured that out, AI is driving a huge change management. I'll give you an example to your viewers. We work with an airline. They used to take 6 days. 3 people had to approve a change in a pricing policy. 6 days. With AI agents now doing that work, they trained those agents on just that one task. 6 days have gone down to 2 minutes. 2 minutes. What does this mean for the people who were in the chain who had to approve? You have to now reskill them, reapply them. So there's a whole change management and organization shift that needs to happen, which I think is another friction point, which is in some cases allowing companies to move with speed, and we are seeing the benefits of that, and their spends with platforms like Unifor just go like a hockey stick, and yet others who are still figuring this out.
Well, Neeraj, let's talk about the spends and the spends that will be required to really be part of the AI ecosystem, to be part of the AI race, so to speak. And at this point in time, we've got anecdotes coming in. Umesh gave us one. Goldman Sachs CEO gave us one, saying an S1 filing is now being done by AI in minutes versus a 6-member team doing it over 2 weeks. This pilot to proof. How's that story playing out today? What are you hearing from clients?
So a couple of things. One, if I can make one observation on what Umesh said, we are, at least from my vantage point and our vantage point, what we're seeing is it varies by the quality of the leadership team you have. Actually, the geographical divide is a lot lesser. So this time around, I feel Asian CEOs, particularly, if I can count for that, are embracing this technology as fast as some of the Western CEOs.
So that's not...
Yeah, so
that's a
at least,
different opinion
absolutely.
There,
And certainly way ahead. The lag between what is happening in the West to what's happening in Asia actually is almost non-existent. In many cases, some of the best use cases are coming out depending on the nature of the leadership team, because they've gone through a wave of digital, and this time around nobody's wanting to lag behind. It genuinely depends on the quality of the leadership team and the starting point of the tech architecture. So that's point one. The way, at least I would like to phrase it as you use AI in 3 buckets. What I call the deploy bucket, which is you basically your day-to-day repetitive tasks, your email, your whatever, your search, all of that gets simple, very easy, right? That's everybody's doing that. My kids do it for their homework, etc., etc. The reshape is where you take a target operating model of a institution and fundamentally reshape it. He gave an example of a reshape. There are many examples across many industries, but I think Jack touched about the invent story, which is about saying you can go where nobody has gone before. Akhil talked about we can solve problems in India which have not been solved before. Healthcare is a great example of that, but you can do that in language, you can do that in so many, in education, across industries, which I think is very exciting. So I put if I had to deploy resources, I would put 15 to 20% in deploy, about 40% in reshape, and about 40% in invent.
But are you seeing that happen is the question,
No.
or is it the first bucket that's getting a disproportionate amount of the capital?
So the 10-15% which are getting the best use cases or getting the best ROIs, they're doing one more thing. They're going after fewer use cases. So we saw a distinct difference. We went out of 6 use cases versus 3. The ROI with 3 use cases was a lot better than 6 use cases. So you don't want to spread too thin.
Right.
You want to go deep on fewer things. Then the ROI is a lot higher.
You know, speaking of about the complexities as well as adoption, and I was having a conversation with Kathy Lee of the World Economic Forum yesterday, and she said, you know, one of the mistakes of going from proof to scale is the fact that people try and see just putting this up as a top layer and not really reshaping the organization, so to speak. You know, what are some of the challenges that you believe we're going to encounter as we now start to scale at speed?
Yeah, so in terms of, you know, we are focused on what we think is one of the biggest value leakage areas in companies, solving the silos of decision making in large organizations, right? That's where the biggest value leakage is. And it's been a biggest change management problem. And there are use cases that are developing in domains. For example, forecasting has become touchless in a lot of our customers, where 80% of forecasts are now driven by the system. Humans don't have to touch it. It's increasing the accuracy of the forecast, driving the supply chain. You talked about data. There's a lot of, you know, business makes decisions today without perfect data. So how it has to be an AI use case where actually living with imperfect data to make decisions is a big use case. But now, what I see with agentic AI and generative AI and the reasoning of that going next level, I think you touched upon quantitative models. Supply chain is just full of quantitative models. You're forecasting demand. Literally across the supply chain, there's 1 billion decisions, atomic decisions being made across pricing, across forecasting, across supply chain, production, procurement. All these decisions need to be connected. Historically, they've all been done in silos because of scale. Now, the opportunity exists to bring them all into a big decision graph where you're able to make them intelligently, faster, synchronized, where all the silos can be just collapsed like never before possible. So change management is going to be a huge issue, but companies need to embrace it. The agentic technology I can see becoming really powerful at doing many complex tasks like running complex scenarios, doing complex post games that today takes long times for organizations to do. So I think the future is going to evolve pretty rapidly, in my opinion.
Yes,
actually.
and agentic AI is clearly the buzzword here in Davos 2025. I'm collecting all the buzzwords. That's one of them. But Akrit, since we're talking about agentic AI, let's also marry the disruptive and transformational power of this technology with what happens as far as jobs are concerned. There will, of course, be the need to upskill, reskill, and so on and so forth. But from an India perspective, as part of the government's AI mission, how do you approach this issue in terms of what it means for a young demographic?
I'd say it's one of the biggest priorities of the mission. The mission is divided into 7 pillars. Some of the ones are very obvious, like compute, foundation models, applications. But the one that actually we end up spending so much time is the skilling pillar. We believe that this time has come for, as far as labor and skill goes, to move from just job work to AI work, and that's going to involve so many things, right? Getting people trained to work as AI analysts more than just data analysts is going to be the one big difference. And there's a lot happening. I think what I can tell you is the good news is it's a very big priority top down across all of the government departments, whether it's India AI Mission or the Ministry of Skilling and Education. As far as we are concerned, we're building labs all over the country where people can come in and get skilled across various AI capabilities, includes to some degree programming as well. And it's, you know, it's one of those things where, again, straddling sides of being an entrepreneur, and now on this side, I feel government is best positioned to do, right? Because the incentives are best set up for us to make sure that we create this ecosystem where, you know, 500 million or 1 billion people can be upskilled.
Yeah, Jack, I'm going to get the mic across to you.
Yeah. I agree with my Neeraj and the fellow panelists that businesses are embracing AI in a big way. We've gone beyond just to check the box, now to the real use cases, and this year will be the proof of the pudding. But where we need more help to see is from the governments. I think it's a very good signal that the PM has asked Akri to be his AI czar. In the US, they just appointed David Sachs in that similar position. These are good signals. Governments are lagging behind business right now. When we look at government's ability to use AI right now, be it the language side or the quantitative side, we're not seeing the embrace that we should be seeing to make more efficiency, for upskilling, for so many aspects. When we look, for example, at cybersecurity, one of the jobs and responsibilities of any government is to protect its people, to protect the nation. AI in the hands of hackers is the #1 dream tool of every hacker. It is the dream tool that allows you to hack into almost any system. We are not seeing government step up enough to use AI to counter this hacking AI. So this is an area, I think, of great improvement. I hope we see that discussion here in Davos this year.
Well, we certainly do hope that we see that discussion. It is one of the key global risks that the World Economic Forum has, well, not specifically disinformation, misinformation, kind of cybersecurity, of course, continues to be a threat. But Umesh, if I were to ask you, you know, to forecast for us what the next 12 months will entail in terms of priorities for you, but also priorities for the ecosystem to ensure that we actually deliver scale at speed.
So, a couple of points. Let's do rapid fire. First, like it was said, architectures of AI matter. AI is no longer a point solution. And you know, we've been saying this for a couple of years. Companies are beginning to realize. So our priority is to get as many of our current customers and new ones on a company-wide architecture so that they're learning across different departments, different agents, etc.
To the point that Chakri was making as well.
Everyone's making the same point. So companies that are beginning to embrace this are beginning to see the multiplication and exponential effects of AI. The network effects are very big. Second, you know, speaking of government, I think it's really important that governments around the world recognize that, including the US, that it won't be, in my opinion, 3, 5, 7 years out, that the countries that had the best infrastructure, chips, or AI models, which will end up winning. I think technology sees no boundary. It sees no, you know, it will proliferate. What will be required, which we are beginning to see models emerge, you know, especially in the Middle Eastern countries, is governments that will take a step forward and put out new societal frameworks. For example, if AI agents do proliferate, which I believe is going to happen in 2025, we're going to see a huge proliferation of AI agents, different tasks. It won't be just David Solomon or I giving you these examples next year. Everyone will be talking about what they did with AI agents.
So you believe AI agents will be the big theme
absolutely
through 2025?
But here's the implication. As these AI agents come in, there will be in the near term big job displacement. That means that AI companies and other companies that are adopting AI, they'll need new skills, new jobs. But there's going to be a big gap in the near term while that happens. And so what do you think about, you know, wealth redistribution models, where the big corporations that are adopting AI, they'll get 20, 30, 40% increase in their EBITDA margins, free cash flow. But there's probably in the near term will be, you know, labor and job losses. So that mismatch, governments need to step up and think about new models of wealth redistribution because of AI. So AI agents is what will dominate the news. Trump's policies, we're going to wait and watch.
What can the government do except tax more?
Well, think about it this way.
How do they get companies to redistribute wealth except by taxing more?
We need to go back to social security models that were put in place probably 5, 6, 7 decades ago, where none of automation or AI had proliferated in a big way. We are now going to live through this era, and it's going to move at a pace that nobody's expecting. I mean, we think that, oh, last year we were here, we're still talking about POCs. I think that we are at an inflection point that we meet here this time next year, and it's going to be very different. And so we don't have time to waste to think about it, whether it's the US, India, or any other country. And governments and leaders which are thinking through that, including CEOs. CEOs that work with us, They're not asking us anymore, Umesh, tell me which LLM should I use or which infrastructure. That's now commoditizing. There's lots of options, which is good news. They're asking me, how do I shape my organization? And something as basic as I'm going back to them and saying, put together a tiger team, a small but high-powered tiger team that reports to you, the CEO, that's able to drive this change in the company, because otherwise it's going to be too slow and you're going to be left behind. Same applies for governments as well. You need almost a mission mode where a handful of people are given the license to break walls and run through walls and deliver what needs to be delivered, including reskilling.
Yeah, well, you know, that's an important point that you make, and I think this is also something that I've picked up from the conversations that I'm having, that the companies that are proving to be more successful in adoption are the ones that haven't left this to the CTO. This is actually the CEO's mandate, and it is the top leadership that's taking this forward. But Neeraj, you know, let's talk about what it does for the larger economy, for the larger global economy, and we've got all kinds of forecasts and projections on the kind of productivity uplift that this will lead to. We've just done one in India as well with EY on what potentially could happen as far as productivity uplift is concerned. What do you see this unlocking for the global economy?
So just back on firstly the point that was made on the people. So we use this term called 10-20-70, which means 10 is the technology,
Trust
20 is the algorithms.
to come up with this stuff.
But I think it's important. I'll tell you why it is important. I'll tell you why it is important, because the 10 and 20 get a lot of the attention. The 70 is the people. And I think a lot of the dialogue shifts to the 10 and 20. You please go for it. Go for it, because it's something which everybody needs to embrace. And the 70 is the people, and people have to unlearn and relearn. And oftentimes the difference between organizations do it well and not is the 70. And very little attention is paid to the 70, and that's why it cannot be left to the CTO only. It has to be a CEO's agenda.
From top Indian honchos before putting your money on the line. How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Which is unheard of, especially, I shouldn't say this, for a Republican. The Republicans are actually becoming the mainstream party. And
See, the market is still going to be very small, right? Because there are infrastructure, ecosystem level issues that are yet to be sorted out. You know, whether it is charging or swapping or anything else, you know, that still needs to be sorted out. So we are not looking at market share. It's not a market share game as yet. You know, what we are focusing on is completing the whole variety of products. We are looking at maturing the technology. So when the market is ready, you know, Ashok Leyland should be at the forefront. See, our capex normally is between 500 to 800 crores, and we would, I think, stay within that number. But more and more capex is now shifting towards cleaner fuels and electric vehicles.
Hello and welcome to our special broadcast. I'm Parikshit Luthra. Incoming President Donald Trump is set to take oath of office as the 47th President of the United States. The U.S. Capitol has decked up for the inauguration. The ceremony will see the likes of outgoing President Joe Biden, tech CEOs including his aide Elon Musk, Amazon founder Jeff Bezos and Meta CEO Mark Zuckerberg in attendance. Trump's victory rally in Washington last evening was peppered with promises of deporting millions of migrants and better governance. He has pledged a barrage of executive orders on day one itself. Some of these orders will also include tariffs on Chinese imports of up to 60%. Trump also plans on suggesting the implementation of a global tariff policy of at least 10% on foreign goods. He has also threatened to impose 25% tariffs on all imports from Canada and Mexico. Trump has also vowed to end wars in Ukraine and Russia, adding that he plans on offering concessions to Russia. Joining us right now is Mukesh Aghi, the President and CEO of US-India Strategic Partnership Forum. Mr. Aghi, thank you very much. It's always great to have you on CNBC-TV18, and it's an important day. America is on the cusp of change. Several executive orders, maybe even 100, to be signed by Donald Trump. What's your expectation on tariffs? Do you think this threat of tariffs against China is going to kick in immediately?
Well, tariff is a tool for negotiation. And it's a tool to send a message to the domestic vote bank that I am going to take actions against countries which have basically sent in cheap goods and taken away your jobs. Will that get implemented? We don't know. But more important is that it just becomes a big decision, noisemaker. But more important is sends a message to countries. Either you come to terms to negotiate, which is a fair trade between countries. For example, China just passed $1 trillion in trade surplus. That was not the order which was set up after the Second World War. So I think tariff is going to become a big issue, and it's going to become more of a negotiation tool rather than an implementation on several nations.
Right. With regard to India, do you expect President Trump to take any action in the next 24 to 48 hours, which may directly or indirectly impact India?
You have to understand, India is not a priority in the decision echelon. What you have is basically, at the moment, you have to look at what was promised to